Yeah. गुड मॉर्निंग सर।
नमस्कार, वेरी गुड मॉर्निंग जी।
गुड मॉर्निंग सर। अभी 6 पार्टिसिपेंट्स ने ज्वाइन कर लिया है, अभी बाकी भी विद इन मिनट और 2 ज्वाइन करने वाले हैं। गुड मॉर्निंग जतिन जी।
गुड मॉर्निंग सर, हाउ आर यू?
एकदम बढ़िया। नमस्कार संजय जी।
हाँ, गुड मॉर्निंग विजय जी।
गुड मॉर्निंग जी। अतुल जी, कल आपकी कोई मेल आई थी इंस्टीट्यूट से, मेरे पास आई थी, वो आपकी इंसॉल्वेंसी प्रोफेशनल का कोई सर्टिफिकेट आपने डायरेक्टली मेरी मेल पे भेजा था उन्होंने।
अच्छा, ओके।
हाँ, तो क्या असाइनमेंट वाला था AFA, वो
हाँ
आपको
हाँ,
भेजने की जगह मुझे क्यों भेजा, मैं कंफ्यूज हूँ।
अरे वो किस पता नहीं, वो गलती से चले गया लगता है मुझे।
ये तो शुक्र आप इस बैच में नहीं तो मैं अतुल जगनानी ढूंढ रहा होता कि कौन से अतुल जगनानी जी हैं। नमस्कार अग्रवाल जी। ये किसी के बैकग्राउंड में कुछ, हाँ ठीक है। ये आज हमारे साथ में 2 अटेंडीज और जुड़े हैं जिनको मैं नहीं जानता, गीता और सैम।
सर,
ठीक है ठीक है।
they are from my people. They are my people.
हाँ नहीं, मैंने वही सोचा कि मैंने तो सर उनको डायरेक्टली पैनलिस्ट में जुड़वा लेते, कोई दिक्कत थोड़ी ना था।
Yeah, you can make them. They are part of my office only.
यस यस, फिर ठीक है, क्योंकि मैंने अंदाजा लगाया और फिर ठीक है, इसलिए मैंने सो दैट दे कैन सपोर्ट यू सर, मैंने उनको ऐड कर दिया पैनलिस्ट में।
Oh, thank you very much.
सो ऑडियो वीडियो किसी भी तरह का, और मैं आपको सर को होस्ट भी बना रहा हूँ। सर किसी के बैकग्राउंड में कुछ म्यूजिक चल रहा है। One, two, three, four, five, six, seven। अमरदीप जी, आपके पार्टनर नहीं आए अभी, प्रवीण जी।
मैं चेक करता हूँ, आएगा जरूर।
हाँ ठीक है। So good morning all the participants. Today our faculty is CA Gopal Krishna Raju ji. He is insolvency professional as well as registered valuer, and he was also the regional council member from southern region of ICI for the continuous 3 tenure, means total 9 years, and has given many lectures on the insolvency as well as on the valuation in many platforms including SOCHAM, PhD Chamber of Commerce, and GST की तो regular classes since it is implemented July 2017. I am receiving daily updates from sir from last 2015. I am receiving daily updates as a speaker or as a faculty in different platforms, and he is also the chairman of Valuation Standard Board of our RVO. So today he will take up the session on valuation approach and overview of valuations. Sir, now you are the in charge. Welcome.
Thank you very much.
प्रवीण जी, आपने अपनी एक दूसरी ईमेल आईडी से और रजिस्टर किया था, आप चाहें तो मैं उस लॉगिन को भी ऐड कर दूंगा।
ना उसको मैं कर रहा हूँ सर, उसी कर रहा हूँ जो मेरी मेल आईडी से है।
हाँ,
उसमें थोड़ा 5-7 मिनट का टाइम लग रहा है, इसलिए मैंने पहले मोबाइल से कर लिया।
हाँ कोई दिक्कत नहीं, आपको कभी भी एक की जगह 2 ईमेल आईडी भी ऐड करनी हो तो यू कैन टेल मी, मतलब वी हैव सो मच स्पेस, क्योंकि हमारे पास 10 एप्लीकेंट ही है, स्पेस 100 का है।
मैं अभी दूसरे, ठीक है सर, ठीक है, थैंक यू सर, मैं उससे दूसरे से कर रहा हूँ।
यस यस।
Very good morning, friends. At the outset, let me thank AIIOVF board members, specifically Vijay Kumar Gupta, for inviting me for the 50-hour MEP program as part of the mandatory evaluation exam, SFA new syllabus 50-hour training program. Now, before I start into the topic, I also thank once again AIIOVF RVO for not only inviting me, but also giving me an opportunity to serve the profession as part of Valuation Standards Board. And I also thank Vijay Bhai for nominating me and his entire team for reposing confidence in me and nominating me as the chairman of Valuation Standards Board. Good. So before I start,
सर एक पॉइंट, मेरी पार्टिसिपेंट से रिक्वेस्ट है जितना हो सके मैक्सिमम ऑडियो से इंटरेक्ट करें ताकि दोनों बोथ द पार्टिसिपेंट्स एज वेल एज द फैकल्टी एक बोरियत ना हो, और चैटिंग का प्रयोग सिर्फ तभी करें व्हेन एवर रिक्वायर्ड, अदरवाइज मैक्सिमम क्वेश्चंस पूछें, जवाब दीजिए, मैक्सिमम ऑडियो। और ये आईबीबीआई की गाइडलाइंस हैं, मैंने तो अपनी तरफ से बोला है।
ठीक है भाई।
यस।
So now let me invite one of the participants. We have Mr. Jatin Vijay Vergia, Mr. Shailendra Pandey, Sanjay Bansilal, Amardeep Singhal, Parveen Garg, Vishwanath Agarwal, Atul Jagnani, Anju Jain. Maybe I'll request, I'll start with Mr. Jatin Vijay Vergia. Very good morning, Jatin Bhai.
Sir, good morning.
Can you tell us what was the topic that was discussed in the past so far, so that it will be comfortable for me to take it forward?
So, sir, we have covered finance-related questions on valuation techniques and capital budgeting, and present value, future value, and firm, and many other questions on financial management point of view. How
many days are over so far?
So 5 days.
5 days.
No, sir, 3 days हुए हैं. This is the 4th day. जतिन जी confusion हो गई है. This is the 4th day.
No, okay. I thought between last batch and today, how many days?
Sir, equity valuations and case studies and merger, and application sort, etc. Fixed income option evaluations.
Okay. So these are the topics that were covered.
Yes.
Thank you very much. Our today's topic is valuation and valuation approaches. Now, before I venture into this, I will make all of you, first of all, comfortable with the topic which I will be focusing today. This is your entire syllabus, and your syllabus carries 100 marks. Out of that, 73 marks, which is in blue color, will be valuation related topic. 27 will be maybe the allied topics, which is in serial number 1, 2, and 4, macroeconomics, finance, financial statement analysis, and general laws. So these 3 topics will carry 27 marks, and the blue color 3, 5, 6, 7, 8, 9, and 10 put together will carry 73 marks. And today's topic is item number 6 and 7, which is overview of valuation and valuation approaches. And I will make one thing very clear to all of you. These 2 topics are the fundamental or foundation topics. Maybe if you need to appreciate more about chapter 8, more about chapter 10, 6 and 7 is a foundation topic. So whatever you will be building apart on top of it, so 6, 7 should be the strongest part. Now these 7 marks is my focus today. And let me take you into this 7 marks. What is the syllabus? Guys, this is your syllabus. Your syllabus actually, your item number 6, serial number 6, overview of valuation. which is meaning of value, types of value, premise of value, purpose, valuation standards. I want all of you to focus your attention on this particular part. Valuation standard. I repeat, even though the entire subject, nowhere they have specified which valuation standards, they have actually opened up in one part of your syllabus that standards form part of your examination. And unlike your previous syllabus, that is before 1st of June 2020, that particular syllabus, that is the previous syllabus, there was no indication of this valuation standards in the syllabus at all. So now I am focusing on this particular aspect is, once I take you into the subject, I'll be connecting all these with respect to standards also. So one by one, please be careful about it. Valuation process and reporting and documentation. Importance of documentation. So actually this last para is fully about documentation. Now, where and all these inputs are there, from how the questions will be taken, how do we understand this? For example, premise of valuation, they say going concern and liquidation. These two alone are not premise. These two are also premise. Please be aware about it. Now, coming to the approaches. You have three approaches: cost approach, market approach, and income approach. So they are discussing some of the methods of cost approach, some of the methods of market approach. Especially, please look at the cost approach. They mentioned the net asset value, book value, adjusted value, sum of the parts, and replacement cost. So I'll be discussing each of this, and exam questions will be based on one mark from each, one mark from each. But of course, this valuation approaches will carry only 3 marks, and your overview of valuation will carry 4 marks. The 3 and 4 I have actually interchanged. You have to be very much alert with respect to your syllabus. So whatever I am discussing, please be ensured the entire syllabus should be thorough in your mind. Okay, good. And look at the market approach. They are discussing more about what is quoted market price, price of recent investment and price of recent transaction, relative valuation, concept of multiple, selection of appropriate comparable. Sometimes there can be a case study based on this. For example, concept of multiple. Once you understand this, possibly there can be a case study also on this. So that is why it is not solving case study that is that can give you the grip. Having a grip on the concepts will ease you to get a grip on the arithmetic part of it. Adjustment to multiple calculated in accordance to size, line of operation, geographical area of operation. Income approach. And please look at the various methods that are prescribed. Especially, they speak about the discounted cash flow, terminal value, present value, adjusted present value approach, internal rate of return, cash flow analysis, end of the year, mid of the year convention. There can be 1 mark question also on this. Also, there can be a arithmetic also. Earning capitalization method, yield method, and how this is connected with valuation. Concept of perpetual growth, concept of cost of capital, capitalization rate. So the entire stuff is this, and my next 2 to 2.5 hours discussion will be only on this. And not only that, I'll be relating to some of the questions also, exam questions, and maybe if time permits, I'll try to do more questions also. Good. So now let me take you to the pointers. Many pointers I'll be discussing, but please look at this. The topic, as I told you, it is minimum 7 marks. Now, even though the weightage they have given 7, sometimes They may even ask an additional 1 or 2 here. And the weightage on the valuation application 35 can be slightly reduced. So that small balance can also happen. So therefore, never jump to a conclusion that the weightage what is given will be the maximum weightage. The weightage given is actually minimum. Sometimes if there is a thrust more given here, that the other area weightage will be reduced. So that is how it is structured, because they can't ask questions more than 100 marks. And I want you to focus your attention on these standards. Very important. There will be, even though your syllabus mentions only what is called as valuation standards, they don't mention about which standard to study. Now, as of today, you have innumerable standards for valuation, like European valuation standards, what we call as TEGOVA. You have US standards. You have what do you call, that is called an American standards. You have an UK standard, and UK standard is the International Valuation Standard, IVS. And apart from that, in India, since all of you are SFA syllabus, and I'm sure many of you, some of you will be chartered accountants and maybe cost accountants or company secretaries. The point is, the Valuation Standards Board of Institute of Chartered Accountants of India has brought valuation standards, and maybe I will refer to that as ICA RVO valuation standards, because ICA RVO has adopted the standards which is prescribed by the Valuation Standards Board of ICAI as the RVO's valuation standard. So far, we have 14, what do you say, the RVOs. Except ICA RVO, even ICA RVO hasn't brought out its own standard. It is a standard which has been adopted, the standard proposed by Valuation Standards Board of ICAI. So even though people in ICAI, many of us, Vijay Kumar Gupta is also a chartered accountant, I am a CA, and majority of you are chartered accountants. So let us be very clear about one thing, that ICA is a different body, ICA RVO is a different body. So ICA RVO valuation standards is the only standard as of today of the entire 14 RVOs which is presently in practice. So I'll be referring to these two standards, not all, but whichever relevant to our syllabus. So that is very important. So because questions will be directly picked up from that, which will be an appropriate material also for study, because that is the one point which everybody will have a query in your mind. Okay, what I should study for? These things looks like very much indifferent, like theory. And if you want to have further studies, you can read IVS 104, 105. Okay, 5 already are given there, and 200. 200 is actually business standards. So please look here. Maybe I would have given a comparison somewhere. I would have given a comparison, but nevertheless, maybe I haven't given a comparison. But so I have removed that. Maybe I'll give a table somewhere. I have given a table elsewhere. So IVS 104 and 200 are further reading, and similarly in ICA RVO valuation standard, you can read 102, 103, and 301. So what is that number? I'll also discuss, and how these are connected also I'll be discussing. Most important point I want to share with all of you is clarity. Overview evaluation, they are discussing many points. Don't ignore these areas. Oh, okay, it seems to be very theoretical. Nothing is theoretical. Nothing is theoretical. It has a lot of relevance, practical relevance in your computation. So all these are concepts. So please ensure that you miss this concept. 4 plus 3, 7 marks. Yesterday there was one candidate who got 59.75, and somebody else he scored 59.5. So that 0.25 or 0.5 is a very crucial mark. So therefore, the toughest part will be carrying that or clearing that toughest 20 marks. So 20 questions will be, I will say, it will be in depth into the subject. And that is where your clarity on the concepts only can guide you to score good marks. Good. Now I'll come to this particular hierarchy a little later because I have to actually explain how these purpose, base, premise, approaches, and methods are connected. So be patient for some time. I'll actually give you a connect between these two. And remember, most important, questions can be based on all these three, like fair value, fair market value, and market value. So all the three. So what Mr. Vijay Kumar Gupta has made it very clear, do not type anything in the chat box. I repeat, don't type anything in the chat box. This is not a very big room. The room is very small with small number. So any of you who wish to actually share your views, so kindly switch your, unmute your audio as well as your video, and then start conversation. So it is not going to disturb any one of us. Okay, very good. So I'll be focusing on these three, and exam questions also will be based on this: fair value, market value, and fair market value. Please look at the syllabus. Look at the second line: fair market value, fair value. Okay, so we need to appreciate the difference between these two, and market value. Please look at synergistic value, special value, investment value. So where and all they have used it. Sometimes they'll give the definition and they'll give 4 options. You have to find what definition fits to it. Sometimes they'll give a fill in the blanks that you have to fill it up from a word from the options. So unless and otherwise you are very clear with the concept clarity, cracking such questions will be next to impossible. Okay. Good. So now let me take you into the subject. Good. So let me now take you into the subject. Please look at this question. I'll be connecting every time as I explain the concept, also the exam questions also. So please pay attention. This is the point I want to share with all of you. Okay. And ICAI valuation standard, maybe a stop sharing this one. So hope this is visible to all of you. I'll just share with you the valuation standards. And I'll also open the international valuation standards also. Now, please look at this. I want you to take you to 101, para 6.43. So please look at this. So look at this part. Now, these are the ICAI valuation standard. I will also refer to you to international valuation standards also. Please look at this. Yes, it's visible. I'll be referring because since it is the first question, I want you to give the lead. Please look at IVS glossary para 20.16. So this is IVS. Here, please look at the general standard. So 104 is basis, 105 is valuation approaches and methods. So the entire 105 you have to be thorough with. Entire 105. Similarly, please look at the, I'm sorry. Similarly, please look at the ICA valuation standard, especially 103. So I'll only be comparing this 103 and 105. So IVS 105 as well as ICA RVO valuation standards 103. So these are the two standards I'll be referring for this entire 7-month syllabus. Okay, good. And especially look at the glossary. This is your glossary. And in ICA RVO valuation standards, there is no glossary. Instead of the glossary, there is a standard itself given called 101 definition. Okay, so that is what I have taken from. In the glossary, I mean in the definition, para 6.43 I am referring, which is from page number 15 onwards. So please look at this part. Yes. So this is your 101. And 101 speaks only about definition. A few places I'll actually refer directly. And please look at your 6.43, para 6.43. So please look at para 6.3. Yes. Value. Similarly, in IVS 2020, in the glossary, there is para number 20.16, value. Now, these are the two I have actually taken and compared one by one. I want you to focus your kind attention here. Please look at both. Both the definitions speak about only two words. That value means it is an estimate and it refers to judgment of the valuer. Please, careful. Value is an estimate of the value of business or business ownership, interest, etc., arriving at applying the various procedures appropriate for the engagement and using professional judgment. Please look at that sentence in IVS. Value refers to the judgment of the valuer, finished, of the estimated amount consistent with one of the bases of value set out in IVS 104. A basis I will be explaining. Please wait, because that is a very, very important point which they have discussed in your serial number 6 and 7 of your study material. So what we understand from both is value is an estimate and using the judgment of the valuer. These are the two words, never forget about it. And use a notebook and use a pen and note down all these points. This is very critical. And if at all you have been only watching, things will go, it will come, again it will go. Okay, so please, all of you are seasoned professional. So I am sure you can appreciate what I am referring to, because please look at the question. The question is, a value is an estimate of the value of the business or business ownership interest arrived at by an appropriate, by applying the valuation procedures appropriate for the valuation engagement and using professional. Is it experience you have to apply, or knowledge you have to apply, or skill you have to apply as to the value or range of values? Remember guys, only ICA RVO valuation standard says a value can be even a value single or a range of value, maybe between 30 and 50, 310 and 540. So that is one fine-tuned definition given by ICRVO valuation standards. Okay, and I want everybody to type your answers in chat box. Okay, Shabnam Jindal has typed and I want others also to type, please. I don't want ABCD. Parveen Garg, I want you to type the English. Then only it will enter your head. Okay. Parveen Garg's skill, experience, knowledge, everything seems to be very close answer. Okay. And that is why I want to make one observation, very important to all of you, that unless and otherwise you read the standard word by word, use a pen and note down the important keywords, it will not be registered in mind. I told you this point. Just now I told. Two words, keywords are very important for value. Estimate and judgment. So now please, I am sure you will never miss that from the next question onwards. Okay, Parveen Garg. So wish from next question we have to be alert. Okay, good. So let us move for the next question. Synergistic value. Please look at the syllabus here. So they say difference between price and value and definition of value. So just now I did one question on definition of value. Now price and value, they say all of you know this, so I don't want to bore you with that. Price is what you pay, value is what you get. So sometimes please look at this scale. Okay, if you pay more price and you get a less value, so that is also there. Sometimes you will pay less price, you will get more value. That will also be there. So both possibilities are there. Sometimes overpriced, underpriced. So all this stuff is there. So please understand that there is a difference between price and value.
इधर हो जाओ, हम वीडियो ऑन करके चेक करना होता है, वीडियो ऑन करके करना होता है, तो ये
So I think Rajesh Gupta,
yes sir,
please.
Sorry for delay sir. I face some problem, internet problem.
You have to mute your.
Oh yeah, just a minute sir.
Good. So thank you very much. So now please look at the next one. I'll take you to the types of values like fair market value, fair value, intrinsic value, synergistic value, market value, special value, investment value. One by one I'll focus. Each one is different. Each one is different. And I want to tell you one thing, that after purpose you have a base, and after base is premise, and after premise is only the various approaches, and after approaches only methods. Directly we are not jumping to valuation approaches and methods. We need to first be very clear about the valuation purpose, then fix the base, then go for the premise, then go for the approaches and methods. No, directly we are not going for approaches and methods. So what do you mean by a purpose? For example, in a private limited company, there can be a 10% shareholder who wish to actually sell a share to the 90% shareholder. So what is the purpose of valuation? Purpose of valuation is the controlling interest guy wants to buy a non-controlling interest share. This is the purpose. So that means there is a transaction between shareholders. There is a transaction between shareholders. So purpose you have to identify. Sometimes the purpose will be a company will be not a going concern. It wants to go for liquidation. Liquidation as a going concern will be the purpose. So it is a running company and you want to find some buyer who will buy the entire company stock and barrel along with business. So then the purpose is different. So where all the shareholders are united together and they are ready to sell the business. So the purpose will decide the value, and purpose will decide the base, purpose will decide the premises, purpose will decide the base will decide the premises will decide the approach, and approach will decide the methods. This is how we have to go. This is how we have to go. Now, one by one, I'll unravel it and make the points clear. So please be careful. These will be the exam questions. Go on. So now value part is clear. Now going to synergistic value. This is an exam question, but before that, please understand what is meant by synergistic value and understand synergistic value. For example, company A, company B. Company A is 40, company B is 30. Now both the company are going to merge together. So 40 crores plus 30 crores will be 70 crores. There is no fun in there is no purpose in actually coming together. Coming together is beginning, they say. Coming together is beginning, they say. So if coming together is beginning, there should be a synergistic gain. There should be synergistic gain. Now what is synergistic gain? A 40 crores, B 30 crores. AB valuation should be 75 crores, assuming 78 crores or something. 78 crores, then A40, B30, 70. 78 is the synergistic value. Synergy gain is called 8 crores because individual value put together, compare with the synergistic value. If there is any surplus, we call that as synergistic gain. And the combined value, we call it as synergistic value. This is explanation. But the examination will require you to be clear with the conceptual definition also. Synergistic value is the result of combination of two or more assets or interests where the combined value 78 crores is more than the sum of the separate values. So 40 crores plus 30 crores, so 70 crores. That is synergistic value, 78 crores. Synergistic gain is 8 crores. 78 minus 70. So 8 crores is synergistic gain. So please be careful with this. And if the synergies, now from where I have taken this GKR, I have not taken this from clouds. I have taken this only from the IVS 104 basis of value, section 70, defined basis of value. Now all of you please look at this. 104, basis of value. Basis means singular. Basis means plural. I repeat, basis means singular. Basis means plural. Click. Now all of you please look at this 104. You have 6 defined bases, meaning these are defined in IVS. Please be careful. Please be careful. I told you fair market value, market value. Market value is a defined base. Fair market value is not a defined base. It is only other basis because fair market value is defined in Income Tax Act 1961. Income Tax Act 1961, they define what is meant by fair market value. Fair value is defined for in the International Financial Reporting Standards or IND-AS. So you have 5 IND-AS in your syllabus. So you have fair value defined in IND-AS or IFRS. Fair market value is defined only in tax, is only defined in only tax laws, taxation laws. It is not defined even in international valuation standards or any valuation standards, for your kind information. And only market value is defined in IVS. So we'll come for this. And please look at this. There is one defined value in IVS, which is called synergistic value. Investment value is also defined. Okay, liquidation value is defined. So please wait one by one. Let us understand what it is. So if the synergies are only available to one specific buyer, then synergistic value will differ from market value, as the synergistic value will reflect particular attributes of an asset. There are only a value of a specific purchaser. Now let me answer this question. I am sure all of you should answer. Okay, we have how many guys? We have Minus me, 12 guys are there. So I want all the 12 to participate. Okay, minus the host. Okay. So synergistic value is a result of a combination of two or more assets or interests where the combined value is dash the sum of the separate value equal to the separate value, less than separate value, more than separate value, either B or C, less than or more than, which is correct.
More than.
Jatin, Vijay Vargia,
More than.
Anju Jain, more. Only 3 of you are answering. I want others also to answer.
More than.
Oh, wow, wow, wow.
More
Wow.
than.
More than.
Arey, wow, wow. Very good, very good. Now next, this is an exam question. Now this is how it is. I want to connect a fair value, market value and fair market value. And from this, I will again ask one question. So please be attentive. Okay, please be attentive. Fair value. Fair value is actually a IND-AS definition or IFRS definition. So wherever IFRS India's definition, both are same. So only one word will be different. Now, what is that one word? I'll tell you. Please wait. Market value. And in Central Goods and Service Tax Act, market value is defined for your kind information. Because I'm not a Pardesi guy. I'm a Desi guy. I'm an Indian. So I want to actually give you the relevance of these terms in India also. So fair value, you have a reference in IND-AS. Market value, you have a reference in Central Goods and Service Tax Act. And fair market value, you have a reference in Income Tax Act. So now let us go one by one. Yeah. This is IVS 104 basis of value, which is defined basis of value. I told you just now, I showed you there are 6 defined basis of value. And one of that, the first one is the market value. So this is the definition of market value in para 30.1. And this is the definition in Central Goods and Service Tax Act, section 273, market value. So please look at this. Full amount which a recipient is required to pay in order to obtain the goods or services. Okay, so this is a very interesting definition. Okay, but please look at market value definition as per 30.1. It is an estimated amount. Please remember, market value is value itself is estimate and judgment. Judgment, estimate, judgment. That is value. Even midnight, 12 o'clock, I'll get up, tell me what is value means. You must only tell 2 words. What is the 2 words? Judgment, estimate. And then go back to sleep. That's all. Market value is the estimated amount. Always, any value is estimated only. For which an asset or a liability, very important. Never ever jump to a conclusion that valuation means only asset value will do. Absolute absurd. It is even equally applicable for a liability. Which an asset or a liability should exchange on a valuation date. Whatever words I am underlining, very, very important. Note down these words. These are not for looking. I don't want you to look. I want you to use the pen and write. Only if you write, it will enter head. Otherwise, it will go on top like a flyover. It will go. Okay. Should exchange on the valuation date between a willing buyer and a willing seller in arm's length transaction after proper marketing and where the parties have acted knowledgeably, prudently, and without compulsion. Very important words, which they will ask in examination is the catch. Okay, is the catch. Unless and otherwise you understand it and read it, it will go for a toss in exam. Because very smartly they designed the question, very smartly. And unless and otherwise you professionals are a little bit, I'm sure all of you are smarter. So that smartness, you should be in a position to catch it. Now let's see how smart you are. Market value is the estimated amount for which an asset or liability should exchange on a valuation date between a willing buyer and a willing seller in an arm's length transaction after proper marketing and where the parties had each acted knowledgeably, or each acted prudently, or each acted without compulsion, or all of the above.
All of the above.
Prudently.
All-
Jatin Vijay Vergia, prudently.
all of the
Jatin Vijay Vergia, please unmute yourself and please explain why only prudently. Why
no
not?
sir. Actually, I thought I was confused. AOTA. I didn't get. It is all of the above. So I answered to them. It's all of the above.
This is what will happen in examination.
Yeah.
This is not an exam scenario. This is actually a lab environment. Lab environment is different. Exam is different. So exam you have to be. That is why conceptual clarity. Likhna mat, likhna. You never forget not to write. Okay. So please write it. Unless and otherwise you write it, it will not be registered. Only once you write. Okay. So how about others? Why others are not typing? We have 12 participants. I want everybody to type. Okay. Good. So Amardeep single. Now let's go to the next one. Shailendra Pandey. No, fair market value. This is Income Tax Act definition. Please. 222 capital B. 222 capital B. Fair market value. And I'll give you a good news, guys. Fair market value, understand what it is, but they will not ask an exam. In examination, they'll ask only fair value, market value. Fair market value, they will not ask. But that will be one of the option. So that will always be a point which you will, to confuse you only will be there. Because fair value, market value, uske beech mein fair market value hai. Remember, fair market value is a taxman's term, is an income tax term. Fair market value means in relation to capital asset, price that the capital asset would ordinarily fetch on open market on a relevant date, and where the price referred to one is not ascertainable, such price as may be determined in accordance with the rules made under that. This is a very important definition. Why? Please look at fair market value that would ordinarily fetch in the open market. So, is fair market value a market value? Yes, because please look here. What is market value? Estimated amount that should on the valuation date, willing buyer, willing seller, arm's length after proper marketing. So this is market value. So fair market value as per type 1, it is market value. So therefore, for an income tax valuation, if a land and building capital gains, 2000, 2001, 2002, fair market value we need to find out. Who will give the land and building? We can ask a valuer to actually give the fair market value as on that date, because capital asset that would ordinarily fetch in the open market on that relevant date. From there you do the indexation for 1920 or 2021, then subtract with your sale consideration minus that index, because you get the capital gains. Agreed. This is agreed. This is agreed as per 222B. Land and building valuer can do that. And if that is not possible, such price as may be determined accordance with the rules made under that. Generally, your Rule 11 UA, Rule 11 UB with respect to valuation of private limited companies when shares are exchanged or when shares are issued for consideration other than cash, or shares issued at a premium. So all those stuff will come in 1, 2, where you have a separate valuation. Rules are specified, okay, specifically given. So 222B also you need to appreciate. Remember one thing, guys, the entire facets of the entire valuation profession is going to change in the coming years, thanks to the valuation, draft valuation, what is bill. And the moment this bill becomes a law, almost 14 Act will be parallelly amended by removing many of the provisions and bringing provisions where valuer only has to do the valuation, respective vertical valuation. So now I'm coming for the fair value definition. One is this IBS 104. Now please look at this. I told you there is only one word. There is a difference between what do you say, IFRS and ICRV valuation standard. And what is that one word? That one word is very different. Would be received, would be received. to sell an asset or paid to transfer a liability. But remember, asset and liability both are coming here. Okay, orderly transaction, orderly transaction. Market participant, market participants mean both buyer and seller. Now here, the willing buyer and willing seller are the market participant. These words are not given in your fair value definition. Instead, they use a term called market participant, and market participant can be one exam question. So please wait. I'm coming for that also. Please wait. And I'll be giving you a break in between. Maybe now it is 10:18. By 11 o'clock, I'll give you a break. Okay. So now please look at ICRVO 102 fair value definition, para 17, which says at the valuation date. This is measurement. So that is the only word that is measurement date, valuation date. Both are same. Same. So now let us understand this question. This entire definition. So you have to be very careful. Unless otherwise the definition is there here, you can't find out the answer. Now please look at this forced transaction. So D is not the answer. Okay. Now look at A is the price. Fair value is the price. Fair value is the price. Fair value is the price. So that is why value and price are connected. Okay, value and price. Price that would be received to sell an asset. Generally, it is not to sell an asset. Paid to transfer a liability is also there. So A, asset only is there. They have forgotten one character. Very, very pathetic. No. So therefore, A is also not the answer. So I am telling you A and D is not the answer. I have given the reason also. Remember, in MCQ, finding the right answer should not be your objective. Your objective should be eliminating why the answer is wrong. Then each question you are not learning one answer, you are learning 4 answers. Remember. Right. So now tell me which is the right answer between B and C. And tell me why B or C is not the answer. That also you must tell me. Okay. Out of B and C, which is the right answer? Jatin, Vijay, Vergia, not only you must give the answer, you must also tell why B is not the answer.
So it mentioned interested transaction while C says orderly transaction.
It is orderly transaction. Okay. So good. So that is the point. So now let's move to the next one. Investment value. Okay. So that is defined in section 60 of defined basis of value in IBS 104, investment value, otherwise called investment worth. Okay. And I want to make one more observation that there is an equivalent of this word in, there is no definition of investment value in ICA RVO valuation standards, but there is another equivalent word. There is an alternative word. So please wait for some time. There is one more slide where I'll give you the connect between the IVS and ICA RVO standard, especially with respect to such words. Now, what is an investment value? Is the value of an asset to a particular owner or prospective owner for individual investment or operational objective. Now, I'll give you an example. Keep that in mind. Generally, I am an investor will be, there is a holding company. There is a holding company. Now, holding company means what? Holding company would have invested in, say, some 17 subsidiaries. Wow. 17 subsidiary companies I have invested. That is why it's called a holding company. Now, how do I do the valuation of holding companies? How do I do the valuation of holding companies? So what I will do, I would have invested, I have pumped, say there are some 7 investors who have invested in holding company, and that money is actually invested in 17 subsidiaries. Now, one of the 7 investors says, I want to exit. Tell me and I want to take my money. So then how do I do the valuation of that shares? So I need to find the investment value. So I have each one they have given 1 crore. 7 crores has been invested in 17 companies spread across 10 lakhs, 20 lakhs, 40 lakhs, 17 lakhs, like that. So now what I will do, each of the investment company, that is each of the subsidiary company, we'll find the value. Okay. So investment value is an entity specific basis of value, entity specific. Although the value of an asset to the owner may be same as amount that could be realized from sale to another party, this basis of value reflects the benefits received by an entity from holding the asset and therefore does not involve a presumed exchange. So therefore, investment value reflects the circumstances and objectives of the entity for which the valuation is produced. It is often used for measuring investment performance. So these 17 subsidiary companies will be valued, and based on their valuation, I will arrive at an investment value. So I will sum this, find the investment value of this 7% investment or 7 shareholders. Now, while doing the, what do you call as the subsidiary company's valuation, okay, there is one more avatar of this para 60.1 I want to discuss, and that is called sum of the parts.
Value reflects the circumstances and financial objective of the entity for which the valuation is produced. It is often used measuring investment performance.
Pandey. Yes, Mr. Shailendra Pandey. You can discuss with me.
Sir,
Okay.
nothing. Oh, I was not aware that my mic is unmute.
Okay.
Oh, sorry.
Good. Now, there is another side of the investment value. So that is called as the sum of the parts. And you have that in cost approach. The serial number 7 valuation approach as in cost approach. The sum of the parts method is there. Okay. So I will discuss that also parallelly so that you will have a clarity on that. Now please look at this sum of the parts. Sum called SOTP. This is the formula for sum of the parts valuation. So segment A, segment B, segment C, total, you will get the total firm value. When you will do that? When you do the holding company investment valuation. Okay, so one side you are doing the investment value, you want to know what is the worth of my investment. Now to know the worth of your investment, what is the method you will approach. Okay, so your investment value is a premise. Your investment value is a premise. Sum of the parts is a approach and method. I repeat, sum of the parts is an approach and method. Investment value is a premise. Now to know the investment value, what is the approach and method you will adopt? Cost approach. In cost approach, what is the method? Sum of the parts. Now this is sum of the parts explanation. Oh, sorry. This is sum of the parts explanation. Maybe I'll ask one of the participants to read Sanjay Bansilal Khathani. Very good morning, Sanjay Bansilal.
Yeah. Good morning. Yeah.
Am I audible to you?
Yes.
Can you read this slide, please?
Right. Some of the parts analysis, that is SOTP, or breakup analysis, is a method of valuation of multi-divisional company, holding company, or a conglomerate. So, should I go further or like?
Please.
Okay. The essence of method is to determine what divisions would be worth if the conglomerate is broken up and spun off or acquired by another company. The analysis calculates a range of values for conglomerates equity by summing the value of its individual business segments or divisions to get the total conglomerate's enterprise value. The equity value is then calculated by subtracting net debt and other non-operating adjustments.
Very good. Thank you very much. And this is that whatever you just now discussed, I have given it in a formula method. And now can you actually answer this question, friends? Sum of the part analysis, SOTP, or breakup analysis is a method of valuation used for which companies except multi-divisional company, holding company, conglomerate, startup company.
Startup company.
Huh? I want everyone to answer.
Startup company.
Startup. Oh. Why startup? It's only one company. No. ABC.
Sir, holding company.
नहीं चलेगा. Jatin bhai, ABCD नहीं चलेगा.
Holding company.
Type the word. Then only it will enter the mind. I want this to go inside your head. I don't want ABCD.
I told.
Because examination, they will change this ABCD. Conglomerate, Rajesh Gupta, fail. What is this? Conglomerate means multiple investment. Multi-divisional. Holding company means multiple. Conglomerate means multiple. So all these three, just now we read. Please read again. So Mr. who read this? Just now who read it? Bansilal. Please read the first para once again.
Yeah. So sum of parts analysis, SOTP or breakup analysis method of valuation of multi-divisional company, holding company and conglomerate. So these, yeah. So
very good. So therefore, sum of the parts method or breakup analysis is a method of valuation used for which companies except
startup.
Except startup. Okay.
Except they started.
So it is only one company. So conglomerate, multiple, holding company, multiple investments, multi-divisional company, multiple investments. So there what we read is investment value, which is a premise. Here what we are reading is the approach and the method. Okay, so both are connected actually. So that is an investment value. The method what we will adopt to arrive at an investment value is SOTP. Okay. So this is how your exam questions will be, guys. Now please look at your syllabus. I'm only going as per your syllabus, very important. Please look at this. What is this? Investment value, synergistic value, okay, definition of value, fair market value, fair value. Okay. And please look at this. Sum of the parts method. Okay. So whatever I'm discussing, it is there in your syllabus. Somewhere it is there. Okay. And this is how your exam questions will be. So now let me find out what is the answer here for investment value. Now all of you know what is investment value. So investment value is the value of an asset to a particular owner or prospective owner for individual assessment or operational objective. Investment value is an investment specific basis of value, owner specific basis of value, asset specific basis of value, entity specific basis of value. Just now I read it, but you have to be very vigilant while answering. This is how your exam question will be. So which one will be the apt answer? So all will look very close. Okay, that is how your question is. Now let me ask once again. Maybe I'll ask Vishwanath Agarwal. Mr. Vishwanath Agarwal. Yes, Mr. Vishwanath Agarwal.
Yes, sir.
Very good.
Hello.
Can you read this paragraph, please? This paragraph.
Investment value. What? Investment value is the value of an assets to a particular owner or prospective owner for individual investment or operational objective.
Okay.
Investment value is an entity specific basis of value. Although the value of an
entity specific companies, it is entity specific. Even though entity specific and maybe what do you say, company specific, both will be very close. You have to only choose that word which is given in the standard, because these are words taken from standard. These are not English words where you can actually play with English. So that is why your exam questions are such that you have to be very, very clear. That is why reading alone is not sufficient. Reading is not sufficient. Take a notebook, take a pen, note down para number, this, that, note down the keyword, very important. Okay. So now which is the right answer, friends? Investment value is the
Entity.
entity. Okay, entity specific. But now this is what I discussed just now. So that the first step is in valuation. No, I'll directly go for method approaches. No. Method approaches to दूर की बात है, बहुत दूर की बात है. The first point which you need to establish is reason. Why? WHY. Why you want to do the valuation? And remember, this is what they give the meaning about purpose. IVS, ICRVO valuation standard 101 defines purpose. Reason for which valuation is being conducted. That is called purpose. And once you know the purpose, for example, purpose is for capital gains, purpose is for borrowing, purpose is for lending, purpose is for what do you say, compromise or arrangement, purpose is for bankruptcy, purpose is for CIRP, purpose is for liquidation, purpose is for example, it can be individual and there is a partition in the family. So all these are purpose. Once purpose is known, then go to the base. And where it is mentioned, IVS 104 or ICRVO 102. And we have understood few bases. Investment value is a base, synergistic value is a base, market value is a base. Then go for premise. Premise I will be explaining now. Next is premise only. Okay. So let's move to the next one. Premise. What is premise? You have to be very careful with premise. So once you know the purpose, then base, then premise. Now, what is premise? This is premise meaning as per ICRVO valuation standard. This is the meaning of premise as per IVS 104 para 130.1. So please be careful. Please be careful. Now, what is a premise? It is assumed use. Describes the circumstances how an asset or liability will be deployed or will be used. The word that is used in ICRV valuation standard is how an asset is deployed. Here, how an asset will be used. That is called premise. How it will be used in future. Now, it depends upon the buyer. It depends upon the buyer. For example, there is a very big property. You want to restrict your property and the neighboring space you want to sell. Okay. I'll just give another example. You are in one particular factory. You have a neighbor factory, somebody else. That neighbor factory, that next compound factory, that guy is actually selling that premise. Okay, let this be an example. Now, there are two parties who want to buy that factory. You are one of the bidder. And another guy is in a different city. He is other bidder. Now, you know better about that particular property. You know the plus and minus of that property. And sometimes you may even give more to that property because you just break that, what do you say, you just break open your compound wall and you get a very big premise. Okay. So you may even pay at premium. Now, what is the premise? Sometimes depends upon the use, how an asset is put to use. Now, for example, there is a electronic assets. You are going to sell to second-hand users, electronic asset users. Now, there are two types of guys who actually bid for that. One is a e-waste or e-scrap dealer. Another is a e-product. He will actually refurbish it and he will sell the product. Both of them, they bid for your old machines, old electronic machines. Naturally, the e-waste guy will be bidding at a very low price, and the guy who is going to refurbish your electronic products and is going to sell, he will actually bid at a higher price because the use is different. For him, the uses, he will actually break into small piece, put it in weight and then sell. This guy is going to use for a different purpose. So value will be different. So premise depends upon the usage. And I want to share with you, and some of the common premises are 1, 2, 3, 4. This is as per IVS 104. Some of the common premise as per ICARVO 10, ICARVO standard is 1, 2, 3, 4, 5. They have given 5 premise. ICA 104 has given only 4 premise. Now, which premise is addition in ICARVO valuation standard? Going concern. Going concern is a
As is where is basis.
going concern is an additional premise. So that is why I gave this example of e-waste. Some guy, he is not interested in going. He will take the e-waste, tamal, timil, he will just break it and then he will sell. So there are guys who will actually buy the company only for the asset. They will actually remove all those assets, sell it in parts. It is not a going concern. So the going concern is a premise. And going concern only chartered accountants can understand and appreciate well. And that is why ICA has considered it. And here I must appreciate ICA RVO valuation standards for including IBS. They don't understand going concern. Okay, I don't know. Going concern is not there, but going concern is a premise. Going concern is a premise. Very, 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 very important premise. And please look at this. Going concern value. It is a premise. It refers to the value of an enterprise that is expected to continue to operate in future. Expected to continue to operate in. That means the business will be continued. Continue. Word expected to continue. Expected to continue is called going concern. So therefore, valuation will be different. Please. So now, sorry. Habu is a premise. Habu alone, I will actually focus on. There will be one more question on Habu. Now, please understand this question, guys. Premise of a value refers to dash and dash how an asset is deployed. I am not going to give the answer. Just know I explain. That is what this exam question will be. Boom. Already understood. All 4 will look very close. That is the interesting part. Okay. And just imagine in exam circumstances, how will you do? Concern, cost, condition, circumstances, situation, consequences. All will look very close. Premise of a value refers to dash and dash how an asset is deployed. This is the wordings taken from your ICA RVO valuation standards. Now, I will actually take you to ICA value valuation. Remember, I have actually given the red color. You wouldn't have noted it. I told you every word you have to note it down using your pen. Okay. Conditions and circumstances. C and C. Con and sir. Conditions and circumstances. Okay. The conditions and the circumstances will make how an asset will be deployed. For example, there is a very old diesel genset. Condition and circumstances will ensure whether you want to buy it and use it or you want to buy it and remove the parts and sell it. Condition and circumstances. Now tell me the answer. There is only one word called circumstances. Circumstances is the catchword. Underline that. Write it down. Use your pen. Use your pen and then ingrain in your brain. Okay. Condition and circumstances. संजय, this A B C D का बात ही नहीं करना, मुझे नाराज हो जाएगा. I want English. I don't want the word English letters. Okay. Sanjay, Bansilal, Khatane, and Atul Jagnani. No A B C D. That only you do it in examination.
No, I did that. I have written that.
English. I want that English.
Condition and circumstances.
Very good.
Yeah, condition and circumstances. Already written there.
Then that only is the catchword.
Right.
So now I am going to focus on that one more aspect. One more I am going into that, into premise. All right. One more, maybe another. See, this is another interesting twist. What refers to the condition and circumstance how an asset is deployed? Is it purpose or tenacity or valuation process or premise?
Premise.
Premise.
And you mean premise.
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 Very, very good. Now, Habu, premise of value includes. Now, just now we saw this. Premise means what? HABU, that is highest and best use, current use and existing use, orderly liquidation, and forced sale. All. Okay. So, you are forced to sell, orderly liquidation, highest and best use. Now, premise of value includes what? Highest and best use, current use and existing use, orderly liquidation, or all of the above. Rajesh Gupta, all of the above, very good. Okay. But I am going a little more deep into the subject. Okay. I'll come to this premise a little later, but let me ask you a question on going concern. Okay. So just now we discussed going concern means expected to continue to operate in future. But not only that, please look at para 46. The intangible elements, and this is actually going concern value in para 6.15, but I want to take you, this is 101, but I'll take you to 102, which is the base. Please come to base. Here, please come to going concern value, 45 and 46, two para. So there they are only given the definition. Here they are given the definition and one example. And I want you to actually refer to that, very important. Please look at this. Yes, going concern. The intangible elements in going concern, very important. Very important. Okay. The intangible elements of going concern value result from factors such as having a trained workforce, retain that, operational plant, that is working, plant and machinery, necessary licenses in force, the marketing system is in vogue, and the procedures, practices, and policies are in place. That is the indication that it is a going concern. These are the intangible elements. These are the indication, intangible elements. Now, please answer this question. The intangible elements of a going concern value result from operational plant, or necessary license, or a trained workforce, or what?
AOTA.
AOTA. All. Unless and otherwise you read and appreciate what it is, these questions can't be cracked in exam because it will look odd. Okay. Now, I am taking you to the scope of work. And your scope of work is forming part of your serial number 6. Okay, serial number 6. Now, remember, this is IBS 101, section 20. Okay. Section 20 speaks about scope of work. So maybe I'll share it with you here. It's here. This is framework. Look at this scope of work. Now here I want to share with you one very important point. Look at 10.1. The scope of work, sometimes referred to as the terms of engagement. Okay, and 20.3 I want to. The valuer must communicate the scope of work to its client prior to completion of his assignment. Must communicate the scope of work to its client prior to completion of assignment, including the following. What he must include? There are 14 items. Identity of the valuer. All this he must communicate. All, how many points are there? Up to n. So there are 14 illustrated points. 12 are mandatory points. 2 are if any points. Maybe you need not mention it. If required, you can actually mention it. So there are 14 points, A, B, C, D up to n. Okay. So what the valuer must communicate scope of its work to its client prior to completion. Prior to completion, that means even before giving the the report, you must communicate the scope of work. Okay. Now, valuer must communicate what to its client prior to completion of assignment. Fees, the draft report, his experience, and so much experience.
Scope of work.
So that is very important. So 9. So very interesting, guys. Scope. Good. Now, valuation report. This is also in your serial number 6 syllabus. Okay. Overview of valuation. Now, I want to make one point very clear that nowhere, none of the valuation standard defines valuation report. Neither IVS nor ICA RVO standard. They say directly, they will say valuation report must contain this. But what is valuation report? They are not defined. There is no definition. So I'm taking you to a place where valuation report is defined. The types of valuation report. It is called CBV Practice Standard 110. What is CBV? Canadian Institute of Chartered Business Valuators, standard number 110. From there, I am taking the reference of the definition of the valuation report. This is the only place where the valuation report is defined. Any written communication containing a conclusion. Please watch this. This word is very important. Can I give a valuation report as a disclaimer? He is not a valuer at all. Valuer means he should actually conclude. If he gives a disclaimer, is it an audit report? That means he hasn't understood what valuation means. He is not fit enough to be a valuer at all. So disclaimer should be avoided in valuation report. And I'll tell you where and all it has been mentioned. It has also been brought as part of the draft valuer's bill also. Valuer should not give a disclaimer. He is not a valuer. He is not an audit report. Forensic audit report also should not be a disclaimer. Valuation report also should not be a disclaimer. You should either say this side or that side. Yes, no. Only that answer should be given. No disclaimer. Any written communication containing a conclusion as to etc. Okay. So this is the point. Written communication, that means signed, containing a conclusion. Now there are 3 types of valuation report. Remember, 3 types. What are those 3 types? Comprehensive, estimate, calculation. Comprehensive valuation report, you will do a comprehensive review. Adequately, you will corroborate the inputs of what you have given in the report. Estimate valuation report, you will do a limited review. And only you will corroborate the relevant or significant information. But calculation valuation report, you will do a minimal review or no review and no corroboration or little corroboration. Naturally, fees for calculation valuation report and comprehensive valuation report will be different. Comprehensive valuation report should be 5x. Calculation report, valuation report should be 1 by 5x of comprehensive. It all depends. So that is why this is a very interesting point. Please answer this particular question. Which of the following is not a type of valuation report? Comprehensive valuation report, calculation valuation report, complete valuation report, estimate valuation report. Which is not a type of valuation report? Which is not a type of valuation report?
Complete valuation report.
This is the way I want the answers. No ABCD. Only kids will say ABCD. You are all professionals. I'm very happy. Good. So I'm sure, and this is an exam question, 1 mark. Okay. And this forms part of your serial number 6. Documentation. Documentation is very big actually. Okay, very big in your syllabus. I'll take another 5 more minutes, and after that I'll give you a 15-minute break. Aram say you can come back again, because I'll be doing more stuff there. Okay. So valuation report and documentation. The information, this is I have taken because documentation is one area. I will say ICA RVO valuation standard is very good. Very, very good. So what are the inputs that must have at a minimum that should be documented? Engagement letter, appointment letter, tabulation data, workings, copies of circulars, bases, approaches, methods. Okay, please look how it goes. Assumptions, copy of the signed valuation report, management representation letters, all this stuff. And this is para number 39 that speaks about ICRB valuation standard. Documentation includes a record of valuation procedures performed, relevant evidence obtained, and conclusion that the valuer has reached based on assumptions. So that has to be actually written document. Okay. Now, can you actually answer this particular question, guys? Valuation documentation means record of valuation procedures performed, relevant evidence obtained, conclusions that the valuer has reached, or all of the above?
All of the above.
All of the
AOTA.
AOTA. And actually, this is the table I was referring to, that the comparison between ICA, RVO, and IBS. I'm sure now this table will give you a connect between ICA, RVO, and international valuation standards. As I told you, basis you have in 102 here, and this is 104. And 103 is your valuation approaches and methods in ICA, RVO. This is 105 here. Okay. And the business valuation is 301, here it is 200. So that is the connecting standards or reference standards compared to both. So this I have given in one order, and the related standard I have given there. Here it is, definition is 101, here it is glossary. Okay, good. Now come to the cost approach. This is an, serial number 7. Okay, so now I have done serial number 6, your 4 marks I have done. So the balance 3 marks plus some more arithmetic questions I will be doing. So what I wish to do now, I will give you a break. A 15-minute break. You can take it and you can assemble back after the break. The connectivity will remain as such. Only thing is you can switch off your video and audio. Okay. Have a break and then refresh and come back.
Thank you.
Welcome back, friends. We are now to the approaches, valuation approaches. I want to make one point here to all of you. Maybe the next 1 hour, we will be going a little bit faster. And this is a 3-mark area, minimum 3 marks. So I'll also focus on some more arithmetic part also. So please pay your attention. So they have discussed 3 approaches: cost approach, market approach, and income approach. And they have also discussed some of the methods in it, especially net asset value method, book value method, adjusted value method, sum of the parts method, replacement cost. So this will be from examination perspective. Okay, good. So let me actually put some questions to you. Remember, this is IBS 105 para 60.1, which speaks about cost approach. And ICA RVO 103.95, they speak about what is the meaning of cost approach. So both that say that currently to replace an asset, what is the value of it? Okay, currently to replace the value of an asset. So the approach provides the indication of value by calculating the current replacement cost or reproduction cost. So that's what it is. Can you now give me the answer for this question number 12, guys? Which is a valuation approach that reflects the amount that would be required currently to replace the service capacity of an asset? So what is the approach?
Cost approach. Cost approach.
ABC. So,
Cost approach.
Yeah. So I'll let others also say, or others also they can type. So it is 12C, cost approach. Okay, good. So next, and I want you to be very attentive to this slide. Very important. In para 70.1 of IBS 105, they say broadly there are 3 approaches. Broadly. But look at ICA 103 para 99. Following are the two most commonly used valuation method. Only 2, which is replacement and reproduction. Here they say replacement, reproduction, and summation method. That is sum of the parts method, sum of the parts method, summation method, sum of the parts method. We already discussed that part. I went there, came back here. So now, if I put a question, a numerical question, how many methods of cost approach are broadly used? Broadly, is it 2 method, 3 method, 4 method, or 5 method?
3.
It is not 2, it is 3 methods. So what are those 3 methods? Replacement method, reproduction method, and sum of the parts method or summation method. Okay, so these are the 3 methods which are broadly used. Okay, and 2 commonly used methods, replacement and reproduction. 3 broadly used method, replacement, reproduction, and the summation. Okay. Good. And now let me take you to the next one. What is a replacement? Because replacement forms part of your syllabus. So some of the parts I discussed, replacement I am now discussing. Now replacement as per para 70.2 is replicating the utility of an asset, not the exact physical properties. Similarly, as per para 100 of ICA RVO valuation standards 103, it is to recreate an asset with substantially the same utility, comparable, not the exact. Okay. So now, but look at reproduction cost. It says recreating a replica. That word replica will not be there in replacement method. It only the recreating will be there. But replica is called reproduction. For example, Agnipath, for which national award was given for Amitabh Bachchan, Vijay Dinanath Chauhan, that character, actually there was a remake of Agnipath where Hrithik Roshan was there. But Amitabh Bachchan, Vijay Dinanath Chauhan, even Amitabh Bachchan, He acts now. That's what Ram Gopal Verma tried in Sarkar. That magic is different. मुझे जो सही लगता है मैं करूंगा, वो चाहे वो भगवान के खिलाफ हो या पूरे सिस्टम के खिलाफ. So he tried to actually recreate that magic in Sarkar, but Sarkar is different, Agnipath is different, and it is only replacement, but never, what do you call it, as a reproduction. It's very difficult. Dawn by Amitabh Bachchan is different, Dawn by Shah Rukh Khan is different, even though the same story. So you don't get that feel. Never will get that feel of Sholay by Dharmendra, Sholay by Amitabh Bachchan is different. You want to recreate that Sholay today, even Ramesh Sippy can't make it. It's difficult. Okay. So please look at 14. Dash involves valuing an asset based on the cost that the market participant shall have to incur, recreating at a substantially the same utility. Okay, it is not a replica. Substantially the same means, is it replacement cost or reproduction cost or summation method or prior transaction method? So just to give you an option, they have given some additional point. So which is a
replacement?
Yeah,
replacement cost.
Replacement. Good. So how about other friends? They are not typing anything. Anju Jain, good. Good. Replacement. Atul Jagnani, good. Good. So now let me take you to the next one. Market approach. Now I want you to read this green color and red color. So what is given in IBS 105 para 20.1 and IBS 103, ICRV 103 para 14, where market approach provides an indication of value by comparing the asset. So even the cost approach also will say the same word. Cost approach provides an indication of value. This word indication of value will be there in every approach. Okay. Good. So it provides an indication of value by comparing the asset. This word is very important. Comparing, comparable. So identical or comparable, there the price information is available. Okay. Vishwanath Agarwal ji, Shubham Jindal, and Jatin Vijay Vergia. So please mute your audio. Yeah. Good. Shubham Jindal. Now, the point you need to actually note down carefully is, it is identical or comparable. So identical or comparable, and the price information is available. Then only you can go for market approach. Sometimes price information not available, then what to do? Market approach will not be possible at all. So prices and other relevant information, identical or comparable, available. Okay, that uses price and other information generated by market transaction is available. So this is your market approach. Now, please look at this question. So which is the valuation approach that uses price and other relevant information generated by market transaction involving identical or comparable assets, liabilities, or group of assets and liabilities, such as a business? Which is that approach? Is it asset approach, cost approach, income approach, or market approach? Market approach. Good. That's your 15.
Market approach.
Right. Now this is a comparison between ICA, RVO, and IBS comparison. This is the methods under the market
approach.
Oh, that's good. Okay. So these are the methods that are given in the market approach. Comparable companies, multiple method. Comparable transaction, multiple method. So comparable companies method, comparable transaction method. So please be careful. What do you mean by comparable companies method? There is a market and there are quotations available or rate available for the respective companies or for the product or for the assets. For example, gold, you will have a gold market. For example, you will have a commodity, you will have a commodity market. You have a land and building, you will have a land and building market. You will have a shares, you will have a share market. So you have an oil, will have an oil market. So comparable companies. So there the quotations are already there. You take that and then you compare with your asset. Now comparable transaction is similar transaction. You don't go to a listed, otherwise called as a guideline publicly traded. Now please look at this. This is the methods given by ICRVO. These are the I have just compared both the methods of market approach and ICRVO valuation standards and IPS. So in IPS, they are called as comparable transaction method. Car which is 7-year-old car. I want to sell that car. Now, how do I do it? Maybe 4th Street, that side, a similar car which in your definition is identical or similar. Okay. And comparable companies means guideline publicly traded. So this is what you are listed. So you have some listing in the market, you take that, especially gold prices, silver prices, copper prices, oil prices. Okay. So land and land prices. So all these are guideline publicly available. So you take that list. So which cannot be disputed. But with respect to transaction method, you need to actually do some homework. You need to actually collect a lot of inputs, information. So their market approach actually gives you clarity. The standard gives you the prescription, how you have to actually collect the evidences and then fix the transaction cost. Okay. So this is your list of approaches, methods given in the IVS, comparable transaction method, otherwise called guideline transaction method, guideline publicly traded method. You have another approach called anecdotal, it's called rule of thumb method. Then you have the DLOC, control premium, all those stuff. This DLOC control premium, they have discussed in serial number 8 of your syllabus. So since it is not forming part of my discussion today, I'm not discussing that part. Maybe if you have any questions you want me to ask, you can ask apart from the syllabus. So the last 15 minutes or 20 minutes, I'll keep it open to ask questions. Good. Now, this is your meaning of comparable transaction method. May I now request Atul Jagnani? Atul Bhai? Yes, Mr. Atul. What happened?
Hello.
Yes, Mr. Atul.
Yeah, the comparable transition method, also known as.
So you
Hello.
are from which part of India?
Hello.
You are from
Delhi. I am from Delhi.
Delhi. Very good. Can you read this para 30.1, please?
Yeah, the comparable transition method, also known as the guideline transition method, utilize information on transition involving assets that are the same or similar to the subject asset to arrive at an indication of value.
Same or similar involving asset transaction. So now, Atul Bhai, can you read this question?
The comparable method, also known as the dash, utilizes the information on transitions involving assets that are the same or similar to the subject asset to arrive at an indication of value.
So Atul Bhai, can you tell me which is the right answer? Just now you read. Comparable transaction is otherwise called as?
Guideline transition method.
So now which is the right answer?
A, guideline transition.
Is otherwise called as. So guideline transition.
A and B.
Very good. A and B. No A and B. It is only A. 16A. Okay. Good. So it is called guideline transaction method. Good. Now let me put another question. What is guideline publicly traded comparable method? Now, Atul ji, can you read again? Atul Bhai. Yes, Mr. Atul. What happened?
Hello.
Yeah, please go ahead.
The guideline publicly traded method utilizes information on publicly traded comparables that are the same or similar to the subject asset to arrive at an indication of value.
So please be careful. This guideline publicly traded utilizes guideline that is publicly traded comparable. That means there is a list that are same or similar to the subject asset. The asset which you are going to value is called subject asset. The asset value which you are going to take is called the comparable asset. And that is a publicly traded comparable. So now let us understand what is this particular question. Now can you read this question, Atulji?
Yeah. Which of the following method or market approach utilizes information on public traded comparables that are the same or similar to the subject asset to arrive at an indication of value?
So this is your definition of your guideline publicly traded method. So therefore,
Right.
17B, guideline publicly
Right.
traded.
Public trading method.
Okay. So this is your definition. The definition itself has been asked as a question.
Right.
So not that every time AOTA will be an answer. Okay. Good. So now, let me ask my other friends, Shailendra Pandey. May I request all of you to kindly switch on your video. And Shailendra Pandey alone, please unmute your audio also. Yes, Mr. Shailendra Pandey. Shailendra. What happened, Mr. Shailendra? Okay. So maybe we'll ask another friend, Mr. Shubham Jindal. May I request Mr. Shubham Jindal?
Yes, sir.
Yeah, can you read this para? This is a very, very important para where it will give you the difference between transaction method and the guideline comparable method. So transaction method and guideline comparable method are publicly traded comparable method. So it will give you the fundamental difference between these two. And these 3 points are the fundamental difference. Now, yes, Mr. Shubham, you can go ahead.
This method is similar to the comparable transactions method. However, there are several differences due to the comparables being publicly traded as follows. First one being the valuation metrics or the comparable evidence are available as on the valuation date.
So that price will be available, that list is available. Gold prices as on 18th of June 2020. Is it possible to take? Yes, it is possible to take because it is available.
Yes.
Second
is detailed information on the comparables are readily available in the public filing.
So it is not that I will take a printout from my laptop and then give it to you. It is available in public. You can, whatever I give, that is also can be verifiable. On this particular date, if I give a number and it is a comparable publicly traded, it is verifiable. And what is the third one?
Any example of the same?
Yes.
Any example for the same? For the
very simple. You are valuing a particular private limited company, and a private limited company is very similar to a public limited company, which is a listed company, where the listed company is having 60% market share. My private limited company has only 3% market share. And one of the 10% shareholder, he wants to actually exit. So non-controlling interest, the controlling party, they want to buy that non-controlling interest. So you want to actually value that. So I will take a comparable company's price and then do the adjustment. Plus and minus, I will do the adjustment. For non-controlling interest, I will do the what do you call it as the discounting? What is that? Discount for lack of control. DLOC I will subtract. From where? From the market price. And then I will arrive at the price. That price will be the market approach. And how I am using, which method I am using? Guideline publicly traded comparable method. Remember, very, very important. Please remember that doing an adjustment is a sin in accounting. Doing an adjustment is a sin in accounting. Not doing an adjustment in valuation is a sin. Not doing an adjustment in market approach is a sin. So when you take the comparable data as value, you have to do that value upward or downward depending upon. For example, the data what you have taken is a controlling interest data, and the subject data is a non-controlling interest. Then you have to apply discount for lack of control. If it is quite reverse, you are taking the value of a non-controlling interest comparable data, but you are going to do the valuation of a 100% you want to actually buy out a particular company for merger purpose. Then it is called controlling interest you are going to take. Then you will actually add premium. What do you call this? Control premium. You will add to that price. So therefore, all this stuff are practically being adopted. So now can you read this C part?
The third part is the information contained in public filings is prepared under well understood accounting standards.
Yeah, so their presentation of financial reporting is under IFRS or IND-AS, so therefore it is comparable. And please read 30.11, it's a very important point.
The method should be used only when the subject asset is sufficiently similar to the public traded comparables to allow for meaningful comparison.
So that is very important. So in your valuation report, you have to give one paragraph. Why I adopted guideline publicly traded method? Because my subject asset is sufficiently similar. Point number 1, point number 2, point number 3, point number 4. We have to give. Because of this, it is sufficiently similar. I am taking it. Now, please answer this question. 19. Please read Shubham ji.
What are the differences due to comparable being publicly traded between guideline transactions method and the guideline publicly traded method? First is the valuation metrics. Comparable evidence are available as on the valuation date. Second is detailed information on the comparables are readily available in the public filings. Third, the information contained in public filings is prepared under well understood accounting standards.
So,
D, all of the above. I think it's D, all of the above.
All of the above. Just now you read. So because we just now saw that being comparable as follows. Okay, 30.10. Okay. Good. So now let me take you to the next one. This is called rule of thumb. So may I request Praveen Garg, Mr. Praveen Garg.
Yes, sir. Yes, sir.
Yeah, can you read this para number 30.10 IVS?
Other market approach considerations. Anecdotal or rule of thumb.
Now, what is the synonym of anecdotal? Can you read from this right hand side, that birds?
What are other words for anecdotal?
Anecdotal.
Anecdotal. Sir, ये समझ में नहीं आ रहा, बड़ा छोटा है.
Anecdotal, anecdotic,
unreliable, based on
hearsay,
unscientific, narrative, and trustworthy, informal.
This is also a market approach. Who says? Standard says. Now please read.
A rule of thumb, valuation benchmarks are sometimes considered to be a market approach. However, value of indications derived from the use of such rules should not be given substantial weight unless it can be shown that buyers and sellers place significant reliance on them.
So, anecdotal is considered to be, for example, when both the buyer and seller, they are willing. For example, there is a restaurant which is coming for sale. So, nearby I will actually get some inputs. and buyer is also willing. Seller will say, see, har mahina I am making a turnover of 20 lakhs. So 5x you have to actually give me as consideration. No, 5x is zyada hai. I'll only give 2x. So 40 lakhs. So they will actually negotiate and will come between 3x or 3.5x. Like that they will come. So this is an acceptable norm? No. This method is called as, what we call it as the turnover multiple. It's called as turnover multiple. And this is called rule of thumb. And this rule of thumb is acceptable. Such rule should not be given substantial weightage unless both the buyer and seller place significant reliance. So you have to bring down in your valuation report saying that buyer is also willing for this method and seller is also willing for this method. So you collect evidences from market. What is the kind of X times of the turnover that is actually being traded? So that is an anecdotal. Now, terminal value. This is in your study material for income approach. So where they say discounted cash flow, terminal value, present value, adjusted present value, internal rate of return, cash flow analysis, end of the year, mid of the year convention. So all this stuff. And I must make one observation, very, very important here, where IBS, especially IBS, I must say, please look at this. So here, this is income approach. This is cost approach, income approach. In income approach, this is with respect to discount rate. This is with respect to the terminal value. Please look at it. In terminal value, Gordon growth model, this is the only one single line they are given. Pathetic. Constant growth model assumes that asset grows at a constant rate into perpetuity. That's all. Over. Khatam ho gaya. But please look at what the ICA RVO 103 para 77, 78, 79 speaks about Gordon model. So they speak about the constant model. They also speak about the variable growth model. But here nothing has been mentioned about it. The only method that has been mentioned is constant growth model. Variable growth model, they have not discussed at all. Even the standard, international valuation standard. So I am not demeaning one standard. I am not actually appreciating one standard. I am only giving you a comparison that you have to take the best from both the standards. There are certain places where IBS is very good. ICA RVO standard has ignored it. They have considered it. There are places where IBS has not considered certain aspects in detail, but ICA RVO has considered it. So those aspects you have to take. And I must say that with respect to Gordon model, dividend discount model, ICA RVO 103, they have dealt in greater detail. And may I request Vishwanath Agarwal, Mr. Vishwanath Agarwal.
Yes, sir.
Can you read the para 77, please?
Gordon constant growth model. The terminal value under this method is computed by dividing the perpetuity. Maintainable cash flows.
Wait. Mr. Vishwanath, the perpetuity maintainable cash flow is this D1. Yeah, and D1 दिखता है ना, P0 equal to D1 divided by KE minus growth rate.
Yes.
वो D1 ही perpetuity maintainable cash flow है with, please.
With the discount rate as reduced by the stable growth rate.
Discount rate KE है as reduced by minus the stable growth rate G.
Growth rate.
So a formula they are giving it in a horizontal English. Now, horizontal English, this entire formula is explained. Now, variable growth model. Vishwanath ji, boliye.
The constant growth model assumes that the assets grows or declines at a constant rate beyond the explicitly forecast period, whereas
This is what they have also mentioned here. Can you read this sentence again, Vishwanath ji?
The constant growth model assumes that the assets grow or declines at a constant rate into perpetuity.
Up to this at a constant rate. So this para 79 and para 50.23 is both the same. After this they continue. Please continue. Whereas from this
whereas the variable growth model assumes that the assets growth or decline at variable rate beyond the explicit forecast period.
The two-stage growth model, three-stage growth model is what they are explaining here in a horizontal sentence. Now let me ask you this question. I'm sure you can actually answer this. Vishwanath ji, can you read question number 20?
The terminal value under this method is computed by dividing the perpetuity maintainable cash flow with the discount rate as reduced by the stable growth rate.
Which is the right answer? A, B, C, D.
Number 1, Gordon constant growth model.
Gordon constant growth model. Perfectly correct. Now, Vishwanath ji, can you read the next question, please?
This method is assumed that the assets growth or decline at a constant rate beyond the explicit forecast period.
What is the right answer?
Number 1,
constant growth model, because it is constant. Now the same sentence extended, para 79 extended. Please look at this. Which method is assumed that it is a variable growth rate beyond explicit is variable growth model. So 22B, but 21 it is A, 20 also it is A. Okay, good. So now let me take you to this question. It's a very, very important question. Now let me ask Rajesh Gupta, Mr. Rajesh Gupta.
Multiple approaches.
Now I will just give the background. I'll just give the background, then you can read. We just saw cost approach, market approach, income approach, all this stuff. Can I adopt more than one approach in my valuation? Number 1. Number 2, or I will adopt only one approach. In that there will be multiple methods. I will adopt 2-3 methods in one approach. Can I do so in my valuation calculation? 3. If I do so, how do I arrive at or how do I conclude the indication of value? So for example, I adopt 3 approaches. Should I have to take give weightage for all 3 and divide by 3? Or one approach I take and in that there are 2 methods are there. Should I have to give 50% weightage and divide by 2? Should I have to do that like that? So what is the conclusion? How do I conclude? That is very, very important point. Which if it is only one method, not an issue. Multiple approaches when you adopt. This is where I wish my good friend Rajesh Gupta ji, please read this.
Multiple approaches, only one method. Valuers are not required to use more than one method for the valuation of an asset, particularly when the value has a high degree of confidence in the accuracy and reliability of a single method, given the facts and circumstances of the valuation engagement. Multiple approaches.
So what is the first paragraph they say? The moment you are having confidence and accuracy, reliability in a single method and you are concluding that in your report, don't go for other methods and all. Do in that same method. But you find that each method is suitable, but you are not in a position to actually place reliance on 100% reliance on one method. Then what to do? This para is very important. Please go.
When we approach multiple approaches, because you are not confident in the accuracy and reliability of one method.
No, it is not like that. Para 1 is very clear. Para 2, please read this. Maybe I'll answer your question.
Multiple approaches. However, valuers should consider the use of multiple approaches, and more than one valuation approach or method should be considered and may be used to arrive at an indication of value. particularly when there are insufficient factual or observable input for single method to produce a reliable conclusion.
This word is very important. You don't get facts. Insufficient facts are there to have a reliability on a single method. So you are only going by some assumptions. So then what should I do? This para is very important para.
Where more than one approach and method is used, or even multiple methods within a single approach, the conclusion of value based on those multiple approaches and or methods should be reasonable.
Should be reasonable. So you reason out. When you reasoning out, you are actually knocking out the other assumptions. Why you are considering method 1, method 2? Because you are assuming 1, 2, 3. So you reason out based on those assumptions itself, based on the available circumstances and situation, you reason out, yes, I am reasoning method A is the best method for the following reason, and nobody can question you because beginning what is value? It is estimate and it is judgment, and your judgment can be right or wrong. That is not the question here. You are reasoning out. That is the method you have to follow as a valuer. Whether the method what you follow, whether it is right or wrong, nobody can predict future. Please be clear. It is an estimate and it is a judgment. And your judgment, you cannot do it inky pinky ponky. My father is a donkey. You cannot choose out of the 3 methods one. If you are choosing one method, you need to say Karan 1, Karan 2, Karan 3, reason 1, reason 2, reason 3. Because of that, I am doing. Very good. You are a valuer. Please go ahead.
And the process of analyzing and reconciling the differing valuer into a single conclusion without
averaging.
Averaging should be described by the valuer in the
report. So averaging, you are not a calculator. You are a valuer. I repeat, you are a valuer. You are not calculator. I will do 4 methods divided by 4. No, absolute absurd. Standard doesn't allow you to do the standard, doesn't prescribe you that. All the 4 method, I will do a jamela, I will do a khichdi, and then I will give. No, you have to reason out. I am not able to reason out, then you are not a valuer.
Just to interrupt here, like say the 4 values have been arrived by using 4 methods.
Name.
Okay.
When he is asking question, name.
Yeah, this is Sanjay here.
Sanjay again, please. Yes, Mr. Sanjay.
Yeah. So when you have taken 4 method approach and you arrived on 4 values, and values are nearly same, and when you look at the majority of the values which you have arrived, say out of 4, 3 values are similar, and the reasoning is more or less similar. The reasoning is also not much of the difference. So in that case, like which value you are going to take it?
Point is, then you have to zero in on one. Why you are taking multiple methods? It is not required.
No, even in say 4. No, just
why you want to do that method? You need not do it.
No, like the values in other 3, the other 3 values are nearly same. Like is say the margin of difference is around 10% or 8% or 9%. In that case, like which one will be taken, the higher one or the lower one? In that case,
you say why whichever higher you want to take, you take it, or whichever lower you want to take it, you take it. You say I want to go by pessimistic, so higher I will not take, lower I will take. So the other method I am ignoring. You reason it out. I want to be optimistic, so I'm taking it. I want to be pessimistic, I'm taking this. So I will leave it, even though the gap is very less. That doesn't matter. But reasoning out is the matter here.
Right. Thanks.
Yeah. So that is where valuers valuation report has uniqueness. Their strength is there. The strength is your reasoning is the strength. Now, can you read this question, Mr. Who was Amardeep Singhal?
Yes, sir.
Yeah, please read this question 23.
Where more than one approach and method is used, or even multiple methods within a single approach, the conclusion of value based on those multiple approaches and or method should be correct, exact, reasonable, accurate.
Which is correct? Just now we saw
Reasonable.
Reasonable.
Yeah.
Reasonable.
Reasoning out. That is why I said reason out, reason out.
Reasonable.
All the four will look very, very close. Examination, that is a problem. It is not that we read, I am ready with the answers. No. There, they don't test your, what do you say, your subject knowledge. They test your actually memory. They test your depth, in-depth clarity. That is very interesting in this exam. So this is the comparison, and I want to make one particular comparison. Please look at this. Equitable value and participant specific value. This is what I want to actually discuss one. And this is the comparison between an equitable value and participant specific value. Remember, I was discussing about one particular interesting aspect that a factory nearby, neighbor factory is coming for sale. The next compound factory is coming for sale. There are two bidders for it. You are one of the bidder, and next city, another buyer is a bidder. Now, please look at this word. Identified knowledgeable willing parties. They are called equitable value. As per the meaning of IVS 104. Participant specific value is the estimated value considering the specific advantage and disadvantage either of the owner or identified acquirer or identified participant. Because you know the plus of it and minus of it also. So what is that particular factory nearby? What are the disadvantages to that, advantages of having it? You know much better about it. So that is why the valuation for you will be different compared to the valuation for the next city buyer. So the participant specific value, A is a buyer who is a neighbor to that factory. B is a buyer who is actually a resident of a maybe nearby city. So the valuation depending upon both need not be same for both. That is why it is called equitable value. Otherwise called participant specific value. Please answer this question. Very interesting. What is the estimated value of an asset or liability considering specific advantages or disadvantages of either of the owner or identified acquirer or identified participant? Is it fair value? Is it intrinsic value? Is it special value? It is participant specific value. So which is the right answer?
Participant specific.
Yeah. Called participant specific. Okay. Good. So now, Habu. This is a very, very interesting question. You have to be very careful here. You have to be very careful. So please understand this question. Okay, careful. Now, what is Habu? Highest and best use. This is one of the premise. You have various premise. Highest and best use is one premise. Going concern is one premise. Orderly liquidation is one premise. We saw various premise. One premise alone I am taking. Habu is from a participant perspective. Generally, please look at this. This is ICRVO standard. Non-financial asset. Please look at this word. Non-financial asset. What do you mean by non-financial asset? Like land, building, plant and machinery, furniture, fitting, computer, peripherals, electrical items. All these are non-financial assets. So all your fixed assets are all non-financial assets. And depending upon, for example, you are going to sell a generator. Okay, a diesel generator, you want to sell the old generator and you want to buy a new generator. So there are 3-4 type of buyers, or 4 buyers are there. Each buyers, based on their alternative, they will be willing to actually pay more or pay less, depending upon their use. For example, the buyer who is actually want to actually repair that particular or modernize it, or he will actually overhaul it and he wants to use it. Maybe he'll be interested to pay more also, because more benefit he will actually derive from it. So, although the concept, so it is the use of a non-financial asset that would maximize the value of an asset or group of assets within which the asset would be used. Please remember, Abu is a concept applicable only with respect to asset, never with a liability. Highest and best use only with respect to an asset. Generally, fair value is a definition related to asset or a liability. But Habu is a concept related only with asset and that too with the non-financial asset. But please look at this. Although the concept is most frequently applied for non-financial assets. So please answer this question. Habu concept is most frequently applied to financial asset or non-financial asset or for both A and B or none of the above?
Non-financial assets.
Non-financial assets.
Non-financial assets.
Rajesh Gupta says both A and B. So Rajesh Bhai, you are not correct. I will come to your question. Please wait. Okay. That is why I said this is a very, very tricky question. Very tricky. This is, I will not say this is a gold mine question. This is a land mine. You have to step carefully. The wordings are very careful. Most frequently used for a non-financial asset. Most frequently. Now, please look at this. There may be circumstances. There may be circumstances where Habu use of financial asset may also be considered. May also be considered. Now, please answer the next question. There may be circumstances where highest and best use of which asset needs to be considered? Is it financial asset or non-financial asset or both A and B?
Financial asset. Financial asset.
The wordings actually will change. The approach. So the moment the Habu means don't immediately put the non-financial asset. So they play with words. They play with words. And it is not the word they actually use their brain. It is already there in your IVS 104. So please be careful. So IVS 104 gives that alternative. So I will say IVS has thought in a much macro perspective, but ICRV was very, very micro. They have only identified a non-financial asset only. Now this question is very interesting. This question is taken directly from definition. Highest and best use is the given in ICRV 101 definition of Habu. So is it financial asset or non-financial asset? Which is the right answer here? For 27, B is the answer. For 25, B is the answer because most frequently applied. For 26, needs to be considered. So therefore, financial asset is the answer. Here it is a definition of Habu. So therefore, non-financial asset as per ICRV 101. So please be careful when you are. And this is a definition of market participants. Okay. This is a definition of market participants. It is taken from ICRV 101 definition 6.24 para. Market participants are willing buyer, willing seller in the principal market or the most advantageous market for the asset or liability that are all the characters. Independent, knowledgeable, able to enter, willing to enter. So all the four. Now please answer this question. Who are market participants? So willing seller is there, willing buyer is not there, so C is not the answer. B, willing buyer is there, so willing seller is not there, so D is not the answer. So answer is either A or B. So which will be the right answer? I am not going to tell.
A is the answer.
Why B is not the answer?
It says only asset.
Liability is not there.
Yeah.
Okay, so to that extent, you should be, you should write. Don't read these kind of definition. Don't read. Use a pen, note down, and write. Write down. Only then it will be registered in mind. Now I'm going to ask you another question. The same. Which of the following is not a characteristic of market participant? There are 4 characters: independent, knowledgeable, able to enter, willing to enter. Which of the following not a character? They are able to enter into a transaction, willing to enter into a transaction, dependent of each other. They are knowledgeable. So out of A, B, C, D, which is not a character?
C.
C, sir, C.
They are dependent to each other.
Why that is not an answer? What should be the character then?
There are three things for this market participants.
Yeah, they are
able to enter into a transaction. They are willing to enter. They are knowledgeable, having a reasonable understanding.
And they must be independent also.
Yes.
So here the word is called dependent. So therefore, that is the wrong answer is the right answer. So generally, the negative Fine. Negative type of questions, you need to be very careful because all the other three are the right answer. Only one is a wrong answer. And the wrong answer is your mark for you. So it is never always right will fetch you the marks. Wrong also will fetch you the marks. Okay. Okay. Yeah, this question I'll try to solve. Please wait. Maybe I'll try to, this 31 also I'll try to solve. I'll finish this market also once again. Please remember that these three markets are, you need to understand what is meant by principal market, active market, and most advantageous market. Now, all of you go to market daily to buy vegetables. Okay. I don't say that all of you go. I go. I sometimes go and I buy vegetables. Where I will go to buy vegetables? I'll go to the nearest market where everybody will buy, and that is called a retail market. And retail market, there will be transaction will be there, more transaction. So that is why it is called an active market. I go to the vegetable market. Now, say there is a function in your family. So you are invited, and in the COVID-19 circumstances, you can only invite 50 people. So 50 people are coming to your home. So will you go to the same active market and buy the vegetables? Or will you go to the principal market where wholesale market the vegetable is there? There you will go and buy vegetables. I will not go to active market. I will go to the principal market. Because principal market is where the greatest volume is there. Please watch this. Volume, both are volume only. Here transaction volume. So in active market, 200 people, 2000 people will go and buy. In principal market, only 100 will go and buy, but volume will be high. Greatest volume. Because it is bulk. It's called principal market. From principal market only, active market will survive. If principal market is not there, active market is not there. Okay. And most advantageous market is the market when principal market is not there, you will go for most advantageous market, and where you will maximize what you want to sell or minimize what you want to pay when you have to transfer a liability or settle a liability. So that is called the most advantageous market. So maximize, minimize related to most advantageous market, greatest volume related to principal market, transaction volume related with active. These are the catchwords. Note down, write it down. Seeing will be gone. It will go above your head. Okay, like Mumbai floods, it will go. Now, please answer this question. Which is the market that maximizes the amount that would be received to sell the asset, or minimizes the amount that would be paid to transfer the liability after taking into account the transaction cost and transportation cost? Subham Jindal, Anju Jain, most advantageous market. Okay, now let me answer another question. Which are the market that routine?
Most advantageous market.
Active market.
Now, which is the market that routinely experiences high transaction volume? Transaction volume.
Active.
Huh?
Active market. Active market.
Okay. So please be careful with this. Okay. What is active market? What is principal market? What is most advantageous market? Okay. So I think some of the parts I have discussed. Adjusted present value, maybe if time permits, I'll try to solve few questions. Okay. I'll try to solve this particular question first. Okay. So here the question is 31. Following are the projected cash flows to equity and to firm over the next 5 years. So 1, 2, 3, 4, 5 and terminal value. Okay. Okay. We have cash flow to equity, FCFE. Your FCFE is 250, 262.5, 275.63, 289.41, 303.88. Terminal values 3946.50. Yes. So this is your FCFE. Yes. Now, terminal values at the end of FI. The firm has a cost of equity of 12%. So FCFE, you will always discount with 12%. And you have FCFF, which is a FCFE plus interest into 1 minus tax rate. So 250 plus 90. So I hope all of you will know this formula. FCFF is equal to FCFE plus interest into 1 minus tax rate. Okay. So I'll use this also in my calculation next. So 12% I will use as a discounting factor. So the firm has a cost of equity 12 and cost of capital, which is called the overall cost of capital or WACC, weighted average cost of capital is 9.94. So 9.94 I will use for the FCFF and 12% I will use for discounting FCFE. So 1 divided by 1 plus 12%, the whole power 1. So let me do it for 5 years. And the terminal value also, I will actually use the same present value factor. So that is also the 5th year. And my present value is multiplying all this. So this is your present value. So 3224. So this is where the firm has a cost of, answer the following question. What is the value of equity in this firm? This is the value of equity. The value of equity is 3224.37. So 3224. So 31A is 2. Now let's find the value of the firm. So then you have interest into 1 minus tax rate. So INT into 1 minus tax rate. So what is it? It is 90, 94.5. And 99.23, 104.19, 109.40, and you have the terminal value. So terminal value is actually 6,000 given totally. So let me take the 6,000. So what is your FCFF? So your FCFF is actually FCFE plus your interest into 1 minus tax. And that is what is given in the question also. 340, 357 is already there. So that you have to discount with 9.94%. Okay. So it is 9.94%. You have to discount this and arrive at the present value. I'll give you 4 minutes time to actually get the answer. Okay. So can you get the answer, all of you? I'll keep the screen freeze like this. Hope all of you got the answer. But anyhow, let
309.26.
so your present value is this. $5,149.16. So what is the value of the firm? 5,149. So C, 31B is C. So this is your value of the firm. This is value of equity, this is value of firm. Good. So that is with respect to your 31, question number 31. Market we have done. I'll now take you to question number 30. We just now did a question on this variable growth model. So I'm trying to actually explain with the variable growth model. Please look at question number 30. ABC has paid a dividend of 4 this year. So I'll take you to question number 30. Yeah. So they have paid a dividend of 4 this year. Okay, so year. I'll say 0, 1, 2, 3, 4. So dividend 4 this year. This is 4. Assuming a growth of for the next 3 years of 13%, 10%, and 7%. So growth. %13% for the first year, 10% for the second year, and 7% for the third year. That is the first stage, and a stable growth of 4% thereafter. That is called constant growth model. So this part is actually stage 1, and from 4 onwards, it will be stage 2. This is stage 1 and stage 2. So the first year dividend will be the current year dividend into 1 plus growth rate, that is 13%. The second year dividend will be first year dividend into 10%. Third year dividend will be second year dividend into 7%. Fourth year dividend will be third year dividend into 4%. So this is your fourth year dividend. So now calculate the cost of capital. Wow. Using a 2-stage growth model, dividend distribution model, if the value of the firm is, now the value of the firm just now we did, that we will have this FCFE plus terminal value. So we need to find, we need to find the terminal value here. So what I will do, the free cash flow of equity for the first year is this, second year is this, third year is this, okay. And we know the formula. What is P0 is equal to D1 divided by KE minus growth rate. So this is your formula. Now instead of P0, I will say it is P3. P3 is equal to D4, dividend for the fourth year, divided by KE minus growth rate. Okay, so what is your D4? What is your D4? We have to find D4. We have already calculated it. This is your D4. 5.5328 is your D4. What is cost of equity? What is your growth rate? Cost of equity, we have to find. Growth is actually 4%. So what is P3? So P3 is equal to D4 divided by KE minus growth rate. Now let us presume 10% is your cost of capital, or even you can call it as 8% also as your cost of capital. Let me try for 8%. Okay. So if it is 8% is your cost of capital, what is your P3? Your P3 will be D4 divided by KE minus growth rate, 138. And the 138 will be your terminal value. Okay, I'll keep the terminal value. Like the previous problem, what we did. Very similar to the previous problem. Okay, so what I will do now, this is D1, this is D2, this is D3, this is terminal value. Terminal value of the year 3. So I will use the same present value factor. So 1 divided by 1 plus R, the whole power 1. Yeah. So for second year and third year. And I'll use the same present value factor. So the same similar problem what we did now. Only thing is this is a reverse question. So what is my present value? Multiply 4.2 into this. And what is your question is says, what is the value of the firm? Okay. So what is the value of the firm? Value of the firm or value of equity, I must say, because it is dividend, it should be treated as value of equity. Okay. Or you consider this as FCFF, okay, rather than calling it as FCFE. So what is your value of the firm? Sum of this is, add this, 122. But the question says, if the value of the firm is 61.5, so this is 61.5, then what should be your cost of capital? So what I will do, I'm now going to reverse. This step is very, very important. The step is very important. Please look at the step. Ready, 1, 2, 3. I'm going to, I use a goal seeker. Here I'll call it as 61.5. I will fix this as 61.5 by changing F1. Okay. See, everything gets changed. So this is actually, what is the rate? You are getting 11.94. So your value of the firm and your cost of capital. Your value of the firm is 61.50. Then cost of capital is 11.94. Now, if your value of the firm is 71.5, the same model I use. This is 71.5. By changing your cost of capital. Wow. So if it is 71.5, everything gets changed. It is 10.83%. So as your cost of capital gets reduced, the value of the firm increases. So naturally for 81.5, what will be it? For 81.5, it will be 10%. So for 91.5, I don't want to do it myself. I leave it to you. You can try yourself. Okay. So guys, It's almost 12:38. Anybody have a specific questions up to this? You can ask me.
Sir, your syllabus is 7 marks, sir. So you can take much time, sir.
Okay, I'll do one more problem. If that may be a similar problem. There is one more topic in your syllabus called as end of the year and mid of the year convention. That can be a one.
You have raised hand. Do you want to say something?
Ji?
Shubham Jindal ji ने hand raise किया हुआ है, but he is not saying something. हाँ शुभम जी बोलिए.
Sir, it was earlier. I have now cleared.
Okay.
Okay, now look at the same question number 31. I am making one small twist here. This is the mid-year or end of the year convention. Now, what is the meaning of this is, your questions, this is the same question, what we did now. Practically speaking, will you get the 250 rupees at the end of the year? No, over a year only you will get, at the beginning till end, average. So therefore, for convenience, we are actually using as end of the year and discounting. So the better approach is using a mid-year convention. So what do you mean by mid-year convention? I will not use first year, second year, third year, fourth year, fifth year. I will say this is half year, 1.5 years, 2.5 years, 3.5 years, 4.5 years. And then I will do it. So he says the firm has same cost of equity. Find the value of equity and value of the firm using mid-year convention. So let us try the same 31 question as 39. Okay. So I'll try this as 39. The same 31. Okay. So let me actually, this is the question. So what I will do, instead of 1 year, modeling is same. Instead of 1 year, I'll say half year. I'll say 1.5 years. I'll say 2.5 years. I'll say 3.5 years. I'll say 4.5 years. Wow. So what was your answer previously? 3224. Now the valuation has gone up. Now just imagine this is crores. 3412 minus 321. Just like that, 187 crores. Those of crore valuation goes up just by changing the convention from year end to mid year. So I need not tell you what valuer can do much. Okay. Same is the case with this. So what was your, it was only 5,149 crores. Now it has become 5,399 crores. So what is the difference? So I need not tell you what it would have happened in Reliance valuation. So 250 crores, just like that, the valuation is gone. And this is an acceptable norm. Now let me ask, Shailendra Pandey. Why Shailendra is not answering from the beginning?
Chalendra ji, इसका morning में phone तो आया था at 8 o'clock. Morning में he's going that some emergency comes with his mother. So
okay, Mr. Jatin Vijay, Mr. Jatin.
Yes, sir.
Can you read this particular slide alone?
So mid-year versus end-of-year convention. The end-of-year convention assumes each cash flow is discounted at full year. Year one is discounted by 1 full year, year two by 2 full years, and so on.
This is what we did, the old question, the 31. So the 39, what we did, I am coming to second para. Yes, Mr. Jatin.
The mid-year convention discounts each cash flow by half a year. Year one is discounted by half a year, year two by 1.5, and so on.
Sure. The concept, please.
Yeah, the concept here is we don't know exactly when these cash flow come in. Technically, with the end of the year convention used, where we discount the cash flow by the end 1 year in full, we are assuming the cash flow is coming one lump sum at the end of year. So note, generally the terminal value is calculated for period end. Mid-year discounting does not apply to the terminal value.
Yeah, very important. So therefore, in this particular question, terminal value I have taken mid-year. Can I use that mid-year for terminal value? No. So terminal value I have to use 1 divided by 1 plus R whole power 5. So that actually considers, please look at this, even though the valuation was more, terminal value, it has reduced it. Same is the case here also. So 1 divided by 1 plus R whole power 5. It is not 4.5. It is 5. Naturally, valuation will come down. See, gap is now 68. It was instead of 250 crores.
Sir,
But
this is Amar.
value is very important. Okay. Terminal value year end. But all the other cash flows, mid-year.
Sir, this is Amar.
Huh?
I have a query. Sir, this is Amar. I have a query.
Yes, Mr. Amar, please go ahead.
Sir, in case of terminal value, why can't we take mid-year?
This is called as terminal value. Only at the end of that particular horizon period only you are arriving at. Second, how do you arrive at the terminal value? Terminal value you arrive using the dividend discount Gordon model, and that model says P0 equal to D1 by KE minus G, or P3 is D4 divided by KE minus 3, and this is actually horizon period end. So that is why terminal value will not be mid-year convention. So this, even if you adopt a mid-year convention in your calculation, in your valuation, you have to make that point very clear that the cash flows for the 5 year or 6 years or 7 years, whatever you have done, I am using the mid-year convention. But for the terminal value, mid-year convention is not used. It is only year-end convention used, and dividend growth model or whatever stuff you have adopted has been used. You have to mention that in your valuation report clearly. So if you wish this spreadsheet to be shared, you can tell I'll share this spreadsheet. Else you can calculate on your own.
No, please share, sir.
Sure.
Please share, sir.
So now thank you very much for the wonderful opportunity for given to me by each and every one of you.
Sir, will you
very patient.
So though we have noted keywords from your slides, previous slides, so will you share those definition slides of market approach?
You want the slide also to be shared?
Yeah,
yes, sir. Both slides.
I will do both the spreadsheet and slide. Both I will share in my blog. Okay. This is my blog. Yeah. So this is my blog 3spro.blogspot.com. So in this blog, I will actually upload and I'll give the link. Maybe by today afternoon, I will do it. Maybe today evening, you can go and download. Okay.
And this same will be shared in the Google Drive.
Yes. So thank you very much, and over to Vijay Bhai for his concluding remarks.
Thank you. Thank you, sir.
Thank you.
Each participant will be in
request any one of the participants to share their views or reviews, reflections about this 3-hour program. Anyone who want to actually volunteer to share your views? Shailender, Atul, Amar, Praveen.
And please share any positive or negative input. I know no negative input will be received today or even tomorrow itself.
We are open for critical review also.
Yes.
Oh, this is Sanjay here.
Yes, Mr. Sanjay.
Yeah. I found the objective part, like the objective question part, what you taught us. It was an excellent way to really read and then solve the questions in the examination. Because when I was preparing for competitive examination long back in early 90s for the civil services, the similar approach I adopted, what you adopted while teaching us. So it's a very excellent way, means to grab anything else. Really good.
Thank you. Thank you.
अरविंद जी कुछ इनपुट्स दीजिए अपनी। अरविंद जी आप अनम्यूट कीजिए, अनम्यूट।
Yeah. Please go ahead.
It was interactive and learning session, sir.
Sir, we have 3 participants from Big Four. I think Praveen ji भी Big Four से हैं previously, Amardeep Singhal and Jatin ji. All the 3 have Big Four background.
विजय वर्गीय जी, आपका कुछ comments है?
Yes, sir, it was very good. I came to know various things about through this, and you taught us in a very nice manner with examples, and the question you selected are also very nice. So I found it very interactive and it's very nice for us.
Thank you.
मैं सर के बारे में एक चीज और बता दूं, सर is regularly taking classes for passing this valuation exam and he has launched 8th batch free of cost. I think sir ये weekly होता है, 5 days a week.
Yeah. I'm starting next week 11th, so that we can also circulate to our participants to enroll for that.
Yes.
It will be a very fast track, and every day morning 8:30 to 9:30. You have to be alert, not even a second it will be possible. You have to be very, very alert. And the entire valuation, 73 marks, I will be covering in 6 hours time. Provided if you are, if you have been very vigilant in this 50 hours, that 6 hours will be very productive for each and every one of you. And those of you who are willing to actually be part of that, there is a link which I will share it with Mr. I think already Vijay Bhai is having.
Yes, I have. I will share it.
Please register. It starts on 11th morning, 8:30 a.m. sharp. Sharp, yes. I mean sharp, 9:30 sharp, it will be closed. And not even a moment of second, you will get, okay, yahan, wahan. You can't go like just like that. You will be missing the bus. And okay. I'll be doing maximum MCQs and it will be power-packed exam-oriented session.
What is the fees, sir?
Fees is your 100% participation.
Okay.
सर वैसे 2 साल तक रीजनल काउंसिल मेंबर रह चुके हैं तो पब्लिक सर्विस पे तो हमेशा के लिए अवेलेबल हैं सर.
विजय जी प्लीज शेयर दैट लिंक.
With one request, each of you should share with your friends also and inform them and ensure that those who are willing to actually become valuers, they also form part of that. And yes. I must tell you that already 7 batches are over in that, and 800 participants across the country have attended that program, and 35 have qualified from that batch. 35.
सर हमारे आरयूएस का भी एक मेंबर एग्जाम पास कर चुका है इन दिस ट्यूसडे इटसेल्फ. वो सेकंड बैच के पार्टिसिपेंट से इमीडिएटली नेक्स्ट वीक में उन्होंने एग्जाम एनरोल कराया और पास हो गए. मिस्टर चेतन अग्रवाल औरंगाबाद.
So what is his name?
Chetan Agarwal.
Chetan Agarwal. Okay, right. Very good. So nice. So sir, you are concluding remarks, ji.
So thanks गोपाल जी, और आपकी तरफ से सभी पार्टिसिपेंट्स की तरफ से भी आपको मैं धन्यवाद करता हूं. एंड आई थिंक ऑल द पार्टिसिपेंट्स वर हैप्पी विद योर सेशन. एट द एंड ऑफ द बैच आई विल टेक अप द critical inputs from all the participants and will share personally. Sure. So that if any improvement is possible, we can improve. Thanks, sir. Now we are resuming after lunch at 2 o'clock. CS Anuradha Gupta ji will take up the next session for general law session, Stamp Duty, Companies Act, SFA, and the judicial pronouncement.
It will start by 2 o'clock?
Yes.
Okay.
Exactly 2 o'clock.
Okay.
Thank you. Thank you, sir.
Thank you very much, Vijay.
Thank you, sir. Thank you.
Thank you, sir.
Thank you, sir.
Thank you.
नमस्कार अनुराधा जी।
नमस्कार सर, कैसे हैं?
मैं एकदम बढ़िया।
बढ़िया। पहला सेशन कैसा रहा?
गोपाल जी का था तो वैसे ही अच्छा
अच्छा ही
रहना
होना
था।
था। डेफिनेटली डेफिनेटली।
और साउथ इंडियन होने के बावजूद भी जो हिंदी का वो पिक्चर करते हैं ना, बड़ा अच्छा लगता है।
उनका आप एक वो सुनना, कुछ समय पहले एक वैल्यूएशन की नेशनल सेमिनार हुआ था, उसमें उन्होंने बड़े अच्छे मूवीज के कोटेशंस डाले थे। आई विल शेयर यू समडे। बहुत ही इंटरेस्टिंग था।
अभी आज ही उन्होंने कहा, नमस्कार शैलेंद्र जी, सब बढ़िया। आपकी जो मदर के साथ हॉस्पिटल लेके गए थे, सब ठीक है?
हाँ सर, वो बीपी का इशू था, उसकी वजह से उनको चक्कर आ रहे थे, तो मैं दिखा के ले आया सर उनको।
गोपाल जी पूछ रहे थे शैलेंद्र जी कहाँ गए?
नहीं नहीं सर, वो आवाज आ रही है सर आपको मेरी?
बिल्कुल परफेक्टली।
हाँ हाँ, तो मैं बता रहा था वो बीपी का प्रॉब्लम था, मेरे को लगा कुछ और कंसर्न ना हो, तो इसलिए मैं उनको सडनली लेके गया डॉक्टर के पास। हाँ अभी ठीक है सर, आ गए, घर पे आ गए हम लोग।
हमारे साथ में अभी सिर्फ
नमस्ते मैम, शैलेंद्र पांडे।
हेलो सर। हेलो, अनुराधा गुप्ता है।
थैंक यू थैंक
यू। 1 2 3 4 5 6 7 दो पार्टिसिपेंट्स पेंडिंग है। So good afternoon all the participants for this second session of the day. और अब हमारे साथ फैकल्टीज हैं सीएस अनुराधा गुप्ता जी। She is a fellow member of the Institute of Company Secretaries of India since 2000. She is also the insolvency professional as well as registered valuer in the asset class of securities and financial assets. She is also the member of arbitration of NSE and BSE. हम दोनों ने जॉइंट में भी केस हियर किया है।
डेफिनेटली सर।
इसके अलावा आर्बिट्रेशन की मेंबर भी हैं, कॉन्सुलेशन बोर्ड जो फिक्की में है, और उन्होंने काफी क्लासेस डिफरेंट आरबीओ में, इंस्टीट्यूट ऑफ वैल्यूअर्स, इंस्टीट्यूट ऑफ कंपनी सेक्रेटरीज ऑफ इंडिया, आरबीओ, आईसीएआई, आरबीओ, दिव्य ज्योति फाउंडेशन, तो लगभग सभी आरबीओ के साथ में फैकल्टीज रेगुलर जुड़ी हुई हैं। और रिसेंटली भी क्लासेस किसी ना किसी आरबीओ में रेगुलर चल रही हैं, चाहे फिजिकल मोड में चाहे ऑनलाइन मोड में।
थैंक यू सर, थैंक यू सो मच।
तो आपको सेशन अटेंड करके अच्छा लगेगा। Even if you will feel any discrepancy or any suggestion, definitely it is most welcome, so that our RUs as well as Anuradha ji can improve. And she is also the member of Valuation Standard Board of All India Institute of Value Foundation. So welcome Anuradha ji. Now you are in charge of the session.
Thank you so much, sir. And first of all, welcome you all after I think you have a good lunch. अच्छे से लंच किया आपने, and I know थोड़ा सा स्लीपी से हो रहे होंगे, but I'll just
लंच अभी थोड़ी देर पहले खत्म हुआ, थोड़ा चल रहा था।
नहीं, I understand sir. थोड़ा लंच के बाद ना वो फ्लो जरा बनना मुश्किल हो जाता है, but definitely I'll try कि आप लोग के लिए थोड़ा सा इंटरेस्टिंग बना रहे। So first of all, as we know, जितना हमारा लॉ का ये थियरी का पोर्शन है, it covers around 27 marks in your exam. 18 marks is about the law, then case studies, judicial pronouncements basically, and आपका professional ethics and code of conduct, which is a part of registered valuer rules, and the economics part. So today we are dealing with Companies Act, Stamp Act, SFA, and the judicial pronouncements. In that, I'll start with the Companies Act, and that too the registered valuers and section 247, because that is the most important part of this Companies Act, जो कि आपके एग्जाम में you can rest assured कम से कम 3 से 4 नंबर का आएगा। आउट ऑफ एक से 2 क्वेश्चन सेक्शन 247 से डेफिनेटली आना है, एंड 2 से 3 क्वेश्चन रजिस्टर्ड वैल्यू रूल से डेफिनेटली आना है, एंड 2 to 3 marks is definitely going to come from the model code of conduct. सर हमारा मॉडल कोड ऑफ कंडक्ट का सेशन सेपरेट है?
हाँ, सेपरेट अभी पेंडिंग है।
वो अभी सेपरेट है ना, तो मैं जस्ट एक इंट्रो दे दूंगी, ओवरव्यू दे दूंगी, बाकी फिर आप उसमें डिटेल में देख लेंगे, ठीक है? तो इसमें आई वोंट स्टार्ट विद द पीपीटी, आई विल डायरेक्टली टेक यू द एक्चुअल टेक्स्ट जिसको मैंने अपने हिसाब से मॉडिफाई किया है, so that you may be able to understand, because आप वैसे value rule पढ़ेंगे, you will just think that it is very simple, nothing is there, what is going to come from in the exam. But when you will go through my eyes, you will find what are the areas in which you have to concentrate, right? Screen is visible to everyone. I hope so.
Yeah.
Yes, ma'am. Yes.
Okay. Okay, so we will start with section 247. As we know that before coming of section 247 gives the birth to the registered valuer. It is the base out of which entire valuation profession as a separate profession came into existence. Iske pehle, whatever valuation was required to be done, it was done by the chartered accountants or merchant bankers or some according to some other law. But as such in Companies Act, we were not having any specific qualification for the valuation. So section 247 came into came into existence, and it gave the recognition to the valuation profession. So quickly we'll have a look over the section, and I would request you, whatever I have underlined or I have highlighted, kindly pay special attention to those things. Okay, so where valuation is required to be made in respect of, now what are the things which are to be valued under the Companies Act? Property, stock, shares, debentures, securities, goodwill, or any other asset, or net worth of a company or its liabilities. These are the things which are covered by section 247, in which a valuation is required. Whenever a valuation is to be done out of these things, a valuation has to be done by the registered valuer only. Okay. Under the provision of the Act, it shall be valued by a person having such qualification and experience. Now, by this part, the section says that you have to have some qualification, some experience, and then only you can conduct the valuation under section 247. Third thing, it says it has to be appointed by the audit committee or in its absence by the board of directors. As we know, audit committee is not necessarily that it is in existence in all the companies. So in case there is an audit committee, it has to be appointed by the audit committee. And if there is no audit committee, it has to be appointed by the board of directors. What does that mean? If a CFO appoints the registered valuer, is that appointment valid? No. MD on his own appoints? No. It has to be appointed by the audit committee or in absence by the board of directors of the company. So first paragraph says is there has to be a valuation done. Valuation of what things? It has mentioned property, stock, share, debentures, and all those things. Then by whom it has to be done? By a person having qualification and experience and registered as a valuer. And fourth thing, it says about the appointment. Who can appoint a registered valuer? Audit committee, or in its absence by the board of directors of that company. Now this point, appointment, you are getting regularly you are getting question out of this point. Who can appoint registered valuer for valuation under Companies Act? So this is the point here. Now second, now once valuer has been appointed, now they say how he has to do the valuation. Impartial, true, and fair. I've just made a you can say a way to remember that I've made that the valuer has to do a fit valuation. Fit valuation means F for fair, I for impartial, T for true. Because exam again, you are going to get these words and you have to point out 1/4 word will also be given, and you have to find out which word is not correct according to section 247. Second, it says exercise due diligence. Third, make the valuation in accordance with such rules as may be prescribed. And fourth, it says do not undertake valuation of any asset in which he has direct or indirect interest or becomes so interested at any time during or after the valuation. So you have undertaken a valuation, and after that you have a contract with the company that okay, once our valuation is done, later on we will just get associated, because during the valuation or before the valuation it is prohibited. No. After valuation also, if you get interested, it is prohibited. A registered valuer cannot do the valuation in which he has direct or indirect interest during or after the valuation of assets. Okay. Now, fourth point, it says you have done the valuation, you know what things are to be valued, how the valuer has to be appointed, what are the duties and responsibilities of the valuer, that has also been told. Now it says about the contravention. Now contravention here are in two categories. One is a simple contravention. Third is contravention. Second is contravention with an intent to defraud the company. So you have to keep those two things into mind, that contravention can be of two types. In case valuer simply does some contravention, what are the liabilities? 25,000 rupees, but which may extend to 1 lakh rupees. Okay, so simple contravention you have done, a valuer has done, so he will be liable for this quantum of penalty. But if the valuer has contravened such provision with the intent to defraud the company or its members, now the situation changes. Now intent to defraud has been proved. Whatever you have been in connivance with someone else, you have made some conspiracy, and accordingly you have overvalued or undervalued the things just to defraud the company or its members. In such case, you will have an imprisonment for a term which may extend to 1 year, and with fine which shall not be less than 1 lakh rupees, but may extend to 5 lakh rupees. That means imprisonment plus fine. So we have just checked two situations. There is a contravention. First is contravention, simple contravention. In that you have a liability to pay a penalty from 25,000 to 1 lakh. And in case an intent to defraud is also proved, then 1 year imprisonment up to 1 year, and with fine which shall not be less than 1 lakh but may extend to 5 lakhs. So this is again an important point which you are getting in questions, that if a valuer does any contravention with intent to defraud the company, what is the amount of penalty? So you have to keep this in mind. Further, it says if a valuer has been convicted under subsection 3, that means both of these categories, either he is doing with intent to defraud or he has done the simple contravention. In that case, he has to refund the remuneration received by him to the company and pay for the damages to the company or to any other person for the loss. So this is common to both the situations because it talks about the contravention. Contravention has been proved. So apart from paying the penalty and imprisonment, you have to refund the entire amount received by you to the company and pay the damages if any person has suffered any loss because of your contravention. Okay, so this is all about section 247. At least 1 to 2 questions you are going to get out of this particular section. I hope it's clear. Okay, now we will quickly come to the rules. Rules, I have made some highlights according to my understanding that may help you also. Companies registered value rule, it is power conferred by section 247 read with 458, 459 and 469. That means these three sections are the sections which deal mainly with the powers of central government, power of legislator to delegate some powers to central government, and power of central government to make some rules and regulation rules. Okay, so these are the rules for section 247. First part says these rules shall apply for valuation in respect of any property. Same extract which was in section 247, the same thing has been taken here because we know the rules cannot override the main section. So it has been clearly stated here. Second word comes authority. Now in particular rule, when you will read, authority has never, everywhere the rules use the word authority. They don't use IBBI, NCLT, something like that. So why it has been done? Because for the time being, they have given this power to IBBI. But as we know that valuers bill is about to come and then the authority will be changed. Okay. So here, whenever authority is said, it means for the time being, it is Insolvency and Bankruptcy Board of India, IBBI. Okay. Then asset class, we know there are 3 asset classes: land and building, plant machinery, and the financials. Now these two words again, certificate of recognition and certificate of registration. There are 2 types of certificates which are being issued under value rule. When we talk about certificate of recognition, it is for the RVO. RVOs are recognized, not registered. Okay, and valuers are registered, not recognized. So whenever they ask certificate of recognition is issued to, so you must remember that it is always issued to the RVO. And when we talk about the certificate of registration, it means the certificate of registration granted to a valuer. That valuer may be an individual or maybe an entity. Partnership firm, it is a simple definition. So we'll just move off. Registered valuer, again, it has means a registered valuer organized, recognized under sub rule 5 of rule 30. Valuation standard means the standards as valuation standards referred to in rule 18. And these are the simple things. Now we will come to the eligibility for the registered valuer. First is he should be a valuer member of a registered valuer organization. First of all, you have to take the membership of RVO, then you have to apply to the IBBI. So it says that before applying to IBBI, you should be a member of the registered valuer organization. And within 3 years, you should have passed the exam. Means if today you clear the exam, up to next 3 years, you are eligible to make the application to IBBI on the basis of today's exam. So within 3 years, you have to, it is not necessary that once you clear exam urgently due to some your preoccupation, you are not able to apply and you think that your exam has gone in vain. No, up to 3 years, you can apply on the basis of the same exam. Then simple, what we already have seen in case of directors, independent directors, same things are there. Qualification and experience, not a minor, declared to be unsound mind, not an undischarged bankrupt. Now this means that a bankruptcy process has been instituted against the person, but he has not received the discharge. That means the process is still on and you have not been declared as a discharged bankrupt. Okay. Is a person resident of India? Now this point, please note point number I. The language is slightly confusing, so I would just like to make you understand what this particular section means. Has not been convicted by any competent court for an offense punishable with imprisonment for a term exceeding 6 months, or for an offense involving moral turpitude, and a period of 5 years has not elapsed from the date of expiry of the sentence. Provided that if a person has been convicted of any offense and sentenced thereof imprisonment for a period of 7 years or more, he shall not be eligible to be registered. Now, just look at the simple way to understand this. Less than 6 months, normal case, no restrictions, a person can be registered as a valuer. Above 6 months and up to 7 years, or offense involving moral turpitude for any duration, because here it says imprisonment for a term exceeding 6 months or for an offense involving moral turpitude. That means if you have been convicted of a moral turpitude and even you have been sentenced for 1 month, you are disqualified. Okay, till how much? 5 years. Okay, so less than 6 months, no restrictions. 6 months to 7 years, or offense involving moral turpitude, it is 5 years. Up to 5 till 5 years you are not eligible. After 5 years the person can apply for being registered as a valuer. And if you have been sentenced for more than 7 years, then you are completely barred. You cannot apply. Then this point says section 271J of Income Tax Act, and 5 years again has not elapsed. If until 5 years has elapsed, you cannot apply for being registered as a member, and even appeal time should also have expired. Now again, this is a fit and proper person. This is again a very favorite question of IBBI people, that how is a fit and proper person defined under valuers regulations. So you have to keep 3 points in mind: integrity, reputation, and character, absence of conviction and restraint orders, and competence and financial insolvency. They will add a 4th point and they will ask which is not related to registered valuer rule number so and so. Okay, so you have to keep 3 points in mind. Now we come about the partnership entity or a company. That means you are applying not as an individual, though obviously you are first a registered individual, then only you will make an entity. So if an entity or a company is applying for being registered as a member, now it says it should be set up for objects, it should not have been set up for objects other than rendering professional or financial services, including valuation. A person has cleared the registered valuer exam and he's also doing some real estate business or some other business. In that company, he wants to start the valuation services also? No. It says that you should be rendering some professional or financial services. Then with that, you can do the valuation services. And in case of company, it should not be a subsidiary, joint venture, or associate. This is the purpose, because IBBI wants that they should have a grip on the valuer. They should know what is the source, where is the conflict. So in case it is a subsidiary, joint venture, associate, slightly task will be difficult. In case any investigation is being ordered, then they have to go back to all those companies with which they are associated, joint ventures, or whatsoever. So they have said that no, only you should not be associated, subsidiary, or joint venture of any other company. Or it is undergoing an insolvency resolution, as we know, CIRP process in IBC code. Further, all the parties and directors, we discussed initially about the individual member. that he should not be of minor, he should not be of unsound mind and all those things. This applies to all the partners and the directors. So all the partners and directors should be eligible in terms of the individual criteria given. Then 3 or all the partners, whichever is lower, the partnership entity, as the case may, are not registered valuer. That means it is all the language has been drafted in a negative sense. So you have to just interpret it. It says that at least 3 directors, in case there are more than 3 directors, or in case of less than directors, all directors. That means obviously if an entity is being registered, at least 2 people will be there. So in that case, both of them should be a registered valuer. And in case more than 2, then at least 3 should be a registered valuer of the proposed partnership firm or the direct company. Now they have described the qualification. This you can just have a look, because it says the postgraduate degree, bachelor's degree, member of professional degree. There's nothing as such to be explained. You have to just go through it and it is okay. Then it says that authority may recognize an educational course conducted by RVO before recognition as adequate for the purpose of appearing for valuation exam. As we know, what we are right now undergoing, mandatory education program. So it says that though they have prescribed the syllabus, they have prescribed what to study, but in case there is an RVO which has been in existence before the coming of this act, and they are already imparting some education, and it is at par with what has been prescribed with the IBBI, so it may seem recognize such course may be recognized by the IBBI. Now, application for registration. I'll make it very simple. There are 5 forms. Annexure is 2. That you have to remember. Form A, to be applied by an individual member. You can just remember the hierarchy. First of all, what will happen? First of all, a member will be registered as an individual member. So, Form A. Fees 5,000 rupees. Now, person is registered. Now, he want to form an entity. In which form he will apply? Form B. Fees is 10,000 rupees. Okay. Now, the authority has registered you. It will issue certificate of registration in Form C. So, Form A, B, C. These 3 are related to the valuer. And after that, Form D and E, that is related to the RVO. Now they say the procedure. Once you will study the procedure, you may get slightly confused. So I'll just explain it. They say that once you have made an application, the authority has to register the give certificate of registration within 60 days. That is the time limit given to the authority. Now, in this 60 days, what may happen? You have submitted an application and authority finds that your application is deficient in some form, or you need to submit some additional documents. For that, 21 days. These are the type of questions which are coming, which I'm specifically explaining to you. Okay. So 21 days, you may submit the additional documents. The additional time given by the authority will be reduced from counting the 60 days. Okay. Now, if the authority is satisfied, it will issue certificate of registration again within 60 days. And if the authority on face, so you have submitted an application and authority says that no, you cannot be admitted as a member because of any of the reason. So they have to intimate this within 45 days, because they have to just keep that 60 days restriction in face. So for 45 days, the intimation will be given to you that you cannot be registered, and then you will have 15 days time to make your representation. So entire duration is 60 days, 21 days for making any clarification, 45 days in case it is rejected by the authority, and 15 days is given to the person to make the representations. And in case everything is okay, the authority will grant you certificate of registration in Form C along with within 60 days. Once you have, suppose 45 days, within 45 days, the authority has said that, okay, your application cannot be accepted. And within 15 days, you have submitted your submissions that why you should be registered. In that case, the authority shall communicate a decision to the applicant within 30 days of receipt of application. So whatever, after 45 days, you have been on, say, after a lapse of 5 days, you give the reasoning, whatever documents are required and your submissions. So within that, from that date to 30 days, the authority will give you the final decision, whether you are going to be registered or the authority is going to decline your registration. Now, these are the conditions of registration. That means obviously whatever necessary conditions was on you for the purpose of issuing the certificate of registration, that you have to maintain throughout. Now, one point, in case of partnership entity is the registered valuer, it will be liable jointly and severally along with the other partners who signs and acts in respect of valuation assignment on behalf of the partnership entity. That means suppose an entity is formed. Today, what is the trend that people form entity with all the 3 asset categories? Because in IBC, whenever you are going, you have to make big valuations, including land and building, plant machinery, as well as the securities and financial assets. So they are making entities so that entire assignments come into one group only. So if suppose that is a sort of case and a person has then any such type of entity is formed and Mr. X has done some land and building valuation and that valuation comes out to be some defaulty or something like that. So in that case, that person will be liable, but other persons will also be liable. Though you cannot take that plea that I am the registered valuer of a different category, you will be liable. Rest depends on how properly you present your case. And further, it says that if you are making any valuation report, it should be signed by the person of that particular asset category. It doesn't mean that land and building valuation report is being signed by the plant and machinery valuer. No. If the partnership entity is there, the person who is registered for that particular asset class has to sign the report. Now it says about the conduct of valuation. It says rule number 8. This is again very important rule. So it says that the registered valuer shall, while conducting a valuation, comply with the valuation standards as notified or modified under Rule 18. Now, Rule 18 is a rule in which government has been empowered to prescribe some valuation standards. But till now, and Rule 8 says that 18 says that the valuation standards will be as per the committee formed under Rule 19. Okay, so for the time being, since committee is still working on it, valuation standards are still in process. So it says that till the time valuation standards are notified or modified by central government, a valuer shall make valuations as per internationally accepted valuation standards or valuation standards adopted by any registered valuer organization. These are the 2 situations how you have to use the, because you must have studied when you are making your report or when you are making scope of engagement, and that you have to mention that what valuation standards you are going to follow. So you have to mention that either you are going to follow the internationally accepted IVS you are going to follow or by any registered valuer organization. Okay. Now they say that, now suppose there is a valuation case where the person is not competent enough. Say suppose there is some jewelry valuation, and you are, though you are of a class, but you are not having proper exposure for that jewelry valuation. But you know Mr. X is an expert in this, and he is also a registered valuer. This is a prime condition that if you are taking inputs from for your report from any other person, first is that person should be a registered valuer. You have to mention in your valuation report that you are going to take opinion or a separate valuation report for this particular thing from Mr. X or Mr. Y, who is a expert in that particular thing. But you have to ensure that that person should be a registered valuer. You cannot take from any XYZ who is doing, you know that Mr. X is doing very good. He's a very good valuer. He's having expertise in doing the jewelry valuation. But if he is not a registered valuer, then you cannot take the input. That is the most important thing. And the final outcome, resultant liability will be the person who has signed the valuation report. That means you have done a valuation. You have taken inputs from Mr. X, made it as a part of your report, and something fault comes out in Mr. X report, then also you will be liable, not Mr. X. So whenever you are taking inputs from any other person, you have to be assured that whatever you are taking, you know that and you rely on that, or you have sufficient evidence that whatever Mr. X has said was true to best of your knowledge. Rest, you know, whenever there is a litigation, it is all on what evidence you have, what are the pleas you can take, and what are the circumstances, how good you can present your case. But ultimately liability will be yours and you will be liable to reply to it. Let's have just a reading of this particular rule. The registered valuer may obtain inputs for his valuation report or get a separate valuation for an asset class conducted from another registered valuer, in which he shall fully disclose the detail of input and the particulars of the other registered valuer in his report, and the liabilities against the resultant valuation, irrespective of nature of input or valuation by the other registered valuer, shall remain with the first mentioned valuer. Is it clear? I hope no confusion in this. Okay. Now these are the important contents what a valuation report should contain. Because earlier, see, they have not prescribed any format that in this particular format you have to present, but they have said that these are the informations that should be in your valuation report. If any of these things are lacking, then your valuation report is not proper. Minimum thing. Additional you can definitely make. If you want to do something add on, you think that this should also be disclosed, you can do that. But the minimum requirement is this. First is background information of the asset being valued. Definitely what you are valuing, you have to inform about the company. Say you are doing a net worth of a company. So you have to explain about the company. When was the company incorporated, where it is placed, what business it is, about the background information and purpose of valuation. As you know, whenever you do a valuation, the first and foremost thing is the purpose of valuation. For what purpose you are doing this valuation. So this is the most important thing, and appointing authority. In normal cases, we have discussed that it has to be appointed by the board of directors or audit committee. Suppose in case of IBC, it is the RP who is appointing you, and such scenarios. Whatever the person whosoever is appointing you, you have to mention the name. Identity of the valuer and any other experts involved in the valuation. What we were discussing. You have to disclose whether you are valuing it as an individual valuer or as a entity. That disclosure you have to make. And if you intend to seek something from some other registered valuer, you're taking some inputs or some other expert advice, that also you have to mention. Disclosure of valuer interest, date of appointment, valuation date, and date of report. I think you must have read about what is the difference between these three terms. Date of appointment, when a person is appointed. Valuation date means the cutoff date, the date till which you are taking the information, and date of report when you are signing the report. Inspection and investigation, nature and sources of information used or relied upon, procedures adopted in carrying out the valuation, restrictions on use of report. This is a very important clause, restrictions on use of report. Your client came to you and asked that I want to just assess my company and I want to know what is the worth of my company. Okay. You have done the valuation accordingly, and now he takes that report and goes for some loan application. So you have to specify that what is the purpose of this report. This report is just for internal usage as suggested by the client, and we are valuing this for this particular purpose, and it cannot be used for any other purpose apart from this. This is the restriction. Major factors that were taken into account during the valuation. Suppose in present scenario we see in COVID era you are doing something. So you have to mention what were the situation right now. How you can access the documents, what were the possibilities of accessing the documents, what were the people available, what are the circumstances, that all you have to mention in this particular. Then your conclusion, whatever you have concluded, then caveat, limitation, and disclaimer. Earlier, what used to happen that report was of 1 page and the caveat used to be of 10 pages. Because everything was, whatever you want to just defend yourself, you placed all the difference in that particular limitations and caveat. So now they have said that you should not do that so as to limit your responsibility. Special situations only you have to mention in the caveat, limitation, and disclosures. Now they say that you can temporarily surrender your certificate, and within 7 days when your RVO, definitely you are going to inform to your RVO that you want to surrender temporarily. And within 7 days from approval of the application, it is responsibility of the RVO to inform the authority. Now authority will also update its database and the RVO will update its own database. Now we come to the part of recognition of registered valuer organization. Now, who can be a registered valuer organization? As you know, a registered valuer cannot be registered till he is a member of registered valuer organization. Now, registered valuer organization is recognized under the Act, not registered, as we discussed. They get certificate of recognition. Now, who can be the RVOs? First, it says Section 25 companies under 1956 Act or Section 8 company under the new Act. That means non-profit organizations. Then a professional institute like CA Institute, CS Institute, which have been formed under some Act of Parliament, or a society or a trust registered. But for these two, they have given conditions that if a society or a trust, it is getting registered as an RVO, then within 1 year, they have to convert themselves into Section 8 company. Okay. Now, these are the functions of an RVO. They should do the conduct educational course, grant membership or certificate of practice. When you will complete your course, then you will appear for exam. When your exam is done, then you'll have to undergo a COP program. Then only you will getting your certificate of practice that will be issued by your RVO. So these are all the work that has been assigned to the RVO. They are the frontline regulators. Okay. And they have to just make a bylaws which every member has to comply with. Now, this is the point I was saying, that if any of the person, it is registered under Section 8 of the proviso, if in the proviso any organization is registered as an RVO, then they shall convert into a registered itself into a company under Section 8 within 1 year from the date of commencement of these rules. Now, we had already discussed 3 forms: Form A, Form B, Form C. Form A, application by a registered valuer individual along with a fees of 5,000. Form B, application by an entity along with the fees of 10,000. Form C is the certificate of registration. Now here comes Form D. D and E relates to RVO. Form D, along with the non-refundable fees of rupees 1 lakh. They have to make an application to the authority. Rest procedure is same: 60 days, 21 days, 45 days, 15 days, as we discussed in that case. Everything is same. 21 days will be given to clarify, to submit any additional document. Then within 45 days, if they want to reject, they will intimate about the rejection. You can make your submission in 15 days. And within 60 days, the authority will grant, excluding the days where any days were given by the authority to present your case or present any explanation or submit any documents. Those days will be excluded from the count of 60 days. And if the authority is satisfied, they will give certificate of recognition in Form E. So I think about forms it is clear, because forms are again a very favorite question. They are going to ask in which form you will get the certificate of registration, or in which form the valuer has to apply. So you have to remember 5 forms: for A, B, C for valuer, D and E for the RVO. Rest situations are same. You can just if you want, you can just go through it. Then condition of recognition, again, they have to, whatever conditions were required at the initial time of the registration, they have to maintain throughout their life till they are a registered member. They are a registered valuer organization. Now, whenever, it is very easy to make complaint against anyone. Anyone has any grievance. In these rules, it is more simple. Anyone who has any grievance against a valuer or a registered valuer organization, they can just make an application along with a fee of 1,000 rupees and submit to the authority. Once your authority receives that application, it will appoint an investigation officer. The investigating officer will investigate the things. And if he finds that, yes, there is any case, they will issue a show cause notice. If they don't find anything, they will just close the case. And once a show cause notice has been issued, it is all the same procedure which has been described. Okay. Now, please see point number 4. This point contains principle of natural justice. Please remember these words. This is very important question. That in disposing of the show cause notice, what are the things which is the most important thing authorized officer shall keep in mind. So it is principle of natural justice. This particular word you will get. Then what type of, once a case has been framed, show cause notice has been issued. Now, what can be the final outcomes? What can be the final results? Either no action, they will just dispose of the case, or a warning will be issued, that, okay, you have done this. This is your first time. We are exempting you, but in case of second time, you won't be spared. Third is suspension or cancellation of the registration or recognition. In case of individual valuer, your certificate can be cancelled. And in case of RVO, its recognition can be cancelled. So this all investigation process applies both to valuer as well as the registered valuer organization. In case of RVO, they may also say that if there is any allegation against some specific partner or director on the governing board, they may ask to change the same. So again, these 4 points, what are the orders which can be passed in disposing of the show cause notice? These are the 4 things. No action, warning, cancellation, or change in management. These are the 4 points. Now this, whatever order has been passed, it will be communicated to the concerned person immediately. That means a valuer or the RVO. It will be communicated immediately, but it will come into effect after 30 days of the order. Today an order has been passed, communicated, but 30 days will be given by, obviously, to make an appeal. If they want to make an appeal, they should be given some time. So 30 days time has been given for being effective. And as you know that you can definitely make any appeal to the authority. That means the IBPI. Now, valuation standards, we have already discussed that it will notify, central government will notify, and under Rule 19, a committee has been formed, which is still working on it. And till they give some concrete thing about the valuation standards, we have to just follow the IVS or the valuation standard issued by the RVOs. Now, punishment for contravention. This again, I have tried to simplify. Punishment in accordance with subsection 3 of section 469. They have referred to section 247 already prescribed some penalties. Now again, here also there some points have been additionally made. Section 469, what it says, fine up to rupees 5,000, and after that 500 per day for continuing offense. And in case you make a false statement, we know section 447, 448 of Companies Act, they say that liability under section 447, if amount increased 10 lakhs or 1% of turnover of the lower of the two shall be taken in, and 6 months to 10 years shall be the imprisonment. If there has been a false statement, suppose there was a prospectus issued and some valuation was required, and the valuation valuer has intentionally made wrong valuation in that prospectus, that leads to a false statement, because you are, by your statement, by your presentation, you are making someone believe on it and make some investment. So it says that the false statement, punishment for false statement also has been prescribed, and the penalty as per section 448 of the Act. So till here we have completed our registered valuer rules. So any confusion in this, or you want me to just make a recap of this, whatever we have studied till now, section 247 and registered valuer rule? Should I make a recap for the entire thing? You may just unmute yourself and just let me know.
Yes, ma'am. Please recap.
With recap. Okay. So first of all, section 247. Okay. Section 247 says about the appointment of registered valuer, existence of registered valuer. You can say it is a birthplace of registered valuer. It says certain situations in which a valuation is required to be done, and that valuation can be done by a person who is registered valuer under the Act. First thing. Second thing, it says who can appoint the registered valuer. So it is board of directors or the audit committee. First is audit committee, and in case no audit committee is there, then by board of director. Third, it says 3 points where how it has to be done. Fit, I told you, fit valuation, that means fair, impartial, and true valuation. Then due diligence. I think someone's mic is on. If you can please close it off. Yeah, thank you so much. Thank you. So, okay. We were saying that how the valuation is to be done. So it is a fit valuation. Then second is due diligence. Third is compliance of valuation standards. Fourth is no indirect or indirect interest. So these are the requirements which the valuer has to do. Okay. So appointment, audit committee, board of director, 4 requirements which the valuer has to comply. And then the contraventions. Contraventions, it talks about 2 types of contraventions. One contravention, which is just a simple contravention. Second is with intent to defraud. If it is a simple contravention, then it is only punishable with fine of up from 25,000 to 1 lakh rupees. No imprisonment has been prescribed in it. But if the intention to defraud is proved, then it is 1 lakh to 5 lakh up to 1 year of the imprisonment. Okay. Then you have to refund the remuneration, as well as if any person has suffered any loss, you have to make good that loss. Clear? This is section 247. Now, by the powers given by section 247, rules have been framed. Rules, what the rule says, they talk about 2 things. One is about the registered valuer, one is about the registered valuer organization. They have given certain criteria for both the categories. How a registered, what are the minimum requirements for which a registered valuer can be registered, and what are the minimum qualifications which a RVO should possess for being registered as an RVO. 3 forms have been prescribed: Form A, B, C for registered valuer, Form A for the purpose of registration of individual valuer along with a fee of 5,000, entity Form B along with a fees of 10,000, and certificate of registration, it is in Form C. We know for a valuer or a valuer entity, it is of certificate of registration. Then we come to RVO, it is Form D and E. Form D is for making the application along with 1 lakh rupees, and Form E is the certificate of recognition given to the RVO. Okay. So for after that we discussed that there can be any investigation against the RVO or the valuer. So what is the process? The process is that a person, if any aggrieved person makes an application to the authority means for the time being it is IBBI. If you get the question that what is the authority under these rules, so it is IBBI. Maybe it will change in future. So any person can make an application to the authority along with simple fees of 1,000 rupees. The authority will appoint an investigating officer. Investigating officer will investigate the RVO or the registered valuer, whatever the case may be. Okay. And after that, they will just make an investigation, come to a conclusion. Agar lagta hai ki nahi, kuch problem nahi hai, they will simply dispose it off. If there is some reasons, then 4 conditions may happen. 4 type of orders may be passed. A simple order, which may be no action, then a warning, then cancellation of recognition or registration, and 4th is they may ask that you change your management in case of RVO. Whatever order is being made, it will be effective after 30 days. Within that 30 days, the person aggrieved can make an application to the appellate authority for the appeal. So this is the entire scenario. One thing more, as we discussed in case of registered valuer, we said that there was some disqualification, especially in terms of imprisonment. That is always a confusing point. So again, I would like to clarify, up to 6 months, no issues. A person can be registered. 6 months to 7 years, or a case of moral turpitude, at least 5 years should pass from the completion of a sentence. And in case 7 years or more imprisonment has been said, then no registration at all under the rules. So this is the main context of the rule. Your model code of conduct is, I think, as I was saying, that it is to be taken separately. So I'm just leaving it, but you have just, I would like you to know that these in particular rules, you're getting 3 to 4 questions in this model bylaws, model code of conduct. And you have to just learn it by heart, because you will get only the words. A valuer shall maintain integrity by, they will give you options. So you have to just remember that it should be honest, straightforward, forthright in all professional relationship. Or they will mention this particular sentence and they will just remove this professional part, technical, something like that. They will give you 4 options. So these are the especially words. I'll share this particular rules with you. You can just understand what are the important things in this, which you have to just learn. So it talks about the professional competence and due care. First part is integrity. That means how a person should be, how a valuer should be. Personal traits they have given in first part. Second is how he should be professionally. Third part is how he should do the work. Okay, third part is that. Then what are his responsibilities? That is confidentiality and information management. Once you have done the assignments, what are your responsibilities toward your assignment? And then it comes that what are the ethics and what are the cost. So these are the basic things in your separate class, whatever, whosoever takes, he will just brief you about these things. So I'll share this particular document with you, though I'm having a PPT also on this, but I thought that it's better to just go through the rules, because I know it's very boring to read the rules. You won't be able to understand that what you have to concentrate on. That's why I've just tried to explain these rules. I'll share the presentation also with you. So whenever you go through it, you may just have a look over it. So next part is our Companies Act, other parts. Okay. Basics you all know. I don't think that I have to just concentrate on what is authorized share capital, what is issued, and what are the subscribed paid up capital. You are all our professionals, you all know what are the basics. Okay. So there is an authorized capital, which is the maximum limit. Then there is a issued capital. Then there is a issued, what the company has offered, subscribed, whatever has been subscribed, paid up, whatever has been paid up. These are the different categories. Now we'll straight away come to the share capital, most important section, section 43. Section 43 talks about the recognition of type of share capital. It says two types of share capital. It discusses, recognizes only two types of share capital. One is equity, one is preference share capital. In equity, it says it may be with voting rights, or second is with differential voting rights. So what does differential voting right means? You are holding an equity, but you're not having right as an equity shareholder would do. Like the company may say, मैं बहुत अच्छे position में हूँ. If you want to come to me, then you have to compromise. आपको shares लेना है तो you have to compromise. We will give you share, you will get some dividends, but you won't get the voting rights. So that means the company is much better stage, and that's why till now I think 2 or 3 companies have only issued the DVRs. So these are the two type of capital: equity capital, preference share capital. In equity capital with voting rights and with differential voting rights. Now these are 3-4 important sections which I would just like you to have a look on. Section 43 we have already discussed. Then is section 53. It says that a company cannot issue shares at discount. Means a share is of 10 rupees, you cannot issue at 8 rupees. Except sweat equity shares. If you are issuing sweat equity shares to your employees, then you can issue shares at discount. Or if you are converting some loan into equity against any statutory resolution plan. Only these are the two conditions in which you can issue shares at discount. Otherwise, you cannot issue shares at discount. It is prohibited. Okay. And these sections we will discuss later on. Now, voting right of shareholders. We know, as we discussed, there are two types of shareholders: equity shareholders and preference shareholders. Equity shareholders, we know they have right to vote in all resolutions. But preference shareholders, their rights are restricted to resolution where their right is affected. Any decision which the company is going to undertake, which is going to affect their right. What are the preference shareholders' right? It is just two rights. First is preference to the dividend. Second is at the time of winding up, preference for the payment of capital. So these are the two rights which the preference shareholders have. So in case of any of these two rights are affected, then the preference shareholders have right to vote. Second is winding up of the company. Obviously, you have contributed to a company and the company is going to close. Then obviously your rights are impacted by this. So in case of winding up of the company also, the preference shareholders have the right to vote. Repayment of capital. Obviously, once a company is winding up, the capital is repaid. And in such situation, also the preference shareholders have right. And there are certain situations in which preference shareholders can vote just like equity shareholders. That means on all the resolutions. So that is the situation where dividend has not paid for consecutive 2 years. So if a dividend has not been paid for 2 years, equity preference shareholders can vote on all resolutions that are being passed by the company, because definitely they will say that since whatever rights were promised to us, they have not been delivered in that way, so we have the right to vote on all resolutions, so that we may come to know why we are not being paid what we were promised. Okay. Now, this particular topic, this is very important. Many questions are coming out of it. Issues of share with differential voting rights. What are the conditions in which a company can issue a DVR? So first is authorization by articles. As we know, articles of association of the company decide what the company can do, what a company cannot do. So first of all, the article should authorize this particular issue of DVR. Second, distributable profit of 3 years. As I said, if you are not yourself in good conditions, how you are going to issue a DVR? Why anyone is going to subscribe your DVR? Okay, so they should have a distributable profit of 3 years. An ordinary resolution is to be passed, and in case of listed company, it should be by postal ballot. And this particular point is very important, not to exceed 26%. This 26% is a very important part, very important thing, which is coming in your exams. Not to exceed 26% of total post-issue capital. So that means if your post-issue capital is 100 crores, then maximum DVR you can issue is 26 crores. This is the limit. Whatever you are going to issue, that and what I've already issued, total issued capital you calculate, and then you can calculate the percentage. So 26% is the maximum limit. Then there should be no default in filing of annual accounts. Now they say that, okay, your articles has authorized, you have a distributable profit, we have given the limit, but now if you want to issue DVR, you should be a default free company. You should be very honest. You should not have done any defaults. In what? Pehla, filing of annual accounts for 3 years. Previous 3 years, you should not have failed in filing the annual accounts. And defaults. Now you can just remember it in form of 3 Ds. No default in repayment of deposit, debenture redemption, and dividend. 3 Ds. Deposit, debenture, and dividend. Okay. Yes.
On this, I have a small query, whether we can ask right now or after this session.
Regarding this particular DVRs?
Yeah, DVR.
Sir, if you better, I think once we complete it and then we will take it up.
Fine, no issue, okay. No issue.
Okay. So, repayment of deposit. You should not have made any default in deposit, debenture, dividend, and redemption of preference shares. Repayment of term loans due to employees, IEPF, or filing of financial statements that we have already discussed. So you should be a complete, very neat and clean company. No problem in repayment of deposit, debenture, dividend, preference shares, repayment of loan due to employees, and investor education fund. Then 3 years conviction under SCRA, SEBI, FEMA, RBI. Means no conviction should have been done under these acts. You should be a default free company, no action against your in terms of any laws, and you should have a distributable profit. Then only you can issue your DVR. And then there are the disclosures, register of members, notice of GM report, board report. In these, you have to make the disclosures. Now comes a variation of shareholders' right. Okay. We know that different rights are given under different categories as per preference shares, or we have discussed just in DVR. So if there is any variation on those rights, a special resolution has to be passed. Articles should permit it. Issuing conditions should not prohibit such variation. You have issued some shares and it was in accordance with some terms and conditions. Now you want to change the original terms and conditions. That you cannot do. It should not be prohibited by that particular document, issuing document. And if the person are dissenting, say there were 100 shareholders, then if 10% or more are dissenting, they can make an application to NCLT within 21 days. Final order of tribunal is to be filed with the ROC. So if a company proposes that it wants to do some variation in the shareholders' right, it will pass a special resolution. And in case there are any dissenting shareholders, they may go to NCLT. And final order whatsoever, if the NCLT says that, okay, no such variation cannot be made, then also, and in case they permit, both the situations, they have to file the final order with the ROC. Now, issue of share at premium and discount. Share can be issued at premium or discount. As we discussed, share at discounts are not permitted under the Act, except two situations: sweat equity share and conversion of shares into, conversion of loan into shares under any resolution process. Now it says about the premium. You can issue shares at premium. You have a face value of 10 rupees and you are issuing at a premium of 5 rupees, 15 rupees you are taking. Okay, no problem in it, issue it. But it says that it can be done, but the premium amount has to be transferred to a separate account, which would be securities premium account. Okay, you cannot use it outright. So whatever 10 rupees you are taking in your capital account, and this amount will be transferred to securities premium account. And this account usage has also been prescribed. For what purpose security premium account can be used? It says for the issue of bonus share, writing off preliminary expenses, bonus shares, discount, premium, preference shares, buyback. These are the situations in which security premium account can be utilized. Okay. Now the next topic is about the preference shares. How we are going to issue the preference shares, conditions. As we have seen that preference shares have two preference over dividend and the repayment of capital. Two rights are given to them. Okay. So the conditions are, first thing is irredeemable preference shares cannot be issued. This is outrightly prohibited. Maximum duration for redemption would be 20 years and beyond 20 years, 30 years only in case of specified group of companies like infrastructure company. They can only issue shares which are redeemable after 20 years. That too maximum up to 30 years. Issue again should be authorized by article, and as a special resolution and default, no default in payment of dividend for redemption of preference shares. If earlier you have already issued some preference shares, you should not have made any default in making payment to those dividend shares or redemption of the preference shares. So these are the main conditions for issue. This is an important point about the redemption period. This is again a question which is coming. So you have to remember 20 years and 30 years in case of infrastructure company. Now this is about how the redemption can be made about the preference shares. From profit available for dividend after transfer to capital redemption reserve account. Okay. So in case you are going to make any redemption, suppose 20 years, 15 years redemption period was there. Now the duration has come and now you have to redeem the shares. In that case, whatever the free profits are there, that you have to transfer to the capital redemption reserve account, and from there you can redeem your shares. Or fresh issue of shares, and only fully paid shares will be redeemed. So you have to keep these points in mind. If you are paying redemption also, premium also on redemption, 10 rupees shares and you are redeeming at 12 rupees, then the premium has to be paid either out of profit or security premium account. So these are the two conditions how you are going to pay the premium. And if you're not at all in position to redeem, suppose the companies, though you have issued 15-year redeemable preference shares, and now 15th year has come, and you're not in position, you have some lockdown, something like present situations we are having, no money at all. In that case, they will take an approval of the preference shareholders by a special resolution and issue fresh preference shares in place of those existing preference shares. Now, these are further two situations more where shares are issued by way of bonus share or further issue of shares under section 62. Bonus shares, authorization by articles of association, only fully paid. Sources, as we studied, securities premium account or capital redemption reserve account. This is again very important part, how bonus shares can be issued. So you have to remember free reserves, securities premium account, and capital redemption reserve account. No capitalization of revaluation reserve can be made. Sorry. Board and shareholder approval is required. No default in interest or principal. You are making default in paying interest or any debt or any deposit or any loan. So in that case, you cannot issue bonus shares. Again, whatever different you are doing, you have to be default free. And further, bonus shares cannot be issued in lieu of dividend. Further issue of shares, we have three situations. First is right issue. Second is ESOP. Third is preferential allotment. Okay, these are the three ways in which a share capital can be further increased. We will study this later on. I think till now, am I going too fast? Because we are having many things to cover up. So in case of any confusion, you just let me know. If you want me to do anything again, just let me know. Okay. So clear to everyone? Okay. So now we are discussing about sweat equity share. So first of all, we need to understand what are the sweat equity shares. As we know, sweat, that is something which has been done for the benefit of the company, some contribution by the employees of the company. Suppose one of the employee developed some very good control systems on his own, that okay, there was some pilferage, and now this is, if in this way we do, then such pilferage can be stopped. So that is something which has been contributed by the employee, or some software has been developed, some know-how has been given. So what the companies do, instead of giving them some money, they offer them sweat equity shares. So definitely those equity shares issued are at discount. You cannot say that, okay, at the market price we are going to give you. They will say, no, we can buy from the market only. So sweat equity shares a company issues at discount. Conditions, special resolution again. And special resolution, as we know, that explanatory statement is to be attached. So explanatory statement should contain these particulars: number of shares, current market price, consideration, classes of employees to which it is to be issued. Please remember, sweat equity share can be issued to independent director also. But if we are talking about the employee stock option, in that case, independent director is not allowed. So in this case, independent director can also be issued a sweat equity share. And once a resolution has been passed, you have to issue the sweat equity share within 12 months. This is a precondition. And the limit has been given for issue of a sweat equity share, which is 15% of existing paid up capital in a year, or rupees 5 crore, whichever is higher. So for an year, it is 15% or 5 CR. In total, at any point of time, it is 25%. So for issue of sweat equity shares, we have few conditions. First, it has to be issued to the employee or the directors in lieu of some know-how, some knowledge, or some contribution. A special resolution is to be passed. That special resolution will be valid for 12 months. And limits have been prescribed: 15% or 5 crores for a particular year. In total, at any point of time, 25%. For startup, they have liberated and given up to 50%. Then 3 years of lock-in period. Sorry, lockdown is on my tongue. Lock-in period. Okay, so once a share has been issued, so for 3 years, you cannot sell or transfer that share. Valuation by registered value of fair price and IPR know-how, if any. If you are issuing any share, which is to reimburse the employee for his knowledge, for his IPR, for his know-how, that becomes an intangible asset. Intangible asset has to be valued by the registered value, and the fair price has to be determined. Okay, so equity share is clear, because you are I've covered mostly those topics only on which questions are regularly coming. So I hope this is also clear. Okay. Then section 62, we discussed 3 types of shares are issued under section 62: right issue, ESOP, and preferential allotment. Right issue means I want to say issue some shares. I need more money. So my existing shareholders will say na कि भी पहले आप मुझे ही दे दो, बाहरी को क्यों देना? We are ready to buy more. So whatever paid up share capital they are already holding, in proportion to that, new shares are offered. This letter of offer is sent to the shareholders, and they have the right to renunciate. It is specifically mentioned in the letter. Renunciate means, I have given an offer to Mr. A, but Mr. A says, no, I don't want to buy. Mr. B, he's my friend, he will take the share. So this is the right to renunciate. The offer should be open for at least 15 to 30 days, minimum 15 days and 30 days, and the letter should be dispatched to the shareholders 3 days before opening of issue. Okay, so this is the case of right issue. ESOP, Employee Stock Option Program. What happens in this is basically a sort of retention program. So to retain the good employees, what they say that, okay, as we have studied, you must have studied option valuation and all those things. In option, we know that a share is promised to be given at X price, which is determined today on a future date. So same is the case with the employees. They are said, say after 1 year, you will be entitled to 100 shares at a price of this amount, whatever the price is in the market. So this is the stock option. Because of that, the employees are also happy. They want to get retained with the company. So this is the situation for the ESOP. Okay. For this, special resolution is to be passed, but in case of private limited company, they can do it by ordinary resolution as well. And again, as I said, this is specifically prohibited to be issued to independent director. ESOP cannot be given to the independent director. It can be only given to the employees. And preferential allotment, if we are not following either of these parts, we are not issuing shares in accordance with the paid up capital, we are not giving as per ESOP, or we are giving it to some other person, third person, then that is called a preferential allotment. And it again requires to be passed as a special resolution, and registered valuer has to do the valuation for the price at which preferential allotment is being made. So this is the section 62. Now this is the stock employee stock option scheme. What is the procedure? I've already explained that cannot be issued to independent director, promoter, or director holding more than 10% of equity share. So if a promoter director is also an employee of the company, but he is holding more than 10% of the share, then he is also not entitled to be issued as a employee stock option. Second is minimum 1 year between grant of option and vesting of the option. Means vesting, they are exercising it. Okay, and lock-in period of 30 days, but it is again at the discretion of the company. If option is not exercised, say suppose at that particular date, the price was different, price was lower, and option is not exercised, then whatever the original scheme was there, accordingly, either the company may forfeit, refund, whatsoever the situation may be as per the scheme. Nothing hard and fast rule has been provided. Now it is about the debentures. Maximum debentures symbol 10 years. For more than 10 years, you cannot issue debentures. And in 30 years in case of, again, National Housing and Infra Company. Debentures are always secured. We know a charge is created on the asset as a security, and a debenture trustee is appointed. Debenture redemption reserve is created, and some amount of profit is transferred to that account, so as to ensure that whenever the redemption comes, there is no shortage of money in the company. So before 30th April, amount not less than 15% of debenture maturing during the next year is to be deposited. So in advance, you have to start depositing the amount. And this amount should not reduce at any, you have deposited on 30th April, and then you have withdrawn it on 1st May. No, you cannot do. It should be maintained throughout the year. This we have already discussed. You can just have a look on the presentation if you want. I've just tried to make a quick glance of this. Though we have already discussed from the main extracts of the rules. Now this section talks about the compromise arrangement and amalgamations. Okay, restructuring of the company. There is any compromise arrangements that happens between a company and the creditor or the members. Now, after coming of IBC, many things have been changed, but still some amendments have been made in the act, but some are still in existence, which are, you can say, they are in conflict with the IBC provisions. So you have to keep that in mind. First of all, that voluntary winding up is no more into existence in Companies Act. It has been given into IBC. Second is winding up due to inability to pay the debts. That was done by creditors. That again has been shifted to IBC, CIRP process, because the government felt that it is not genuine, or it is not, you can say, they said that if a person is not able to pay the debt, it necessarily doesn't means that the person intention is wrong or the company is going into loss. There might be some internal issues, some deadlock in the management, or some other reasons which can be resolved. So the government came in with the process of CIRP and liquidation. If you cannot be resolved in the CIRP process, then definitely you have to go for the liquidation process under the IBC. So again, the creditor part also has been removed. Member voluntary has been removed. What is left is the winding up by the tribunal. So main situation is the winding up by the tribunal. So in a case, application to NCLT by what section 230 says, what is the procedure about the winding up under the Companies Act. As I said, you have to keep that in mind. Still, since the Act says these points, we have to look from that purview. Application to the NCLT can be made by the company, member, creditor, or official liquidator, along with an affidavit. So first of all, you have to make an application that this is a compromise arrangement we have undergone, some of your financial positions and the affidavit. Then the NCLT will order a meeting of the creditors or the members, whatsoever case may be. And in case the arrangement is approved by more than 90%, then it may also waive off the requirement of holding a meeting. Again, there might be some people who are objecting to it. So 10% or more, same situation. 10% or more shareholding, or creditors with debt more than or equal to 5%. Okay. In case they are dissenting, they can make an application to NCLT that, okay, we are not in agreement with whatever arrangement the company has proposed. So they can make their submissions with the NCLT, and whatever NCLT decides, accordingly, it will be implied. Further, the representations from authority will be taken, because since you are going for a voluntary winding up, so in that case, obviously, you have to take permission from the different authorities who might be having some stake in you. Income tax, SEBI, RBI, so वो सारी clearance उनको लेनी होगी. और 50%, 75% का special resolution, as we know, in such crucial matters, always there is a special resolution. And in case this category of people are there who have dissented, then exit offer has to be given to them. That means their shares are to be back by the people who have come to the arrangement or the compromise. Now, in that case, we have the powers of tribunal. Any winding up has been ordered by the tribunal. Any compromise has been given or approved by the tribunal. In that case, they have few powers, either to supervise the implementation of process, to give directions, modifications, etc., or to make order for winding up. Scheme cannot be implemented and the company unable to pay debts. In these two cases, they can order for winding up. So what scenario we have come? If the compromise arrangement is related to winding up, we cannot consider here. It is completely in the hand of tribunal. Any other case, whatever scheme and compromise has been agreed to by the company, for that, they will make an application and file with the NCLT. If the NCLT agrees to it, then it will order a meeting. If there are few people who are dissenting to the scheme, they will make an application to NCLT that we don't agree to it. And then the people will have to give the exit order, exit opportunity to those shareholders. So powers of the tribunal will be in this category: either supervise the process, give directions, modifications, and to make order for winding up. Now there is a fast track merger also. If there is a merger, suppose there is a two small companies are there, and we know that NCLT is already overburdened. So if there is simple two small companies are merging, or a wholly owned subsidiary and a holding company are merging, in that case, the power has been given to the central government, delegated to regional director. So conditions are that it should be approved by 90% of shareholders and 9 by 10, 90% of the creditors. No need to go to NCLT. Central government has the power to sanction the this particular fast track merger. Then again, whenever merger amalgamation is in relation to Indian company with a foreign company, RBI comes into picture, and you have to take the approval of RBI so as to ensure that there are no dues with the RBI. acquisition of shares of dissenting shareholders. As we said that whenever compromise arrangement is being entered by either the company or its creditors or members, and there are some people who don't agree to it, and they have made an application to NCLT, so they have to be given some exit opportunity. So now in that case, the transferee company will give notice to the transferor. Scheme of offer to acquire shares to be approved by 90% and above. There will be a scheme for of taking up the acquisition of these dissenting shareholders, and it should be approved by 90% and above people. Then they will wait for 4 months, and in next 2 months they will make offer to the shareholders. Okay, if they don't do anything, so in that case, after expiry of 2 months, in next month they will just acquire the share. The transferor company will send all the documents to the transferee. If they have not, even these people have not sent the documents, then also, unless otherwise directed by the company. As we said that dissenting shareholders might make an application to NCLT. So if NCLT orders otherwise, that no, you cannot do the scheme or arrangement, or it has given a stopple to it, in that case, no. Otherwise, if the simple matter is on, NCLT has granted permission, then in that case, the dissenting shareholders will be, an offer will be made to the dissenting shareholders and the shares will be acquired. Sending of transfer document by the transferor to the transferee. And then information to dissenting shareholders within 1 month of registration of transfer. So we will wait, the transferor will give the offer. They have not accepted, then next month they have the power to just exercise it, do all the process, and then inform that, okay, you haven't appeared, you haven't given any representation, so your shares have been transferred and your consideration will be transferred in next 60 days. Same is the case with minority shareholdings. If there is particular group and the company wants that, okay, we want to acquire that share also, in that case, they will again give notice, 90% or more, and almost the same procedure, except that in case of transmission of shares, the offer shall be open for 3 years. So this is the entire process for the, and again, in both the cases, the valuer is required to give the valuation report. In both, in case of minority shareholding and as well as in case of exit opportunity. So offer price would, for an unlisted company, listed company would be as per SEBI guidelines. Unlisted company for higher price acquired by acquirer during last 12 months, and fair price as determined by the registered value. These are the situations in which the price which will be offered to the minority shareholdings. This is the winding up provisions. As we said, winding up provision again, as I told you that, sorry, yes, the winding up provisions, most of them has been passed to the IBC. Compromise arrangements also, like powers have been given to NCLT. So in this particular chapter, we are having just the powers which are exercised by the tribunal. Creditors winding up has been closed. So in any compromise or arrangement which tends to wind up the company, that is not applicable. Any compromise arrangement which tends to wind up the company by members, not applicable. It will go to the voluntary winding up. So winding up as such is now only to be exercised by the tribunal under the Companies Act. Now they have mentioned again 5 cases under which a tribunal may order the winding up. First is passing of SR for winding up. This is again no more applicable because SR for winding up is done in IBC for the voluntary winding up. Second is company acting against sovereignty and integrity of India. Suppose a company is involved in some terrorist activities, money laundering, and the government comes to know that, okay, this company is doing something which is against the nation. So they make an application to the tribunal, and the tribunal may order the winding up. Conducting affairs in fraudulent manner. They are collecting deposits, collecting money, and just misappropriating all those money. And this comes in the knowledge of either the central government or the registrar or any other person who can make an application to the tribunal. And if the tribunal finds it fit, then it may order the winding up. Default in filing of financial statements with ROC for 5 years. If there have been continuous default in filing the financial statements for 5 years, then also winding up can be ordered. And any other just and equitable ground, this is a free hand given to tribunal. That, okay, if other than these reasons you find anything which suggests that the company should be wound up, then the company will be just wind up by the tribunal, by the order of the tribunal. And who can file the petitions? Company itself, again, no more into existence. Contributories, again, no more in existence, much effective now. Main effective part is central government, state government, or the registrar. As we discussed earlier in this slide, company acting against sovereignty, conducting matters in fraudulent manner, default in financial statements. These are the conditions in which registrar or central government may make an application to tribunal for binding up of the company. So the company will be wound up. This is the procedure broadly. Accept the application, tribunal will accept the application, appoint a liquidator. One more most important thing which is asked from this particular winding up is this question: order to be passed in 90 days from date of presentation of application. That means any application which has been filed with the tribunal for the purpose of winding up, the tribunal has to give the final order within 90 days. So it can either accept the application or dismiss the application. These are the two options only. So this is the sequence. Petition has been filed, appointment of liquidator, order for liquidation within 90 days. Definitely, if the company, if the tribunal is ordering on the issues of sovereignty, fraudulent manner, something like that, an opportunity of being heard will be given to the respondent. So within 90 days, they have to give the final order, and liquidator should compile the information in 60 days. Whatever accounts, once liquidator has been appointed by the tribunal, he will just compile all the accounts and submit to the this authority within 60 days. Submission of accounts and books by company to liquidator and intimation to the registrar. Advisory committee will be constituted. Since there will be some stakeholders, an advisory committee will be constituted out of the stakeholders to just give them advice. It won't be binding. Then conducting meeting and submission of reports, setting the set of stage and contributories asked to pay. When if there are any people who are still to contribute something to the company, money will be recovered from them, and the assets will be disposed of, and it will be paid to the people who were entitled. So it is not like if we just give a recap to it, power of winding up now only rests with tribunal. IBC has taken up the power of creditor winding up as well as the voluntary winding up. So here remains mostly the power of tribunal. Tribunal has 5 situations in which it can order the order for the liquidation of the winding up of the company. And they are mostly company passing SR, which is again no more effective. Acting against sovereignty, fraudulent manner, 5 years of default, and the any other cause which may be deemed fit. Mainly application can be made by registrar, company itself, any contributory. And the process is application will be filed, liquidator will be appointed within 90 days of the application, and the liquidator to compile all the information in 60 days, submission of documents, recovery of the dues from the third parties, whichever dues are there, just forming a sort of liquidation state, disposing of all the assets and paying off to the people who were entitled to it. Again, a summary procedure has also been prescribed, where again the power has been given to central government. But whenever the matter are small, it has been given to the central government because NCLT is already overburdened. So in that case, power delegated to central government means power delegated to mostly regional director. So appointment of OL by the official liquidator by the central government, official liquidator to take into custody all assets, etc. in 30 days. And this power has been delegated to RD. Remaining process will be the same. Just passing the matter to central government eases out the process and the time limit. Rest things are same. You have to just make a contributories. You have to collect the amount from the contributories. Any dues are there. Form a liquidation state. Sell off the whatever assets you have and pay off to the dues. And if any excess is left, then it is paid to the preference shareholders, then to the equity shareholders. The summary procedure is available to outstanding deposit less than 25 lakhs, to the companies where outstanding deposit is less than 25 lakh, loan is less than 50 lakhs, turnover is less than 50 crores, and paid up capital is less than 1 crore. So this is all about the compromise arrangements under this Companies Act. So just to have a recap, we have discussed In the Companies Act, first we started with section 247. We have understood section 247. Then we went to the registered valuer rule. Registered valuer rules, we discussed what are the provisions applicable for the registered valuer, what are the provisions applicable to the registered valuer organization. Then we came to share capital, where we discussed share capitals are of two types: preference share capital, equity share capital. Equity share capital can again be subdivided into two parts: normal equity share and the DVRs. Then we read how DVRs are issued. Then we read that equity shares cannot be issued at discount except in case of sweat equity and loan conversion. So we discussed how sweat equity can be issued, then how bonus shares can be issued. If we are issuing shares at a premium, we cannot use the premium outright. It has to be transferred to the security premium account. And for that, from there, it has to be utilized for a specific purpose that we have studied. Then we came to the merger amalgamations. We discussed that first type is compromise and arrangement. Then it is merger and amalgamation. Compromise means two parties are coming to a consensus for doing taking up some matter and giving some adjustments. So it is mostly between the company and the creditor or the member. If it relates in any way to the winding up, it is prohibited there, because winding up powers by creditor as well as the members has been given to IBC. So any other sort of compromise arrangements, suppose a conversion of capital, waiver of some rights, something like that, that is done under Companies Act. And for that, they have to file an application to NCLT. NCLT will order an meeting. In case 90% or more member or creditor approve it, it can also waive off the requirement for holding the meeting. And otherwise, the meeting will be held, resolution will be passed, a special resolution will be passed. And if they are dissenting shareholders, they may make an application to NCLT. If NCLT directs otherwise, that okay, they are having some genuine points and you cannot do this compromise arrangement, then the matter is closed. But else they will be given an exit opportunity. Exit opportunity, again we have read, exit opportunity and dissenting shareholders. They will be given the rights, those amounts, etc. will be given to them, and the shares will be bought back. Then winding up, we discussed again that winding up powers now mostly is resting with the tribunal, because most of the powers for winding up has been given to the Insolvency and Bankruptcy Board of India under IBC Act. So, yeah, so we have to make an application to NCLT under IBC provisions of voluntary winding up or the creditors winding up. Okay, so here it remains only with the winding up by the tribunal. We have discussed 5 scenarios: who are the people who are entitled and the process of the same. So with that, almost we have completed our Companies Act. Anything else you want to take up in this? I think the part, provisions are many, but I have mainly taken what are more concerned with our syllabus of the exam. Mostly Companies Act you have read, so it doesn't goes in that length. We have to just concentrate on the specific topics which have been assigned, and these are the mainly points which you are getting in the exam. As I told, DVR point 26%, then sweat equity limits, you have to specifically remember the limits, because MCQs mostly work on the limits. Okay, let me see if I have some MCQs. We can just have a quick look on the MCQs. See, who is the authority under the registered valuer rules? NCLT, NCLAT, central government, or IBBI?
IBBI.
IBBI.
Great. The recognition certificate is granted to?
Registered Value Organization.
RVO.
Yes, recognition certificate is granted to the RVO, and registration certificate is granted to the valuer. Okay. Which of the following requirement is not must for a valuer under section 247 subsection 2? Impartial, fit, experience, and true.
Impartial.
Fit.
C, experience. We talked about fit, FIT. Fair, impartial, and true. Okay.
Fit.
So fit. We have to just remember the fit. So it is fit. Oh, I've mentioned here impartial, true, fair. Sorry, it is fair. Sorry, I think I have just written that in acronym. Okay. Now the penalty part we are coming. Yes. The contravention of section 247 and the rules therein with intent to defraud attracts penalty of
1 lakh for 1 year imprisonment and 1 lakh rupees.
yes, 1 lakh to 5
1
lakhs.
to 5, 1 to
Yes.
5 lakh and imprisonment up to 1 year.
Right. And in case it is not with intent to defraud, then amount would be
25 to 1 lakh.
right.
25 to 1 lakh without
Correct.
any imprisonment.
Yes. There will be no imprisonment in that case. And yes, apart from that, you have to return whatever you had taken. And in case because of that contravention intentionally or unintentionally, you have to refund it. You have to make good that loss. Valuer must have passed examination within last dash of making application. How many years?
3 years.
Right, 3 years. How much duration should have been passed in case of conviction?
7 years. 7 years.
Anji?
7 years.
7 years नहीं, 5 years sir. In case of conviction, मतलब अगर आपका conviction हो गया है उसके बाद कितना ड्यूरेशन आपका पास हो जाना चाहिए एटलीस्ट 5 years. 7 साल का तो हो गया, अगर 7 साल के ऊपर
डिबार 7 years डिबार
वो
ओके
तो बिल्कुल खत्म हो गया. उसमें क्या कंडीशन थी? लेस देन 6 months है. अगर आपको क्वेश्चन ऐसा आ जाएगा सॉरी कि 3 महीने के लिए इम्प्रिजनमेंट हुआ, नॉट फॉर मॉरल टर्पिट्यूड, तो पर्सन कैन व्हेन अप्लाई, तो इमीडिएटली अप्लाई, उसमें कोई दिक्कत नहीं है. 6 months से नीचे तो कोई प्रॉब्लम ही नहीं है. ठीक है. बट अगर 6 months से ज्यादा है या मॉरल टर्पिट्यूड है, मॉरल टर्पिट्यूड पे भी कंफ्यूजन होता है क्योंकि हम ये मानते हैं कि मॉरल टर्पिट्यूड में भी इंटरप्रिटेशन ये निकलता है कि 6 महीने से ज्यादा का अगर है. नो, मॉरल टर्पिट्यूड उसको सेपरेट किया हुआ है. तो 6 months और मॉरल टर्पिट्यूड तो 5 साल. अगर 7 साल से ऊपर है तो आपको कुछ भी नहीं करना है, मतलब फिर तो आप बाहर ही हो, कुछ भी नहीं कंसिडर करेंगे वो. Okay, which is not included in the definition of fit and proper person under the rule 3K. ये आपको याद करना पड़ेगा. ठीक है. इंटीग्रिटी, रेपुटेशन एंड कैरेक्टर पहला दिया हुआ था. एब्सेंस ऑफ कन्विक्शन एंड रिस्ट्रेंट ऑर्डर सेकंड था. कॉम्पिटेंस एंड फाइनेंशियल सॉल्वेंसी थर्ड था. फाइनेंशियल सॉल्वेंट मतलब आप फाइनेंशियल आपको सॉल्वेंट होना पड़ेगा. जब आप एप्लीकेशन भेजोगे तो आपको सारी अपनी रिटर्न सब भेजनी पड़ेंगी. आपको अपने फाइनेंशियल स्ट्रेंथ भी दिखानी पड़ेगी. So in this case, qualification, moral turpitude, experience as per section rule 3K. हम specifically उस rule की बात करें. Otherwise तो बाकी rules में बाकी चीजें prescribed है ही हैं. Yes, application for registration by the individual valuer has to be made in
Form A.
Correct. Form A, B, C, D, E. A by individual 5,000, B by entity 10,000, C certificate of registration, D by RBO 1 lakh rupees, E certificate of recognition. These are the only 5 forms in the rule. Certificate of recognition is granted in
E, ma'am.
Right, form E. If accepted, the authority has to grant certificate of registration in
21 days.
60 days.
60 days. Total time duration is 60 days. It is divided into different parts. First thing you have to keep in mind, whenever an application is filed with the authority, they have to grant certificate of registration or the certificate of recognition within 60 days. 21 days has been given for correcting the deficiency. Okay. For rejection, it is 45 days. In case they have rejected, you have 15 days time to resubmit your documents or give your submissions as to why you should be registered. Okay. And in that, after that, receiving within 30 days, they have to confirm whatever their final decision is. Any order for disposal of show cause notice shall be effective Point number 11. It would be, sir, yeah,
30
please.
days.
30 days.
30 days.
Correct. 30 days. Okay, 30 days time is given in form either you can go for an appeal or something like that. It won't be further, you know, in the case of RVO, suppose the certificate of recognition has been cancelled. RVO's certificate of recognition has been cancelled. What about the valuers who are the members there? So the time will be given for the members to get them registered with some other valuation, RVO. So that much time will be given. The complaint against a valuer or RVO has to be made along with fees of
1,000.
Yes, 1,000 rupees. देखो सर कितनी सस्ती है हमारे ऊपर इन्वेस्टिगेशन होना. 1,000 रुपए कोई भी जाकर के दे आएगा और उसके बाद आप जो है आपके पीछे अथॉरिटीज घूमेगी. चलिए. Shares cannot be issued at discount except
Sweat equity only.
So both A and B. Yes.
Sweat
equity and conversion of loan under resolution scheme.
A and B.
अगर लोन के उसमें भी कन्वर्जन कोई हो रहा है दैट टू अंडर सम स्टैट्यूटरी रेजोल्यूशन प्रोसेस, कोई भी स्टैट्यूटरी अथॉरिटी कर रही है, आईबीसी कर रही है, आरबीआई कर रही है, कोई अथॉरिटी कर रही है, तो उस केस में भी डिस्काउंट में इशू हो सकता है. Preference shareholders can vote in all resolution if
B.
G. Dividend has not been paid for 2 years. Then they are authorized to vote on all resolutions. The total amount of DPR that can be issued by a company should not exceed
26%.
26%.
26%.
Right. The premium collected on shares at time of issue is to be transferred in
Security premium account.
Securities premium account. Correct. In general, preference shares cannot be issued with redemption period of more than
20 years.
20 years.
20 years, right. Except in case of infra company where 30 years has
30
been,
years.
30 years has been given, right. Bonus shares cannot be issued out of which of the following?
Revaluation reserve.
Correct. सिर्फ सिक्योरिटीज प्रीमियम अकाउंट, फ्री रिजर्व्स और कैपिटल रिडेम्पशन रिजर्व से ही बोनस इश्यू हो सकते हैं, रिवैल्यूएशन से नहीं हो सकते. Maximum sweat equity shares issued at any point of time should not exceed
15%.
25%.
25%. सर 15% पर ईयर के लिए है, मतलब इन पर्टिकुलर ईयर 15% और 5 CR, and at any point of time it is 25%. Next.
5 years.
Correct. 5 years का अगर डिफॉल्ट है तो कंपनी की वाइंडिंग अप हो सकती है. Within how many days of application the tribunal has to give order in case of winding up?
90 days.
करेक्ट. ये बहुत इंपॉर्टेंट क्वेश्चन है सर, स्पेसिफिकली इस चीज को ध्यान रखिएगा, ये वाला पर्टिकुलरली 90 डेज वाला बहुत इंपॉर्टेंट क्वेश्चन है. Yes. In case of summary winding up, who has been given power to make order?
Central government.
Right. Central government को power दे दी गई है and which has been delegated to RD. In case of acquisition of shares of dissenting shareholders, within how many days they should be paid the consideration?
C.
60 days. 60 days, correct. Within 60 days, they have to pay, the consideration has to be paid. So that's all. इसका काफी हद तक मुझे लग रहा है कि आप लोग का ये तो क्लियर हो गया है. I'll share also this with the AII, तो आप उसमें फर्दर और देख सकते हैं. Okay. थोड़ा सा 5 मिनट का ब्रेक लेंगे आप लोग. What do you think? या कंटिन्यू करना है, देख लें आप लोग।
Not 5 minutes, ma'am. At least 10 to 15 minutes.
10 मिनट का ब्रेक चाहिए।
15 minutes.
15 मिनट। चलिए अभी हो रहा है 2:45, तो 3 बजे कितना, सॉरी 3:45 हो रहा है। 4 बजे, बिकॉज अभी हमारे पास सरफेसी, स्टैम्प एक्ट और जुडिशियल प्रोनाउंसमेंट 3 चीजें हैं। ठीक है, तो शार्पली 4 o'clock प्लीज आ जाइएगा। बाकी इसमें तो और कोई कंफ्यूजन नहीं है, होपफुली। ओके।
Bhishma.
हो गया प्रवीण सर, आप फ्री? प्रवीण सर फ्रेश हो गए? सर बाकी लोग आ गए हैं, कैसे स्टार्ट करें? शुड वी स्टार्ट? लेट्स वेट फॉर अनदर 2 minutes, बाकी लोग भी आ जाए. So should we start?
Please start, ma'am.
Okay. Okay. So next we are taking up SFA Act. SFA Act का अपने में नाम ही बहुत बड़ा है, सबसे पहले तो नाम समझ लें. Securitization and reconstruction of financial asset. This is one part of the act. And second is enforcement of security interest. So first of all, we will just try to understand कि इस act का background क्या है. As you all know, कोई भी company होती है, कोई भी organization होती है, तो they have their funds in the form of equity or the debt. So debt लेते हैं, default होती है. तो earlier क्या था कि 1956 act में there was a provision कि भी ठीक है, whenever there is any default, creditors may go to court and they file the suit and everything. But court में गए तो मामला वैसे ही खत्म हो जाता है, इतना लंबा duration होता है. So what the government thought, the banks and financial institutions, they made a request to the government that we are lending and we are having such problem that we are not able to recover whatever we have lended. तो हमारे लिए कुछ आप शॉर्ट का टर्म का कुछ ऐसा प्रोविजन बनाइए कि एटलीस्ट हमारा बिजनेस चलता रहे. अब 6 से 7 साल तक केसेस चल रहे हैं, हाउ वी आर गोइंग टू रिकवर आवर अमाउंट. सो द गवर्नमेंट केम अप विद द डीआरटी, रिकवरी ऑफ डेट एक्ट 1993. उसके अंदर दो स्पेशल कोर्ट्स बनाई गई, डीआरटी एंड डीआरएटी. सो व्हाट अबाउट डीआरटी? इन दैट DRT was made to resolve all the cases placed before it within 6 months, and same was with the DRT. So 6 months plus 6 months, maximum 12 months. So the lenders were now very happy that okay, we have a special court, now our case will be resolved in 6 months, and in case it goes to appeal, then maximum 12 months. So by 12 months we'll be getting our amount, and it started working good also. But again, as the time passed, the duration also started increasing, though on the papers it was same, but started increasing 1 year, 2 year, 3 years. Again, the DRT and DRAT was overburdened with the cases. So again, the application was made to the government and requisition was made to the government that now again we are having the same problem, 2 year, 3 year problems. So just find a way out. So the government came up with the Securitization and Reconstruction of Act, SFA Act, which we call it in short. First of all, the most lucrative things of the SFA Act. पहला, no court is involved. इसमें कोर्ट का कोई रोल नहीं है. जो लेंडर है, he is entitled to recover his amount directly from the borrower by just giving a 60 days notice. तो यहाँ पे कहानी 60 days पे आ जाती है. So to some extent, it gave a very good lucrative offer to the lenders. कि कोर्ट के पास नहीं जाना है, they have some super powers, they had some powers to just अगर 60 days में they have given a notice of 60 days, the borrower has not reverted in those 60 days or has not been able to pay the amount, on the 61st day they were entitled to attach the encumbered properties. So they could take that property, take the possession of that property, sell it off, lease it off, dispose it off, and recover their money. And in case it was some company or something on which where stock etc. was hypothecated, in that case the amount could be recovered by taking over the management of the company. So these were the superpowers. Now let's come to the presentation. Now first of all we will understand, as I told, that there are two parts in this act. One is recovery part and one is securitization part. First of all we will just understand the recovery part. Suppose there is a bad loan, okay, then what the lender will do, it will give a notice to the borrower. Duration 60 days. Please remember the 60 days, it is very, very important. Okay, so 60 days notice will be given to the borrower. Now, ऐसा नहीं है कि borrower has no way out. Is 60 days का notice मिल गया and now he has no way out. He has way out. First way out is to present his case in 15 days. जो भी lender है, the borrower will, once he receives the notice, he will go to the lender, try to explain his situation, why he is not able to pay it off. Okay. अगर lender agree कर जाता है, it's very good. Else, the second option available is make an application to DRT. Yes, in SFA, DRT is having role, but limited role. Just as in deciding any conflicts or any such type of matters. So if nothing has been resolved by the borrower and the bank within 15 days, then the borrower will make an application to the DRT. Earlier it was, initially the act said that in case you are making an application to DRT, you have to deposit 70% of the amount of the dues. But in that case, there were no cases in DRT. Because जो 70% दे देगा, he will negotiate with some and just try to come out with some solution. So there was no logic. So laterally this amount was just left off. So no amount to be given to, no deposits to be given to DRT, and the borrower after 15 days, if the matter is not resolved within 15 days, it will make an application to DRT within 45 days. Because total time span is 60 days. So whatever he has to do within those days only. Now again, if the DRT gives some order, it's fine. But if the DRT doesn't give any order, then the next remedy is going to DRAT, Debt Recovery Appellate Tribunal. Okay, but in this case, you have to deposit 50% of the amount due. Whatever amount is due on you, you have to deposit 50%, then only you can make an application to DRAT. Suppose DRAT also doesn't give any relief. So on the expiry of the duration, the lender is in position to just take over the asset and convert property on whatever property the charge was created. Okay. Now, suppose property has been taken by the bank, what the bank will do of that property? Either it can lease it out and just recover some rent or something like that, or it will sell it off. So suppose the bank plans to sell it off, then what the liability of bank is to give 30 days prior notice to the borrower and 2 newspaper advertisements. Now, whosoever buys the that particular property, including the borrower, he can also buy. He is also the right. Okay, so he has to pay 25% amount upfront and balance 75% in 15 days. Excess amount, if any recovered, will be returned to the borrower. This is the process. Again, I'll explain. There is a bad loan. Now, the lender will send a notice to the borrower. 60 days notice, giving all the particulars, that what was the loan, what was the cause, what was the delay, what is the default, everything he will mention. Once the borrower receives that application, within 15 days, it will make a presentation to the lender. Lender will again, if the lender agrees to it, they come to some consensus, it's fine. Else, the borrower will make an application to DRT. DRT, if gives any direction, well and good, that direction will be complied. If doesn't gives, then borrower has option to make an application to DRAT. DRAT, for making any application to DRAT, you have to deposit the 50% of amount due. Okay. In case the borrower doesn't get any relief over there, and bank takes an action and just attaches the property, takes over the position of the property and plans to sell it, then bank or the financial institution is under liability for giving notice to the borrower for 30 days. So if that borrower wants to buy that particular property, he can also make some arrangements. Newspaper ad will be given, and whosoever buys that particular property, he has to pay 25% upfront and balance 75% in 15 days. Excess amount, if any, required. Say amount due was 50 lakhs and the amount recovered after selling was 55 lakhs. So 5 lakhs excess will be given to the borrower. Bank or the financial institution is only concerned with the amount of 50 lakhs. Now, power of the lender. Some superpowers have been given to the lenders in this particular case. As I said, that the court has been removed from the process. So, some powers have been given to the lender. What are these powers? First is take the possession. As I told, whatever the encumbered property is, suppose a vehicle is there or some land building is there, so they will take the possession. They can sell it off or lease it off. Their primary motive is to recover that amount. So they will either sell it off or lease it off. Third is takeover of management. In cases where loan or etc. has been done on the basis of stock or something like that, which cannot be taken over. In that case, the management can also be taken over by the lender. Now, there are three cases where SARFAESI is not applicable. First is agricultural land. If any farmer has taken any loan and his land is mortgaged in the process, then bank or the financial institution cannot sell off that land. So this is a particular case in this particular SARFAESI Act. The only option available to them will be to make a compromise or rearrangement, restructuring of the loan. Amount, days can be increased, rate of interest can be reduced, whatsoever they come to the conclusion. Second is amount due is up to 1 lakh. Say amount is 50,000, 25,000. In that case, you cannot invoke SARFAESI. And third is amount due is less than 20% of principal and interest. 85% has been paid, 15% is left. Now the lender wants to invoke SARFAESI, he cannot. At least the amount payable should be more than 20% of the principal and interest. 70%, even 79% amount has been paid, 21% is available, he can invoke the SARFAESI. Further, we have to understand that in SARFAESI Act, who are the authorized lenders? It is not like anybody XYZ. We have some local people, local colony person who is giving loans and he says that, okay, you are not recovering, I'm not able to recover my loan and I'm going to invoke SARFAESI. No. Specifically, bank, financial institutions and NBFCs. Some category, recently it has been described that some specific category of NBFC can invoke this SARFAESI Act. So basically it is banks, financial institutions and organizations as may be specified by the Reserve Bank of India. So this is about the recovery process broadly. I hope it is clear. Should I do the recap of the recovery process or should we move off to securitization process? I think it's clear to you. So let's go to securitization process. Now, what is securitization? Say, there were some loans given by, there is a lender, a bank, then there is a borrower. Okay. Now, there has been a default and this loan has turned a bad loan. Now, what the bank will do, it doesn't want to carry that burden. So some special purpose vehicles are created, SPVs as we know. What they do, they buy this loan, okay, and pay off to the bank. From where they will pay off to the bank? What they will do, they will issue securities to the third party. That means investors. They will bring in some investors, issue securities to that investor, obtain the money against those securities and pay off to the bank. Okay, this is the securitization process. Now what happened? Bank has got its money and the SPV or the whatever the organization has acquired that amount is in the shoes of the creditor. Okay, these are these organizations, special purpose vehicles, are known as asset reconstruction companies, ARCs, which we talk about. This is their way of working. Buy the bad loan, sell it off to some developer scheme, sell off that scheme to qualified buyer, obtain money, pay off to the bank, and then start the recovery process of this particular bad loan. Okay, so this is the securitization process. So parties involved in securitization process: originator is there, borrower is there, special purpose vehicle is there, and the investor are there. 4 people are there, basically. This person, since this borrower, he is bound to pay amount to this lender, he is not able to pay. This originator then selling this amount to special purpose vehicle. It is against that loan, it is preparing some scheme, and it is selling to investor, getting the securities issued and recovering the money. This I have already explained to you. This process of. Now let us understand what is the purpose of basically SFA Act. First, it is there to enable and empower the secured creditor to take possession of their securities and to deal with them without the intervention of court. As I told that whether it was the normal civil court or the DRT or the DRAT, whatsoever the effort the government tried to make, all went into vain. Because once the court is there, initially it is working good. Sooner or later, it is getting overburdened and the process gets delayed. So the purpose of this act was to eliminate the element of court, to make the lenders empowered to realize their securities. Okay, and also alternatively to authorize any securitization or reconstruction company to acquire financial assets of any bank or financial institutions. So basically 2 purposes are there. First is recovery of the amount without intervention of court. Second is securitization process. Now some important definitions are there. Asset reconstruction company. This is very important question because usually from this particular act, you get questions about the asset reconstruction company only, because they are quite popular in when you come across the IBC cases. So asset reconstruction company means a company registered with Reserve Bank of India for the purpose of carrying on the business of asset reconstruction or securitization or both. Okay. So they are doing a specified business of asset reconstruction company and they need registration of Reserve Bank of India. And asset reconstruction, as I told, acquisition by any asset reconstruction company of any right or interest of any bank or financial institution in any financial assistance for the purpose of realization of such financial assistance. So this is the process where they take the powers. Now financial asset has been described. You can just go through it. Nothing much to explain in this. It is a simple definition. Claim or debt, any debt or receivable secured by mortgage or charge. Like this, they have defined the financial asset. Now secured creditor. As I told, that SFA is can be invoked only by the financial institutions or the banks or any other organization which has been registered with Reserve Bank of India or specified with Reserve Bank of India. So this is the case. Debenture trustees are also under secured creditors. And asset reconstruction company. Once an asset reconstruction company takes over the asset, it steps in shoes of the creditor, original creditor. Now, again, we start with very important points. What are the requirements for registration of asset reconstruction company? This is the most important question from SFA Act. What are the requirements for registration of asset reconstruction company? That's why I've highlighted in red. First is net owned fund not less than 2 crores rupees. This is the first requirement. Then it should be registered with RBI. Now, what are the additional conditions? These all conditions are very important and you will be getting questions mostly out of it only. It should not have incurred losses in any of the 3 preceding financial year. On the date of making an application, preceding 3 years, there should not be any losses. Second, such asset reconstruction company has made adequate arrangement for realization of financial assets acquired for the purpose of securitization of asset reconstruction and able to pay periodical return and redeem on respective dates on the investment made in the company by the qualified buyers or other person. Now, what this point says, that asset reconstruction company has to show that it is having first sufficient number of buyers, qualified buyers, as I said, that it acquires a asset. Against that asset, it prepares a scheme and issues securities. So these securities, there should be a proper mechanism, and they should show that yes, we are having some scheme, we are having some buyers. ऐसा नहीं है कि हमने ले लिया और उसके बाद हम लेके बैठे हुए हैं. We are having sufficient modes to recover that amount. और जो हमारे investors हैं, उनको भी हम periodical return देंगे. भी आपने invest कर दिया और उसके बाद बैठे हो, वो बेचारे को कुछ मिल ही नहीं रहा. तो ये they have to satisfy on this point to the Reserve Bank of India. Third is the directors of the asset reconstruction company have adequate professional experience. उनको ये show करना पड़ेगा that whosoever director is managing the asset reconstruction company, they are having sufficient expertise in such matters. And any of the director has not been convicted of any offense involving moral turpitude. A sponsor, if there has been a sponsor of an asset reconstruction company, it is a fit and proper person in accordance with the criteria specified by Reserve Bank of India. Asset reconstruction company has complied with or is in position to comply with the norms specified by Reserve Bank of India, and it has complied with one or more conditions in the guidelines issued by Reserve Bank of India. So, अगर हम asset reconstruction company की बात करें, first thing is net owed fund, which should not be less than 2 crores. Second, no losses in last 3 years of making application. Third, sufficient sources of fund and sufficient provisions for paying returns to the investors. Fourth, directors should be qualified persons, professional persons with proper experience. Fifth, they should not be involved of moral turpitude, and then they should be complying with all the norms given by Reserve Bank of India. So these are the 4 points. Asset 3 years, this point, directors of the asset ARC, and moral turpitude, and 2 crores rupees, which I said. These are the 5 points out of which you are getting most of the question in this SFA Act. Now, once you have registered within, once you have got registration as an asset reconstruction company, so obviously any changes will require approval of RBI, because as I said, they have RBI before granting the registration also checks about the credibility of the management. What is the qualification of the directors? Have they been convicted of any offense? Everything. So you got good people, very with all neat and clean records. You made an application and then you changed the management. No, you cannot do any change in management, any appointment of director, managing director, any change in location of office, name, everything requires approval of RBI. So without obtaining approval of RBI, you cannot do anything. Now, there are some cases where RBI may cancel the certificate also if it ceases to carry on the business of securitization and ceases to receive or hold any investment from a qualified buyer. आपके पास buyer ही नहीं है, कोई है ही नहीं, तो how you are going to buy that asset and securitize it? You need to have qualified buyers. So apart from that, अगर आपने कोई compliance नहीं की है, or any other accounts as directed by the RBI you have not maintained, in that case RBI can also cancel the registration, and in case any such action has been taken by RBI, within 30 days you can make an appeal to the central government against such order. Now, this is acquisition of right or interest in financial assets, means the stage where the ARC is acquiring anything from the bank. Any such transaction, any document executed by any, please come to the last point. Initially, I have discussed that it can be done by issue of debenture or bond, or by agreeing to an agreement with the bank. These are the 2 modes in which the acquisition of right is taken. And the most important crux of this, yes? The crux is any document executed by any bank or financial institution for the purpose of asset reconstruction and securitization shall be exempted from the stamp. ये आपसे ये भी again बहुत पूछा जाता है कि जो भी whatever the agreement has been entered, either any agreement has been entered or any debenture has been issued, what is the amount of stamp duty leviable on such transaction? So it is exempted from the stamp duty. Okay. In fact, whatever securities are also issued by the ARC, they are also exempted. Both are exempted. So you have to just keep in mind that under SFA Act, any agreement that has been executed by SPV with the bank or any securities has been issued to the qualified institutional buyers, no stamp duty is applicable. Now this point says that suppose there is an ARC, it is not obviously working for only one bank or one asset it has acquired. It must be acquiring say 4 or 5 assets which are already in dispute. Earlier dispute was any dispute was referred to DRT, and it is still also in existence. So if there are any such situations where say suppose 5 DRTs are there and 5 assets are in 5 DRTs. Now what it is difficult for the ARC or the ARC people to go to 5 DRTs and get all the clearances. So they can make an application to the appellate tribunal and get all the pending litigations transferred under one particular DRT. So this is again, I've highlighted red points which you should definitely keep into mind while you are reading this particular topic for the purpose of exam. So if cases are under many DRT, make an application to DRAT to get them transferred to one DRT. As I said, any security receipt is again exempt from registration. No registration is required. No stamp duty is payable. Okay. As issue or registration of security receipt means any security receipt issued by the ARC. As we said, as I told you, there is an ARC, there is a bank. Any execution between any agreement between bank and ARC exempt. Any security issued by ARC exempt. Now these are the methods of asset reconstruction. As we said that the name of the act is Securities and Asset Reconstruction. So how the asset reconstruction takes place? Takeover of the management. Situations where you cannot take the possession of the encumbered property, then management is taken over. Sale or lease or part of whole of the business of the borrower. Rescheduling of payment of debts. Enforcement of security interest, that means selling off whatever encumbered property was. Settlement of dues payable by the borrower. You can just increase, decrease, just come to a negotiation, increase the time period, whatsoever. You are making some adjustments in the terms of dues payment. Taking possession of secured asset in accordance with the provision of this act. Conversion of any portion of debt into shares of a borrower company. So these are the ways in which the asset reconstruction is done. You can take over the management, you can sell, lease, you can sell it off, you can settle down the dues, whatsoever you can imagine, everything is there. Now, asset reconstruction companies can also act as an agent for bank, manager, or a receiver. This is not much relevant. Now, action by the borrower. As I said, we discussed initially also that any such action where creditor is making any notice to the borrower, it is of 60 days. So within 60 days, when 60 days notice has been given, 15 days, as we discussed, 15 days for making submission, then 45 days to DRT, DRAT, and then the process. So these are the action by the borrower. Now recourse available to the creditor. As I told, they can take the position of the secured assets and take over the management of the company. In case there is any hindrance, then they can seek the help of Chief Metropolitan Magistrate or the District Magistrate. This is also a common question, that in case there is a dispute or ARC is not able or a creditor is not able to take the position, whose assistance they can take. So it is Chief Metropolitan Magistrate or the District Magistrate. There are some guidelines separately by the SEBI. Like takeover is to be done only when amount due from the borrower is not less than 25% of the total asset owned by the borrower. Okay, in case you are taking over the management, then at least amount due should be 25%. And in case there is a consortium financing, then it should be approved by 75% of the borrowers. There should be reasonable ground for such takeover. You are taking over some company. Okay, you are just suspending the management, everything. So you have to prove that why you are doing this. So you have to give proper reasons like improper management, alienation of security by the borrower, or discontinuation of business. If you think that there is something like fishy about the company, they are just trying to take some loophole and just selling off the assets, they are parting of the assets, in that case, they can make an application for takeover of the business. Application against the active creditor we have discussed. Now, this is again a very important point. No compensation of director for loss of the office. So in case, this is again a very favorite question, that in case the management has been taken over by the company, by the creditor, what is the amount of compensation payable to directors for loss of office? They will say average of 6 months salary, 3 months salary, something, and then no compensation. So in this case, there is no compensation payable to the directors. There are some provisions where it is not applicable. This is separately given in the Act. Lien on any good under Indian Contract Act, Sales of Goods Act, pledge of movable within the meaning of Section 172, creation of securities. And these are the specific provisions where the Act says that the amount that the SFA Act is not applicable. Okay. So this is all about the SFA Act. I'll just give a recap. SFA Act, purpose, enforcement of security interests. That means whatever security has been encumbered, they will realize it. Second is reconstruction of financial assets. That means there has been a bad loan or a financial asset which is being reconstructed by the creditor. Okay. Here the main lucrative feature is that there is no intervention of court. They don't need to make any if there is any default, they don't need to make any application to any of the court for the recovery process. They can on their own initiate the process. They have to give 60 days notice to the borrower. Within 15 days, borrower will make his representation. In case he gets relief, very good. If doesn't get, he will make an application to DRT. Gets relief from DRT, very good. Now, if doesn't get, make an application to DRT by depositing 50% of the amount due, so that you may show that you are a genuine person and there is some reasons why you are fighting against the lender. Okay. So if the DRT gives any relief, very good. If it doesn't give, then what is the recourse? No recourse available. 61st day, the lender will come and take the property, whatsoever it's charged. He can take the possession, he can sell it off. In case he sell it off or lease it off, whatever he does. In case he sells it off, he will give borrower 30 days notice and newspaper advertisement. The buyer, whosoever buys that particular asset, has to give 25% amount upfront and 75% can be given within 15 days. So this is the process of recovery. If the recovery, the lender doesn't intend to make the recovery process, he has second option. He will settle that bad loan to an asset reconstruction company. That asset construction company, once it takes over that loan, comes in the shoes of the creditor and has all the powers which the original lender has. This asset reconstruction company, it will issue security to a third buyer, investor. That money received will be given to the bank and the amount will be cleared off. And this asset reconstruction company will be the new creditor and start the recovery process. Since they are expert in that, their entire business is recovery of these such type of financial assets. So they are very well able to realize the amount. But they have a responsibility to repay the interest also, to repay the returns to the investors. So now the asset reconstruction company, they say that anyone cannot be asset reconstruction company. There are some requirements. Asset reconstruction company needs to be registered with Reserve Bank of India. कुछ क्राइटेरियाज दिए हैं कि आप क्या क्या आपके पास मस्ट होना चाहिए. First is 2 crores net worth. Second is no loss in last 3 years. Third is that the amount which you intend to recover or the amount of bad loan, you have sufficient sources to just buy that bad loan, and also you have sufficient qualified buyers and you are able to pay some returns to them. Okay. Fourth thing, it says that directors should be professional people and they should not be convicted of any moral turpitude. And then they say that there are few requirements of RBI guidelines. They say that you have to comply with it. If you have done all these things, RBI will register you as an asset reconstruction company. Once you are registered, then in case you want to change any management, change any name or anything like that, you have to take the permission of RBI. Okay. Now the securitization process has been done. Now suppose the creditor can be now asset reconstruction company also. Now what they have the powers to just sell, lease, everything, do, and take over the management, which comes basically in this process. In case they take over the management, they should have sufficient grounds for taking over the management of the company. First is that the amount due should not be less than 25% of the original amount of the amount due. Okay, and second, if there is a consortium financing, 75% approval should be there of the other lenders also. And they should prove that the company is acting in such manner that if it is not taken over, it will cause harm in long run, say like alienation of assets, selling off of properties, some internal adjustments, and so on. So now if you have taken the management of the company, then the directors of the company are not entitled to claim any compensation for the loss of their office. Okay, so this is the broad outline of SFA Act. It is very deep act, but for our purpose, this much information is sufficient, and mostly questions you'll be getting out of these points. So I hope it's clear to everyone.
Yes, yes.
So now one small act is there. We'll just have a quick look at Indian Stamp Act, because not much questions are coming from Stamp Act, but we have to just take a broad view how Stamp Act works, and then we will go to the judicial pronouncements. So some speaker is on. I'm having some news in background. I don't know whose speaker is on. Okay, so the main purpose of this act is to raise revenue for the government. It is an act which is a source of income for the government. The income earns revenue by way of Stamp Act. So there are two terminologies used frequently in this act. One is conveyance and other is instrument. So what is conveyance? Includes a conveyance on sale and every instrument by which property movable, immovable, transferred, and not otherwise specified in schedule. Does not include will. Okay, conveyance means any transfer of property or interest or right therein property, but excluding the will. And the instrument is the instrument by which such conveyance is being done. Okay, so that is covered in the definition of instrument. Now this section 3 of the Stamp Act is the charging section. It says that whatever things are documents, instruments are mentioned in Schedule 1, and according to the amount specified therein, the liability to stamp duty arises. That means it is very clear. Schedule 1 है, उसमें list of instruments है, उसमें rate of stamp duty है. You have to check with that particular schedule and accordingly pay the stamp duty. Okay. And the instruments which are not mentioned therein, they are not subject to stamp duty. That is very clear. Here some special provisions have been given, like instruments mentioned in Schedule 1, which is the charging section, as I said, executed in India, whether the property matter is in India or outside India, it is chargeable with duty. That means property is whether it is in India or outside India, but you are executing the document in India, instrument in India. Here we are using the word instrument. So that instrument is chargeable to the duty. Okay. So, bill of exchange, promissory note, executed, drawn, made outside India, but any of the following thing is done in India. There is a bill of exchange, promissory note, person is outside India, executed outside India, but for anything which is done in India, like accepted or paid in India, presented for acceptance and payment, endorsed, transferred, or otherwise negotiated in India. If any of these things you are doing here, then it is liable to be under the Stamp Act. Bill of exchange on demand are not subjected to stamp duty, and executed outside India and acted upon outside India means these three things are, none of these three things are happening in India. They are also not covered in Indian Stamp Act. बाहर ही कर रहे हैं, बाहर ही एग्जीक्यूट कर रहे हैं, बाहर ही उसको पे कर रहे हैं, तो हम कहां से स्टैंप ड्यूटी लेंगे? ठीक है, तो इट्स वेरी क्लियर. बाहर का बाहर में है तो कोई स्टैंप ड्यूटी नहीं है, लेकिन बाहर का है और पेमेंट यहां कर रहे हैं, एक्सेप्टेंस यहां कर रहे हैं, यू हैव टू पे द स्टैंप ड्यूटी. इंस्ट्रूमेंट इंडिया में एग्जीक्यूट हो रहा है, किसी भी चीज के लिए बाहर हो रहा है, आप इंडिया में एग्जीक्यूट कर रहे हैं, यू आर लायबल टू द ड्यूटी। क्लियरली एक चीज और ये बोलता है, अगर कुछ भी आपका गवर्नमेंट के साथ इंटरेक्शन हो रहा है वेयर गवर्नमेंट इज लायबल टू पे द ड्यूटी, दैट इज आल्सो एग्जेम्प्ट। मींस गवर्नमेंट को कभी भी ड्यूटी नहीं पे करना है, स्टैम्प ड्यूटी गवर्नमेंट नहीं पे करेगी। Okay, so any transaction which is with government which is liable to stamp duty, you are not liable to pay the stamp duty. These are the three situations where, as I told, any instrument executed by or behalf of India where government is liable to pay as per the act, exempted. Instrument for sale, transfer or other disposition of any ship or vessel, exempted. Instrument executed by or in behalf of favor of the developer or unit in connection with special economic zone, that is also exempted. Now it says कि whenever you are deciding a transaction, instruments कई बार बहुत complex होते हैं, तो you have to just look throughout the instrument to understand under what schedule. Yeah, I told you that there is a schedule 1 and the instruments are mentioned there. Okay, so you have to just analyze the entire document, understand what is this transaction and in which category it falls. Accordingly, you have to decide what stamp duty is payable. Now, there are 3-4 situations which are slightly complex, in which first is single transaction, many instruments. There is a transaction is one, but there are many instruments in the process of transaction. Maybe there were some agreement was there, some addition was there, some modifications were there in that particular. So many instruments were executed in the process. It is usually for sale, mortgage, settlement. Then parties have to decide the principal instrument. Okay, parties are free to decide which is the principal instrument and accordingly they have to pay the duty. Single instrument with several distinct matters. एक ही इंस्ट्रूमेंट में आपने कई सारे मैटर्स निपटा दिए just to evade the stamp duty, then they are very smart, they will say aggregate में जमा करो, जितने आपकी जिस कैटेगरी में हो रहा है, जितने आपने ट्रांजैक्शंस उसमें मेंशन किया है, if they are chargeable separately under the schedule, just sum it off everything and pay. Such instruments are called as multifarious instrument. Okay, now instrument coming within several description. एक इंस्ट्रूमेंट है लेकिन वो शेड्यूल कुछ उसका पार्ट है जो शेड्यूल 1 के एक कैटेगरी में फॉलो हो रहा है, किसी दूसरी कैटेगरी में फॉलो हो रहा है. दैट मींस सिंगल इंस्ट्रूमेंट इज देयर बट इज फॉलोइंग इन मेनी कैटेगरीज. सो इन दैट केस the category which carries the highest amount of duty, that has to be paid. Okay, then principal and ancillary transaction, there might be some transaction where there is a original agreement and instrument and then there is a supporting instrument. Now suppose the original instrument was not chargeable to duty, stamp duty as per the schedule 1, but the subsidiary was chargeable. So in that case the entire document will be exempted, nothing will be charged. Now valuation of duty, in case of ad valorem in foreign currency, you have to convert as on the date of execution. Whatever date you are executing that particular document, you have to convert the entire amount into Indian currency and pay the duty. Similarly, stock, you have to just get the value of the stock and pay the stamp duty. In other cases, you have to just, if instrument payable by terms of interest payable by terms of instrument, say the amount is 10,000 rupees and says that it carries a 10% of interest somewhere in some other manner. So you don't have to just calculate the interest, add the total amount and then pay the stamp duty. You have to just ignore the interest factor. Now they say that in case of annuities means definite period, we have to pay a fixed amount. Okay, so they say that if some payable for a definite period, I know it is going to be paid for 10 years. Amount is also sure. I'm paying 5,000 rupees per year for 10 years. So I know that I have to pay 50,000 rupees in next 10 years. Amount is certain, then that is the amount. On that amount, we have to pay the stamp duty. But in case indefinite period is there and not terminable with life, okay, duration is undetermined and it is not terminable with life of anyone. Like Mr. X, जब तक वो जिंदा रहेंगे तब तक मिलेगा. No, not terminable with life, लेकिन period sure नहीं है by any of the reason as mentioned in the instrument. So amount payable in 20 years. These 3 points are again important, especially these two, 20 years and 12 years you have to remember. Indefinite period not terminable with life, 20 years. Indefinite period and terminable with life, हमें नहीं पता वो बंदा कब तक जिंदा रहेगा, लेकिन उसके मरने के बाद हमारी liability खत्म हो जाएगी. So in that case 12 years. 20 years या 12 years में जो भी आप amount pay कर रहे हैं उसको aggregate करेंगे और उसकी basis पे आज की date में you will have to pay the stamp duty. Now it says, suppose in the case there is some case where amount is not determinable by any reason. The executor says that no, I'm not able to decide what is the amount. So Act is also very smart. They say, okay, if you're not able to decide the amount, whatever you deem fit, you pay. But the amount you have paid, you will be entitled to recover that amount only. Say like, suppose for a document up to 1 lakh, 100 rupees stamp duty was payable. The person said that, okay, my amount is 1 lakh rupees and he paid the 100 rupees stamp duty. In future, any litigation arises and they come to know, no, the amount was 2 lakh rupees. So under that instrument, he is entitled to recover only 1 lakh rupees. That means the amount which is covered by the stamp paid. There are two exceptions. These are again the government types, mining lease, stamp duty is calculated on the basis of estimated value of royalty or the shares of the produce, as the case may be. And second, it says that suppose you have same situation we take, the amount actually was 2 lakh, but it was valued by the executant as 1 lakh rupees. 100 amount rupees was paid. Now, when the situation came in front, so they have this right that they can go to the collector, tell to him that this was the situation. Under this situation, I paid less duty. I was not aware whatsoever situation is there. So if the collector is satisfied, he may just make the default good. He will say, okay, koi dikkat nahi hai, and you pay the additional amount and the document will be valid. Now they say that the consideration should be mentioned fully in the instrument. Koi bhi instrument you are executing and it carries amount, the amount should be clear. And in case of real estate property, the amount should be the amount which is at the time instrument was executed and not when the executant acquired it. 5 साल पहले 5 लाख की बिल्डिंग acquire करी थी, आज उसको ट्रांसफर कर रहे हैं and current value जो है वो 10 लाख की है, तो you have to take 10 lakh rupees, not the 5 lakh rupees. You have to take the amount as the current value at the time of execution of the documents, not when the executant acquired it. Then it says there are obligation to give receipt in certain cases. Amount is very meager, maybe act बहुत पुराना है, तो समय के हिसाब से चल रहा है. Receiving money in case more than 20 rupees, BOE, promissory note, etc. above 20 rupees, receives movable property of value exceeding 20 rupees in part satisfaction of debt. But such obligation arises only when demand for receipt is made by the person who is receiving it. Then only you have the liability to pay. Primary duty of stamping lies on the person executing the instrument. Now we know there are two types of stamps. We just understand that what are the stamp duty, when it is liable, we have to pay the stamp duty accordance with the schedule 1. Whatever mention has been given in schedule 1, the amount has been mentioned, we have to pay accordingly. In case there is any conflict in the documents, so if there are many documents, we have to pay accordingly, we have to total it, like that all we have seen. So now what is the way of payment of stamp duty? First is adhesive stamp, second is impress stamp. Adhesive stamp, which we are sticking. Chote stamps hote hain, what the share transfer stamps we are affixing, like that. They are the adhesive stamp, and these are the impress stamp, which are impressed by the government. So for instrument with duty not exceeding 10 naya paisa, bill of exchange, promissory note, entry as advocate, transfer of shares, these are the situations when you have to affix the adhesive stamp. But the condition with adhesive stamp is that you have to cancel it. If you are not cancelling an adhesive stamp, then your entire instrument is treated as unstamped. So please be very careful whenever you are affixing any adhesive stamp. You have to just either sign it or cross it, whatsoever, but you have to cancel it. If the instrument is not being cancelled, then it will be treated as an unstamped document and instrument. And as we know, unstamped instrument is not admitted as an evidence in court of law. Now it says that whenever an instrument is executed, what is the time of stamping? If executed in India, okay, so before or at the time of execution, you are executing in India, so either get it stamped before or at the time of execution. And in case if there is government shortage in stamps of government treasury, within 4 months from the execution, that you have to take the approval of the government. But when they executed outside India, then within 3 months from after arrival to India. This is again very important question, 3 months wala issue. You have to remember whenever an instrument is executed outside India, you have to just validate it and stamp it within 3 months. Again, collector has been given power up to 1 year in genuine cases. Whatsoever reason aap nahi kar paye, aapke haath mein instrument nahi aaya, then you can just make an application to collector, show the genuine reasons and get it validated. And who's the responsibility in case of bill of exchange and promissory note? Then it should be stamped when the first person in India deals with that instrument. Deals means accepts it, presents for payment, transfers it, endorses it, whatsoever reason. If he is in any way dealing in India, then at that time it has to be stamped by the person. Now this I have just make a quick summary. Transfers by in favor of Government of India are not chargeable. Securities in depository. There is a demat account. You are having shares. After some sale or purchase, the shares are being transferred. Normally, we know on the transfer of share, we have to pay the stamp duty in the form of adhesive stamp. But in case of shares are in demat form, you don't have to pay the stamp duty. Adhesive stamp to be cancelled before else to be treated as unstamped. On one stamp paper, only one document needs to be written. Stamping to be done before or at the time of execution. This we have already discussed. Okay. So this is all about the Stamp Act. This much is more than enough because you are not going to get much question out of Stamp Act. That is the enough part. Anything else? Want to make me a summary of it or it is clear? Should I give a recap again? Or we should move to the judicial pronouncements?
Please recap.
Recap. Okay. इसमें सर कहता ये है कि this particular section says, first thing is Stamp Act is a revenue act. This is a source of revenue for the government. Okay. Section 3 is the charging section, which says that whatever things have been, instruments have been prescribed in Schedule 1, they are chargeable to the stamp duty at the rates prescribed therein. Okay. Further, it says that if any instrument has been executed in India related to any property outside India, then also it has to be stamped. If any bill of exchange, promissory note is executed outside India, but it is accepted in India, presented for payment in India, or in any way it is dealt in India, then it is liable to be stamped. But if it is being executed outside India and is not in any way dealt in India, so it is exempted. Okay. Then it's these are the, in case of government transactions, no stamp duty is payable. Okay. Then it comes with the three types of instrument: single instrument, single transaction, many instrument, party needs to decide it. Single instrument with several matters. So in that case, if the person is trying to act over smart, the government says, okay, just aggregate all the stamp duties and pay it off. Third, if it is coming within many descriptions, it is partially a mortgage deed, partially a hypothecation deed, whatsoever. So the highest amount which is applicable shall be paid as a stamp duty. Then valuation we have read. Computation in case of annuities, an important point. In case you have to pay us amount in form of annuities, that means fixed yearly payments. In such cases, if you know the period and you know the time, just calculate the time and period and pay the stamp duty. If it is indefinite period, the annuity is payable for indefinite period and not terminable with life, you have to take the amount which is payable in 20 years. In case indefinite period and terminable with life, then the amount is to be 12 years. This is very important portion. Please remember this. Then it says that if you are, there is obligation to give receipt in certain cases. In case you are receiving money above rupees 20, then, or bill of exchange, promissory note, etc. above 20, or these things you are doing above rupees 20, then you are liable to pay the receipt, but only if you are not voluntary, you are going, you are just buying something, 20 rupees banana, and you are saying that, okay, I'm going to issue you a receipt, you are liable to get a receipt. No. If the person asks, then you have to give a receipt to it, else not. For instrument with this we have already done. Adhesive stamp period, that whenever we are affixing any adhesive stamp, we have the primary duty to cancel that particular stamp. If the stamp is not cancelled, it is to be treated as an unstamped document, and any unstamped document is not a valid document, and an invalid document is not admissible in court of law. So you have to be very careful in it. In case instrument is executed in India, this is again important point. When an instrument is executed in India, you have to do the stamp duty payment at the time or before the execution. But if an instrument is executed outside India, other than bill of exchange, promissory note, do it within 3 months when it comes to India. Can be just validated by collector up to 1 year. And in case of bill of exchange and promissory note, then at the time the first person is dealing in India in any way, whether it is transferring, and whether it is accepting, whether it is making any payment, anything. In whatsoever manner the person is dealing, then it should be stamped before that occasion. So this is all about the Stamp Act. Okay. So now we will quickly come to the judicial pronouncements. Once we will do these, then we will come to the MCQs. Once we'll finish the course material. Judicial pronouncement. Judicial pronouncement, what happens? See, till now we don't have any concrete law on valuation. So obviously when there is no law on valuation, there are conflicts and the courts have to interfere in. But as we will read, most of the cases, court has been very lenient towards the valuers. They have offered very leniency. They have given very good support to the valuers, and usual cases they haven't penalized or in any way said that okay, the valuer is wrong, till the time valuer has done actual good work. So first of all, the most important landmark case was Mafatlal Industries and Mafatlal Fine Spinning Mills. I'll just give you a brief what happened in this case. Mafatlal Industries was the transferee company. Mafatlal MFIL was the transferor company. Okay, they were family owned companies, but Mafatlal Industries was registered in Gujarat High Court and MFIL was registered in Maharashtra. Had registered office in Maharashtra. Sorry, not court. They had a registered office in Gujarat, MIL, and MFIL was having registered office in Maharashtra. Now there was a scheme of amalgamation. So the scheme was approved by, since it was that both the companies had good approval, the court directed the MIL to just get a general meeting done and get the resolution passed. Everything was done. Now MFIL filed application to the Maharashtra High Court and MIL filed the application to Gujarat High Court. Now what happened that Maharashtra High Court approved the case. Okay, they granted it, no problem. But when application was made to Gujarat High Court, a director of MFIL, means the company which was registered in Maharashtra, he popped in with his objections. He said that since he was also shareholder of MIL, he said that I don't agree to it, and he raised some issues. We will just see what were the issues raised by that gentleman. Okay. So is it clear? What was the fact of the case? Mafatlal Industries, transferee company. Mafatlal Fine Spinning Mills, transferor company. Transferee was in Gujarat. Transferor was in Maharashtra. Transferee company, both they had their general meetings, passed the resolution. The MIL, which was the transferee company, had a very good overwhelming majority they had. But when the application was made, Maharashtra High Court approved it. But in time of Gujarat High Court, objection was raised by the director of MFIL. Now, what were the main issues raised by the director? First, he said, when disclosure and explanatory statement insufficient. Second, when a scheme is considered to be unfair to minority shareholders, when a meeting of class of shareholders is required, can exchange ratio approved by overwhelming majority be questioned? These were the issues raised and decided in this court. First, I'll just explain disclosures in explanatory statement. What happened that the director of MIL and the director of MFIL, they were having some internal family arrangements, because of which some shares were to be transferred by the MIL director to MFIL and MFIL director to MIL, something like that. Internal adjustments were there, and it was in state of discussions and something. So what this director of MFIL said, that the director of MIL has hidden these facts. in his explanatory statement, when he issued this notice for passing the special resolution, he should have disclosed all these factors, that there are some issues going on in the company, there is a conflict and all those things. So this was his issue. Second, he said that he considered himself to be a minority shareholders and also a class of shareholders. How? That we will just read. And fourth was the exchange ratio issue, that how can exchange ratio approved by overwhelming majority be questioned. Praveen ji थक गए सर? इसको समझ लीजिए, बुक से पढ़ेंगे ना बहुत कंफ्यूज हो जाएंगे. एक्ट इसका जो सारे जो भी आपको केसेस है ना, सारे एक जैसे लगेंगे, इसलिए थोड़ा सा थोड़ी सी और सब्र कर लीजिए, थोड़ी देर और झेल लीजिए.
नहीं मैम, प्लीज मैम, प्लीज कैरी ऑन.
Yes. So disclosure मैंने आपको बताया कि इसमें it was the court's observation was that interest should be special interest. Means he said that this is your internal family conflict. How the other shareholders are concerned? You are having your internal matters. Your shares have been transferred to this person shares is to be transferred. The general shareholders are in no way impacted. So until and unless there is a matter which affects the you can say judgment of the normal shareholders, the disclosure is not required. Now just taking up the facts, total of out of 100% shareholders, we are talking about MIL, 75.75% voted, okay, rest were absent, out of which 95.75 voted in favor of the scheme. And out of that 95.75, only 8.43 were related to Arvind Mafatlalal Group, Arvind, the director against whom this issue was raised. So they said that 95% is self 8% is held by that gentleman. He cannot just impact the entire decision of this general meeting. Further, one more observation of court was there. He said, if you have any objection, why didn't you raise when your company was filing application to the Maharashtra court? That time you didn't appear. When MIL was holding its general meeting, then also you were not present. He was himself not present and appointed a proxy to vote in this matter. So you are yourself not concerned, and now you are saying that disclosures were not made and I'm a minority person and something like that. So this was the observation of the court. Separate class of meeting, again same, they said that if you are a family, he said that we are family members and some of us have not accepted this resolution, so we have to be treated as a separate class. This was also rejected by the court. They said that this is not the reason by which you can be treated as a separate class and a separate meeting should be organized. Separate class is always where it is rights are affected in some different way. But this is a simple family arrangement, and family arrangement does not make you a special class. Then suppression of minority facts, same thing they said, that there was no adverse motive of the majority class. They are not in any way hampering your course of action. So please, you cannot be treated as a minority interest. Now this is the main issue. I have highlighted a few things in red. You have to keep that in mind. First, observation of court on valuation and exchange ratio. They said valuation of shares is technical and complex problem. This was the first observation. Second, the court quoted the decision of Gujarat High Court in Kamla Sugar Mills, stating that once the exchange ratio has been approved by a recognized firm of chartered accountants who are expert in the field and no mistake is pointed out, court will not interfere in the said suggested ratio. Now they said their objection was that whatever exchange ratio has been given by the company, we don't accept to it. Okay, they said that valuation of share is a technical and complex problem. Court cannot understand that and court cannot interfere in that. Secondly, they said the exchange ratio has been done by a reputed firm of chartered accountants. They are expert in the field and no mistake is pointed out. You say that you should get 10 shares and 10 shares. This is your suggestion. But there has been no apparent mistake by the work done by the firm. So we won't be interfering in that. Further, it has been approved by overwhelming majority. सब लोग को मंजूर है, आपको ही मंजूर नहीं है. So that is not the way out. So if there is no mistake in their work, whatever they have done, they are expert in that field and it has been approved by the majority. So we are not going to interfere in that matter. So court just denied it. It has been approved by a majority, courts will not interfere in it. So this was the main crux of this particular case. I'll just give a recap. Two companies, Mafatlal Industries, Mafatlal Fine in Company, MFIL. Mafatlal registered in Gujarat, MFIL registered in Maharashtra. Both had a amalgamation scheme. Both companies' general meeting approved it. MFIL filed application with the Maharashtra court, approved. MIL filed with Gujarat High Court, objection raised. By whom? Director of MFIL. Okay, he had some issues which were resolved by the court. First was in relation to the disclosure in explanatory statement. Court said that no, unless and until there is any matter which impacts the judgment of shareholders at large, it is not necessary to be included in the explanatory statement. Second, just by way that you are belonging to a particular family, you should be treated as a separate class. This is not valid. We won't be treating you as a separate family, separate class. Third, you are not a minority shareholders because your rights in any way is not affected by the majority. This is your discretion that you are not approving this particular resolution. So we just, since you are not accepting that resolution, you cannot be treated as a separate class. And in case of valuation, they said that it is a technical problem. And if it has been done by an expert and no mistake is pointed out, this is, please remember very specifically, in this particular, it was expert in the field, no mistake pointed out, and approved by overwhelming majority. These 3 points are very important because in all the cases we will just study. In some cases, they have said that if no fraud has been conducted by the valuer. In some cases, they say it is not against the interest of minority shareholders. In some cases, they say that if mere changing the method of the valuation changes the exchange ratio, we won't interfere in it. So small observations are there, but this is the base on which you are getting the questions. So this was the matter of MFIL and MIL. Then second case was Hindustan Lever Limited Employee Union. Again, most of the matters are on the basis of scheme of amalgamation only. Tomco and HLL were amalgamation. There was a scheme of amalgamation. Scheme was approved by Company Court of Bombay High Court, and appellants filed the SLP. Again, they said they questioned the valuation and share exchange ratio. Disclosures not made in the explanatory statement, ignoring effect of MRTP Act. Interest of employees not taken into account. Preferential allotment of shares. These were the some issues not directly related to the valuation, but these were some of the issues raised by the appellants. So in this particular case, first we will come to this slide. What was the verdict of HLL? Because this was a huge case. So specifically for the valuation, what the court observed. First, majority of shareholders, more than 95%, agreed to valuation, determined being best judge of their interest. Those who are passing the resolution, they are the person who are being affected by the resolution. Bhala bura unka ho raha hai. They know their commercial judgments, so they are the best person to decide it. Second, it is not part of judicial process to examine the entrepreneurial activities. Business आप करो, हम judiciary थोड़ी ना बताएगी कि आपको क्या business करना है. You are doing the amalgamation process. You think that it is interest of the company, so you are doing that amalgamation. It is accepted by the overwhelming majority. No one is objecting why we are bothered. Then a reference was made by the court to this particular book, Weinberg and Blank, in the book on takeover and amalgamation. Isse court came out with 8 points. That what should be the basis for determining the exchange ratio. These are the 8 points. These 8 points, if you will get a question out of HLL, you will getting out of these 8 points. What was the decision of court in HLL matter? The stock exchange factors for determining share exchange ratio. Stock exchange price of the shares of two companies before the commencement of negotiation or announcement of it. Dividends currently paid by the two companies. Relative growth prospects, cover, relative gearing, value of net asset of the two companies, voting strength in the merged enterprise, and past history of the prices. So these are the 8 pointers which were specifically pointed out by Supreme Court after referring to this particular book, which contained these 8 points. So whenever you are going to get a question out of HLL matter, It would be this or reference to this book. Now, two special observations were made. All or some methods may be used for determining exchange ratio, and book value more of talking point than a matter of substance. Means, in a way, book value method was discarded by the board. They said that it is just a matter of talking. It doesn't have any substance in deciding actually the valuation of the company. Okay. So these were the two cases in this particular slide. Now we'll be moving to second one. Now this is an interesting case, Dr. Mrs. Renuka Datla versus Solvay Pharmaceuticals Company. In this case, main issue was transfer of shares. Dr. Mrs. Renuka Datla and her husband, they were shareholders in two pharma companies. They're having some X amount. And there were some transfers for the transfer of shareholding which went into conflict, and they filed a case in the city court. Then on the insistence of city court, they came up to a, you can say, arrangements or agreement. And they placed that, okay, we have settled all the matters. And this is our draft agreement on the terms and conditions. And it was presented to the court. Court passed that to give the, passed order to give effect to the settlement. So this was the matter. Now, in this particular order, there were some terms of settlements. First was valuation to be done on the intrinsic worth of the two companies and value of 4.91%. This was the amount of shareholding in the two companies, of shares held by petitioners in the two companies. Second was valuation to be done within a period of 4 weeks. In terms of settlement, Mr. Solvay Pharma and Mr. Vasant Kumar has agreed to purchase 4.9% held by petitioners in two companies. Valuation was to be done by YM Maligam Chartered Accountants by applying standards and generally accepted methods. Valuation was done by valuer were agreed to be final and binding on all parties. And value of the shares was arrived at 8.24 CR. Means these were the terms. They agreed that, okay, whatever the terms contain that, okay, first thing is that valuation will be done in 4 weeks. Whatever valuation comes, it would be binding on both of us. These two, Solvay Pharma and Vasant Kumar, will purchase the 4.91% shareholding, and the valuation will be done of the intrinsic worth of the two companies. Now, where the problem arises? Now, when the valuation report came, they had an objection on the valuation report. They said that valuation report is not in accordance with what we had, what it should be in the prudent norms. Now, as I said, that whenever you are writing a report, you should be very, very conscious on what contents you are having. So the valuer was very smart. He mentioned everything. He said these were the features of valuation carried by the valuer, which was disclosed in his report. 3 methods were considered: asset-based, earning-based, market-based. As we know, these are the 3 approaches. Earning-based, in earning-based, capitalization of past earning was used. Usually we use the DCF method, but here what happened? Both the parties gave different projections, and their projections was very different from each other. There was a huge gap in the projections. Then he asked for an independent projection. That was not provided to him. So in that case, he said that I was not able to make my report on the basis of DCF because I was not having any projections. I insisted difference. There was huge difference. I could not rely on that. No independent party DCF valuation or projections was given to me. So I have used the capitalization of past earning method. Okay. The method of valuation stated as intrinsic to be based on the asset and earning. Now he used 2 methods. One was asset method and second was the capitalization method. Since company was in good, it was a running company. So higher weightage was given to the earning method. 2/3 was given to earning and 1/3 to the asset method, net asset value. Secondly, he said no special rights were taken into account in valuing 4.91% shares. Now, what does this mean? I think you must have read about this control premiums, discounts, control premiums. You must have gone through when you were reading the valuation methods. Have you gone through it? Control premiums and discounts and all those things? No. See, what happens is that whenever some special rights are taken, suppose some shares are being transferred to other company. So whether those shares give any right to that person, any control to that person, if yes, some premium is added. That is called as control premiums. Sometimes it happens, suppose that on market basis, you are valuing some shares. Okay. All aspects are same, but this share you have taken as your comparative figure, means the shares which was listed on a stock exchange, it is having good marketability, but your share is a private limited company. Those other factors are same, related factors, but there is a difference in marketability of the shares. So it is called as discount on marketability. Whatever amount is received, whatever amount is calculated, some amount is reduced as discount for lack of marketability. DLOC we call it as DLOM. And similarly, some control premium are added if they are imparting some control to the receiver person. So if an X amount is there, valuation comes to X, some X plus something is added. So valuation was done without adding control premium. No control premium was added. Since according to the valuer, respondent was holding more than 60% of shares of the shares of the company, that means 4.9% was a very negligible value and holds no control premium. So these were the issues, mainly premium control not added, DCF method not used, matter was value of two brands were not taken, and the matter was referred to the Supreme Court. So we have already discussed that court said that the valuer has given relevant reason for non-inclusion of said brands which are now not existing properties of DIL. Means the transfer company had two brands, but it was not now in the asset of the company, so they cannot be taken into account. Petitioner cannot be permitted to thwart the terms of the settlement by inviting the valuer or the court to go into the extraneous issues. Now, the court said that you have already entered into a settlement. This settlement has been sanctioned by the court. Now you are just trying to thwart those terms and conditions. If you wanted control premiums to be added in it, why didn't you mention there only? You must have done everything but through a advocate or a legal practitioner. And once you have not yourself incorporated these things, we are not responsible. We are not going to interfere in it. DCF also, they considered that projections was not provided. And valuer approached the question of valuation having due regard to the terms of settlement and applying the standard valuation. Since nothing was mentioned in the control premium, I've already told you. So this was the decision of the court. The court said that once you have entered into agreement, we are not going to interfere in it. Now, next matter was Brook Bond Lipton India Limited. Again, scheme of amalgamation between Brook Bond and Hindustan Lever Limited. And share meeting scheme was held, 99.5 majority, 0.02% voted against and 0.04 did not voted. 5 objectors were there, 3 were from the same family, holding just 2,980 rupees share. Okay. They also did not present, they were also not present in the meetings. They did not communicated anything with the company. And in view of what were the objections? Same, they said that since overwhelming majority has approved the amalgamation, so those who are objecting to it should be treated as a separate class. Without the consent of landlord, tenancies cannot be transferred. This is a new point which was inserted in it. They said that they refer to those Rent Acts and Tenancies Act, that if without the consent of landlord, tenancies cannot be shifted. You cannot just ask one person to leave the particular premises and go to somewhere else. Okay, so this was just their Demaki Fitur types thing. And exchange ratio has not been properly determined. Valuation report does not contains the value of assets and value of brands. So these people just voting 2,980 rupees created all the ruckus in this case. So again, the observation of court was separate class rejected. Regarding tenancies, they said that pehle transfer ho jane do, scheme approve ho jane do, then we will think whether landlord is ready or not. How can we presume that no, landlord will disagree to it? So this is not the matter. Let first the scheme be approved, then we will see what happens to that case. Exchange ratios. Now again, this point, please see. They said that if the exchange ratio has been fixed by an experienced and reputed firm of chartered accountants, then in absence of any charge of fraud against them. I said, when we were talking about Mafathlal, it was mistake. No mistake was pointed out. Here it says any charge of fraud. So any charge of fraud against them, court will not will accept such exchange ratio in the stent case there were no charges made or established. So they said that whatever exchange ratio you have objected, but it has been done by a reputed firm. They are good in, they are well experienced, have a good reputation in the market, and you have not implanted any charges of fraud against them. There is no charge of fraud. So court is not going to interfere it, because again, it has been a commercial judgment of the shareholders, because they have passed with an overwhelming majority. Value of brand, again, they said that already the transferee company is holding more valuable brands. So this is not to be taken into account. On valuation, I said the same. In absence of any charge of fraud against the valuer, the court will not accept such valuation. A mere allegation of charge is not enough. There should be full particulars for the same. So in Brook Bond case, the main element was fraud, absence of fraud. Mafathlal case, the main element was absence of mistake. Dinesh Brajlal Lakhani versus Parker Davis. Here there was again a scheme of amalgamation, but in this case, more objection was raised towards the procedure of the general meeting. Okay. Now this here you can just go through it. It is a detailed one, and you'll be able to understand that. If there was a swap ratio, the petitioner was not in agreement with the swap ratio. So at the time when the general meeting was held, he raised his hand and said that I want to propose some new exchange ratio. So chairman just discarded it. They said this is the soul, any exchange ratio is the soul of the scheme. How can at this point, when we are here to decide on the scheme of amalgamation, how can you propose to change the exchange ratio? You can just dissent it, but you cannot propose a new resolution that, okay, not this exchange ratio, this exchange ratio will be there, and you propose to pass that resolution. So it was discarded by the chairman. Further, he said that some people are showing by the method of voting, some are showing show of hands and all those things. So it is not, scrutinizers are not acting properly. So these were the objections he raised. Now in this, the court observed that the court would not interfere with the swap ratio adopted on the advice of an expert unless it was contrary to law. Now here third point came into existence. Mistake we saw, fraud we saw, now it is contrary to law. The learned judge said that it was not the case before him that the swap ratio was contrary to law, or that the experts who submitted the valuation report were not independent. Similarly, other objections regarding the procedure, meeting role of chairman and scrutineers were also dismissed. So this was the main. I have already told you regarding the proposed amendment, they said that it is beyond the scope because it is the soul of the particular scheme. Counting of votes, it was done in accordance with the articles of association of the company, so the court cannot interfere. One more point they said about the authenticated copy. They said that authenticated version is not a proper document, but the court said that no, it is a proper document, and anything, any decision, any application can be made on the basis of authenticated copy. Now, these were 3 points observed by the court. Court will not interfere merely because the valuation adopted by the method may have been improved upon had another method been adopted. Now, they also said during the course of arguments that suppose DCF has been taken, capitalization hota to zyada acha ratio aata, or they have used the market transaction method to zyada better value aata. They said no. Agar sabne agree kiya hai, method has been adopted, and sirf on the basis of this, that valuation method will be changed and some new things will be coming into picture, we won't take that particular reason for rejecting the valuation. Second, they said the court is neither a valuer nor an appellate form to reappreciate the merits of valuation. And third was, court has to ensure that the determination should not be contrary to law, unfair to the shareholders of the company which has been merged. These the pointers I have made in red. Please just go through those points. Small points are there, and on the basis of these only the questions are coming. Then GL Sultania, this is the last case. In GL Sultania, the matter was again a family arrangement between two brothers and their families, but somehow the SEBI takeover code came into picture. So there were valuations done. Both the parties got the valuation done, and the amount was huge. The people, the appellants, they were having valuation of value some like if we see the appellant submit, please see this point. Appellant submitted two valuation reports valuing rupees 408 and rupees 590 per share by two different valuers. Okay, and what the SEBI got done was firm of chartered accountants which valued the share as 43 rupees, 64.17 and 60.104. So SEBI, what they said, they appointed two more. Yes, this point. The aforesaid valuation done measures Patni and company value the share of the targets of the company 63.50 by 1 and method and 64.17 method. So these were the valuation done by SEBI in accordance with merchant bankers. Then the board appointed its own valuers to value the shares and it came across this amount. However, the petitioner was submitting amount of 408 and 590 rupees. So the SEBI accepted the valuation done by its own Patni and company to value the shares. And it was accepted by, I think 64.17 was amount was approved. And against that, an application was made to the Supreme Court that SEBI has not acted in proper manner. So observation of court, reliance was placed on the decision of, this is again a very important point, because it will they will always ask in which case reliance was placed on the decision by, of Dr. Renukam Datla versus Solvay Pharmaceuticals. So you have to remember GL Sultania case. This is a question which is coming frequently. The court could intervene if the valuation was made on a fundamentally erroneous basis or a patent mistake had been committed by the valuer, or that the valuation was vitiated by a demonstrably wrong approach or a fundamental error going to the root of the valuation. So again, the court just refused to interfere in this matter of valuation. They said that no, once everything is proper, genuine, no fraud, nothing, so we are not going to interfere in it. Whatever the valuer has done, and the SEBI, we have got various number of reports, and it says that the amount is this amount should be there. That was basically for the exit opportunity and all those things. So again, the court refused to interfere in this matter. So this was basically your judicial pronouncements. I hope judicial pronouncements are also clear, or we need to restudy anything, or we should go to MCQs.
Clear.
Clear? So in this post our tea session, we had discussed SARFACI, stamp and judicial pronouncements. Any confusions in that, or should we start the MCQs? We should start the MCQs?
Yes, ma'am. Yes.
Let us look at the stamp act first. Instrument chargeable with please tell instrument chargeable with duty as prescribed in
Schedule 1.
Correct. Single instrument with several distinct matters is called as
Multiple.
Please don't see the answers.
Multiple instrument.
Multifarious instruments, right. In case an instrument comes in description of various descriptions, double I've written, the duty chargeable will be
Highest of all duties.
correct. In case of ad valorem duty, if the instrument is executed in foreign currency, the conversion date will be taken as
Date of execution.
Date of execution.
correct. In case of annuities, if the sum payable is for indefinite period, not terminable with life, the value will be
12 years.
Payable for 20 years.
20 years. If it is terminable with life, then it would be 12 years. This I've already told. Failure to cancel the stamp will make the instrument.
Failure to cancel the stamp.
Valid.
Failure to cancel the stamp.
Unstamped and legally.
Unstamped but legal.
Unstamped but legality.
Valid and legally admissible.
नो सर, अनस्टैम्प्ड एंड लीगली इनएडमिसिबल।
Yes, yes.
अनस्टैम्प्ड ही माना जाएगा और लीगली कहीं एडमिसिबल नहीं होगा क्योंकि आपका डॉक्यूमेंट अनस्टैम्प्ड है।
When an instrument is executed outside India, it should be stamped within
3 months
Within 3 months
or
and
1 year.
हाँ, और उसको कब तक हम वैलिडेट करा सकते हैं?
1 year.
किसके थ्रू?
कलेक्टर के थ्रू।
करेक्ट। चलो आप लोग सोए नहीं।
नहीं मैम, इतना बेकार नहीं, इतना वो नहीं था कि सो जाए कोई।
नहीं सर, लॉ जो होता है ना, इट इज एक्चुअली जैसे आप वैल्यूएशन पढ़ते हैं ना तो उसमें बड़ी इंटरेस्टिंग सी चीजें होती हैं, बट लॉ तो लॉ है।
लो को मॉर्निंग में लेना चाहिए लेकिन पोस्ट लंच नहीं होना चाहिए लो का।
अब विजय सर को ये एडवाइस देंगे कि लॉ को जो है मॉर्निंग सेशन में रख दें। तो बट ये है कि सर लॉ जानना भी बहुत जरूरी है। इफ यू आर वर्किंग तो लॉ आपको पता होना चाहिए, बट आई अंडरस्टैंड बहुत बोरिंग सब्जेक्ट होता है। डॉक्यूमेंट विद इम्प्रेस्ड स्टैम्प शुड अपीयर ऑन द फेस। करेक्ट।
Obligation to be received arises if payment is under obligation.
20 रुपीज। यस, अगर आप 20 रुपीज से ऊपर के कर रहे हैं तो आपको रिसीट देना पड़ सकता है, अगर पर्सन मांगता है तो। नहीं मांगता तो कोई बात नहीं, फिर नहीं करने की जरूरत है।
How many days notice required to receive by the lender to the borrower?
60
days.
Right.
50 days, ma'am.
15 days.
15 days.
15 days.
Under the officer, security is empowered to enforce security.
Yeah, without intervention of court.
Without intervention of court.
Yes, कोर्ट की कोई इसमें इंटरवेंशन की जरूरत नहीं होती है।
RBI.
Reserve Bank of India. RBI.
And SFA.
Yes,
2 crores.
2 crores.
2 crores.
आई एम प्राउड ऑफ माई सेल्फ, सबको याद है।
Should have not incurred other than
3 years.
3 years.
3 years.
And exempt.
I don't know anything.
0.5%.
125.
Exempt from the stamp duty.
Exempt from the stamp duty.
Exempt from the stamp
Yeah,
duty.
exempt.
सरफेसी में कोई भी क्वेश्चन आया उसमें स्टैम्प ड्यूटी से रिलेटेड सब एग्जम्प्ट है।
Transfer of pending application to anyone debt PRT in case when there is application.
TRAT.
जो भी जिसकी जुरिस्डिक्शन में वो DRTs आते होंगे उन पे।
30, 45, 30 days, 45 days,
45 days.
45
days. And DRAT को देना है तो 30 days.
Yes. And application can be filed within
30 days.
30 days. Right.
The amount of compensation.
No compensation.
No compensation.
No compensation is paid.
Yes.
Correct.
Less than 1 lakh.
Less than 1 lakh. Less than 1 lakh.
Correct.
मैम ये सारे मेल करेंगे हमें?
मैं मेल कर दूंगी, कोई दिक्कत नहीं है। ये वाला क्वेश्चन पॉइंट 2 छोड़ दीजिएगा।
ये वाला डिफिकल्ट है।
The course uses the valuation sets is mathematical, complex, statistical, technical and complex.
Correct. ये सेकंड वाला छोड़ दीजिएगा, ये थोड़ा सा इसमें कुछ इशू हो गया था, मैंने थोड़ा अमाउंट इसका गलत देख दिया था, मैं इसको ठीक करके आपको भेजूंगी। चलिए थर्ड वाला देखिए।
Scheme of amalgamation.
Scheme of amalgamation.
Scheme of amalgamation.
Not intervened. It was fraudulent. B.
B. Correct.
चार्ज ऑफ फ्रॉड।
फ्रॉड करेक्ट। ब्रुक बॉन्ड में फ्रॉड था, ऐसे याद कर लो। ब्रुक बॉन्ड में फ्रॉड था, मफतलाल में मिस्टेक थी, ऐसे करके आपको याद हो जाएगा। ठीक है, तो फ्रॉड।
What was the main issue? Dr. Ms. Renuka Gupta.
ट्रांसफर ऑफ शेयर्स।
Of the following applied Dr. Ms. Renuka.
TCF method, yes.
Projections. There was no independent projection, and projections available were substantially different. A. In case of the consultant has provided
P, 2 reports, 504 and I think 498 ऐसे करके कुछ amount था।
Yeah.
2 reports थे।
The Sultani was has rejected the report of these values. The shares are valued at very high price. A. The issue is the statement is
Non-compliance of MRTP.
मेहर मफतलाल केस है।
when the disclosure is explanatory statement is considered in no.
Right. Yes. A.
Issue landlord tenancies was based in book bond.
A. In the
Book bond.
A.
In absence of any charge of fraud against the court will not accuse of the cost made by Renuka.
Brook bond. Fraud.
Brook bond.
Brook bond.
Fraud.
Book bond. Okay. Book bond. In which case
Mafatlal, correct.
They were not
दिनेश रजलाल लखानी। ठीक है, आई थिंक मैं आपको ये शेयर कर दूंगी। तो मेरे ख्याल से जितना मुझे समझ में आया, जितना आप लोग का फीडबैक मिल रहा है, मुझे लग रहा है कि कुछ तो मैंने समझा लिया आपको। बाकी ऑब्वियसली थोड़ा तो आप लोग को खुद मेहनत करनी पड़ेगी, बट अगर जितना मेरे ये कंटेंट्स हैं आप उसको भी ध्यान से पढ़ लेंगे ना, क्योंकि ये जो केस लॉज है स्पेशली मैं इसका बताऊं, मतलब आप वैसे जब मटेरियल से देखेंगे ना तो आप थोड़ा सा कंफ्यूज हो जाएंगे, क्योंकि मैं खुद जब
आपका ईमेल आईडी मिलेगा इफ वी हैव एनी क्वेरीज देन वी
या डेफिनेटली आप, मैं भी वो पीपीटी शेयर करती हूँ, उसमें मेरे फोन नंबर और ईमेल आईडी दोनों ही होगा। यू कैन जस्ट नोट इट डाउन एनी टाइम, मोस्ट वेलकम। कभी भी आपको कोई भी दिक्कत है इन माय टॉपिक्स, अदर वे ऑल्सो, अगर आपको लगता है यू वांट टू आस्क समथिंग, मोस्ट वेलकम एट एनी पॉइंट ऑफ टाइम। देखते हैं इसमें, अच्छा इस वाले में नहीं है, एक मिनट, आई जस्ट चेक इट आउट। इसी वाले में होगा। क्योंकि लॉ ऐसा सब्जेक्ट, उसको पढ़ाना बड़ा चैलेंजिंग जॉब है, साथ में लिसनर्स को आंखें खुला रखना।
Thank you, ma'am. Thank you for the details.
You have noted? Everyone has noted?
Yes, ma'am. Thank you very much.
So I think you all are okay with whatever presentations I have made. Any suggestions? Anything? Most welcome. Just drop me your mail ID so that I may forward you all the presentations. Okay. This is my WhatsApp number also. You can just communicate on that number. Okay.
Okay. Thank you, madam.
Thank you so much. Thank you.
आप क्या दिल्ली में प्रैक्टिस करते हैं क्या?
हाँ जी सर, मैं दिल्ली बेस्ड हूँ।
Okay.
But my major area is arbitration and insolvency. Insolvency की मैथ, मतलब as an RP मैं बिल्कुल भी नहीं एक्ट करती। I'm into consultancy of IBC. Because RP का काम I cannot do 24/7 job. So I'm mostly
वो तो एसोसिएशन में होता है, ऐसे नहीं होगा।
नहीं नहीं सर, एसोसिएशन की भी बात नहीं है। मेरे पास अपनी टीम भी बहुत बड़ी है, मतलब मेरी अपनी फर्म में 50 से ऊपर लोग हैं। लेकिन मतलब चार्टर्ड अकाउंटेंट्स एम्प्लॉयड हैं, 4 चार्टर्ड अकाउंटेंट्स हैं, कंपनी सेक्रेटरीज हैं, बट अल्टीमेट रिस्पॉन्सिबिलिटी आपकी होती है एज एन आपी, एंड इट इज वेरी टीडियस जॉब।
That is sure.
सो बाकी चीजें फिर सफर होती हैं। सो आई एम इनटू कंसल्टेंसी, मैं आईबीसी की कंसल्टेंसी में 100% हूँ। राइट नाउ ऑल्सो वी आर वर्किंग फॉर रेजोल्यूशन एप्लीकेंट, एक एप्लीकेशन फाइल कर रहे हैं एज अ रेजोल्यूशन एप्लीकेंट। So these are my basic areas. Not into core secretarial practice, not much into core secretarial practice.
Ma'am, where is your office?
It is in Lakshmi Nagar. One is in Lakshmi Nagar and one is in Vaishali. Vaishali is my residence also. So one is in Vaishali. ठीक है। So wish you all the best. अच्छी न्यूज जल्दी से सुनाएं आप लोग कंप्लीट करके एग्जाम्स, एंड प्लीज डू शेयर जब आप क्लियर कर लें तो। I'll be really happy.
Thank you.
Thank you.
Okay. Thank you. All the best. All the best. Bye-bye.
Thank you.
विजय जी, कंप्यूटर क्लास
अश्वनी सर, शैलेंद्र दिस साइड सर, शैलेंद्र पांडे सर, जो कल बात हुई थी आपसे सर। मेरे को ना 1 घंटा लगेगा आने में। आर यू ओके और वी कैन कीप ऑन मंडे? सर मेरा तो फ्री है, मेरा तो फॉर्म फाइल ही नहीं था पुरानी कंपनी में भी। हाँ हाँ पॉसिबल है सर, क्योंकि मैं तो वहाँ पे एज अ लीगल मैनेजर था, उनका लीगल मैटर्स वगैरह और कॉन्ट्रैक्ट्स वगैरह देखता। कंपनी में वहाँ पे सीएस का लीगल रिक्वायरमेंट नहीं था, अदर रिक्वायरमेंट था। वो तो अभी कोविड हो गया तो उसकी वजह से थोड़ा सा मेरा जॉब अनस्टेबल हो गया सर। मैं सर यही कहता कि जो पेमेंट है, मैं बहुत सोचा, वर्कआउट भी किया, तो जो